this conflict really is wearing thin across both parties. So I think there's political pressure here to bring things to a close. And on the flip side, we've seen that demand overall is really being priced down, especially into 2027 and 2028. Chinese demand has been significantly cut from where it was pre-conflict. And I think there's worries of that significant demand destruction that has happened in an acceleration of, say, electrification, of alternative power sources, of being able to turn down power usage and better maximize what countries have. So I think all of that's playing out, and it's highly unlikely that we get back to the levels of oil that we had before, which overall is constructive for the market as we start to head into earnings season.
Matt, this continued sell-off that we're seeing in Kospi, and Kospi is, dominated by two companies, both on the memory side, but of course, a lot more as well. But those are the two companies which make up about 60% weight there. Is it telling you something about the memory super cycle? Any thoughts there? Because that's got implication. If this is now the first signal that it's starting to deflate, and it'll deflate if things further up the value chain start to look a little shaky. Is that what this is indicative of, the 5% sell-off this morning, Kospi? 25% of the highs, as Mangalam said.
Yeah, so I think, Prashant, what's really driving this is positioning, not fundamental. So I was in Europe last week, and this was a common question that I got from a lot of clients. And what I continue to emphasize is that positioning across the entire semiconductor complex became incredibly extended heading into this. And what we're seeing unfold right now is a reset of positioning. So even though you see markets like the Kospi down 25%, you see certain stocks in the US, Microns or SanDisks or other memory players down 25+% from their all-time highs. These are still crowded positions overall. We still haven't even come back to 100 or 200-day moving averages. So there's still, I think, there's more positioning unwind that can take place, but this is not at all an indictment of fundamentals. And I'm hoping when we get Taiwan semi earnings at the end of this week, that'll be a reaffirmation of the fundamentals of the trade, and perhaps it'll help some of these stocks start to find a bottom so they can at least consolidate sideways and maybe regain some upward momentum as we head into the end of the summer.
All right. Hi, Matt. Morning. Good to see you. And as always, you have been fairly positive on the Indian markets, but in phases, you have been holding on to some money. What do you make of the recent outperformance? Obviously, for the last 18 to 24 months, Indian markets have been underperformers, but at least now the flows are turning around. One would say that the Kospi as well is, you're seeing some profit taking there, but the FIs were sellers as it is out there. From an India market perspective, it's good to see we have a positive FI flow number for now. So in this sort of a scenario, do you believe the pieces are coming together and India can outperform, provided crude oil prices don't run away?
Yeah, I think that last point is critical, Nigel. It's that crude oil prices don't run away. But this is exactly what we've been talking about for the past few weeks, that, when investors are looking to diversify their portfolios from being very overweight growth in semiconductors, where do you go to help decorrelate your portfolios, especially when the correlation between stocks and bonds is as positive as it is right now? You have to look to other geographies. You have to look to other sectors. And I think India fits the bill. Its correlation to the U.S. market, MSCI India versus MSCI U.S. is 0.1 or less than that over the past year. The drivers and companies in the Indian market are very, very different from those of the U.S. and the rest of the emerging market complex. So India fits very nicely as a value play where fundamentals, I think, remain positive, assuming oil prices don't run away. And it's cheapened well enough that I think investors should be comfortable with valuations where they are. So India, along with certain countries in Europe, like the United Kingdom, which are more old economy type stocks, along with Japan, those are kind of the three bars of the stool that I look at for looking at international diversification for portfolios right now.
All right, Matt, very quickly before we let you go, what are the recent additions on the list? You have liked various stocks, Mahindra and Mahindra, I think, in the past, the banking names, Interglobe Aviation. Anything new you've picked up?
Yeah, so obviously we've talked about financials and ICICI being a name that I expect to outperform. It has on the rebound. DLF has been a name that I've been looking at in terms of real asset plays in India that I think continue to look good. That name has been an outperformer. And I also think NTPC looks really interesting to buy on the dip that it has right now. fundamentals are strong. Its diversification across the power complex is interesting, and you're going to continue, I think, to see earnings momentum there, and it's cheap. So that's a name that I like a lot right now.
Okay, all right, Matt, we'll leave it there. Thank you very much for joining us. Good speaking with you. It's always a pleasure. Just quickly running you through what's lined up here on the program. 9 o'clock, we have the management of Radico Khaitan. So you'll hear from, Abhishek Khaitan on the business right now. Magic Moment sales have gone up quite a bit. 9:20, Vikas Khemani will be our market master of the day. We'll talk sectors, themes, L&T Finance on their earnings. We'll also chat with Sid Swaminathan of Geo BlackRock Asset Management at 9:40. They've got a new offering. The focus is on insurance space and what's expected from first quarter earnings. We'll take the conversation forward with Manas Agarwal of Bernstein towards the end of the program. In Indianomics Special, Lata speaks with Neelkanth Misra following, he's of course now India's Executive Director of the World Bank. That's a new appointment coming in right there.
Time to slip into a quick break. We've got a lot of stock-specific action for you that we'll track in our special Top 10 segment. For the time being, I give you a sneak peek into the list. LTM, L&T Finance, Just Dial, Aventil, Amber Enterprises, they'll all be tracking to positive news flow. Add to the list, JSW Energy. On the flip side, you have Avenue Supermarts, NMDC, Jindal Steel, and Keystone Realties that will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
ए दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया
Welcome back. Well, our research team is standing by with CNBC TV18's top stocks that you need to track for today. And let's start it off with Mangalam on Avenue Supermarts. Mangalam, how are the numbers?
The numbers are soft as expected. If you look at, the company's first quarter update that came by, the stock sold off thereafter as well. 15% revenue growth is what they've reported. Gross margins 15.8%. The EBITDA margins fairly steady at around 8%. So in line with muted expectations, the net profit also grew by about 11.5%. The concern here is not the top line growth, but what the management has said about the internals. 2 years and older DMart stores grew by 5.5% versus 7.1%. So that growth rate has come off. Secondly, in large metros, the management says growth in older stores, which have a higher revenue per square foot, has actually become flat this quarter. So which perhaps tells you about incremental growth challenges, and at the same time, maybe there could be a case for incremental growth being taken away by Q-commerce in large metros at least. They've discontinued DMart-ready operations in 7 cities, now focusing only on large towns, operating in 11 cities. They've added 3 stores during the quarter. And add to all of this, they've approved issuance of 1,000 crore worth debentures as well on a private placement basis. So whether they use that to expand their stores and that could reflect in further growth or not is something that the street will be looking at. So by and large, The numbers are steady to the muted expectations. But again, the stock trades at expensive valuations, which is why maybe the street will now look at it at resetting the multiples at least.
All right, Mangalam, so we'll keep an eye out on that name. Well, let's hop across to Vinny, though. She's here to tell us about LTM. Vinny, numbers pretty okay, but management commentary extremely optimistic.
Absolutely, and that's why we'll expect the stock to see some green on the screen. Now, firstly, revenue in line. Margins that have beat expectations coming in at 15.5%. This is the EBIT margin we're talking about. CC growth coming in at revenue growth at 0.3%. Estimates was also there, so that's all in line. Profits of the company seeing a 6% growth. All of this is sequentially. Now, growth mainly this time was led by the financial service, tech and tech services as well, which grew 3.2% as well as 3.4% respectively. Consumer side saw a bit of a decline, muted performance there, 0.7% decline there. Commentary, that's exciting, right? Growth acceleration for Q2, mainly driven by continued momentum in North America is what the company is highlighting. Delayed deals to start ramping up in Q2 as well. So positive commentary for Q2. FY27 growth is expected to be better than FY26. AI revenue, that is also seeing a good performance and good growth. That is coming at 12% of the total contribution as well. $150 million is what the AI revenue stands at for this quarter. And good commentary overall will keep the stock in the green.
All right. Thanks very much for that, Winnie. So LTIMindtree and IT perhaps continues to be in focus. TCS did it for the sector last Friday. Let's see what LTIMindtree does. The L&T Finance stock should also be in focus. They reported good set of numbers. And Anya is here with details. And Anya, take it away.
Well, yes, they reported good set of numbers. It was a strong Q1 if you see. If you look at the numbers, PAT was up 29% year-on-year and 12% sequentially. Now, if you look at the earlier business update also, they had already indicated healthy momentum with AUM up 27% and retail disbursements growing 36%. Now, if you look at the key ratios, ROE improved to 2.48% and ROE to 12.71%, though margins soften slightly, but stronger fee income and improving credit costs, lower operating costs, they helped in profitability. Now, if you look at the asset quality, asset quality trends were also encouraging, particularly in the two-wheeler segment where AI-led underwriting is showing benefits. Here all monsoon risk and slippages remain key monitorable. So we need to watch out for that. Now coming to brokerages, now Nomura retained a buy rating with 370 target price, citing improving asset quality and an earnings upgrade. Now JP Morgan here maintains a neutral rating with a target price of 320, acknowledging L&T Finance strong execution, but believes rich valuations following the recent sharp rally leave limited scope for further re-rating. So monsoon trends, slippages and the insurance reforms will be the key monitorable going forward for L&T Finance.
Right, Ananya, thanks a lot for that. Vinny, Just Dial, management change and good numbers.
Absolutely. 2 points and both of them on the positive side. Good quarter for the company, 6% revenue growth on a sequential basis. Year-on-year basis, also the company has seen a growth of around 9 to 10% for their versus last year, same time. Revenue growth on a year-on-year basis, this is the 8th consecutive quarter that the management is actually seeing this close to double-digit growth that they managed. Margins lower on a sequential basis, mainly due to higher employee costs that once are coming in as well as other expenses. So margins came in at 26.7%, which is down around 23 basis point YOY. So that is something that is a bit muted. But apart from that, good numbers, overall strong revenue growth that the company has seen. Let's talk about the management change that has come in as well. VSS Money, who was the MD, founder, CEO of the company for 33 years, is now stepping down. In his place, we have Dinkar, who will be taking charge as a designated CEO now. And from 1st of August, he'll take full charge. He's ex-Flipkart, wholesale strategy head, Bain, Accenture, all of that comes in his background as well. So that'll be interesting to watch out for, as well as Dinesh Taluja, who will be appointed as the CFO of the company with effect from 11th of July is when he's taken charge as the CFO. So 2 changes coming in here. Overall, numbers have been good. Active listings for the company have been good. Unique visitors have increased as well. So positive Q1 numbers as well as the management change will keep the stock in the green.
Got it. All right. Thanks a lot for that, Vinny. Let's go across to Ria. She's here to tell us about Aventel that came out with a set of numbers. Morning, Ria.
Well, good morning. Good set of numbers seen for Aventil in this quarter. The revenue has gone up by nearly 36% on a year-on-year basis to nearly 70 crores this time around. EBITDA has also seen a very strong expansion of 65% to nearly 17 crores, with the margins also seeing a very healthy expansion, now sitting at nearly 24.8% for the quarter. The net profit has also seen an expansion of nearly 68%. So overall, good set of numbers. If you look at the segmental performance as well of the company, the communication and signal processing products revenue, which makes up nearly the entirety of the revenue of the company, that has seen a strong growth of nearly 35%. The EBIT margins of the segment have also gone up to nearly 15.5% this time around versus nearly 13% compared to Q1 of last year. The other segment that the company operates in, which is the healthcare segment, although that makes up less than 1% of the revenue, that still continues to make losses. But overall, good set of numbers for the company. And going ahead, we will be watching out for any commentary from the management on the overall order book of the company, as well as what the plans are for the healthcare segment. But today, the stock expected to open in the green on the back of the strong numbers.
Okay, all right. Thanks a lot for that, Ria. Well, I'm looking at two metal companies. One is NMDC. Could open reddish. There was a price cut of around 250 rupees for lumps as well as 150 rupees for fines. The new price range as well should come up for you on the screen. On lumps, it's at around 5,450, and on fines, it's around 4,700 rupees per ton. You'll be asking, why is the price cut? Well, obvious reason. One is that there's a monsoon that's approaching, and normally activity reduces. So if steel production is not going to be ramping up that much, then obviously demand is a little less, and that's why we see a seasonal factor that plays out. Also, international prices have corrected by around $5 to $7 per ton or thereabouts. So those are the two factors. The reason I'm saying reddish and not very, very red is because it's not a big surprise. You know, they send out the letters on Friday early morning, and that's why some part of the street was bracing for this. But the official announcement came in post-market hours. So that's why maybe a bit of red on NMDC, because this is the first price cut that we've seen in 2026 so far. Next, Jindal Steel. Out there as well, going with a bit of red out there, because Mr. Gautam Malhotra, the CEO, has resigned, and his last working day will be the 15th of July 2026. Remember, he had joined just in October 2025, so that consistent churn at the top is something that's making investors a little bit uncomfortable. We'll have to get some rationale for this, but that churn is something that the street doesn't like too much. The stock has been a little bit under pressure because long prices have been under pressure, but this will be a bit of a negative for today's session as well. That said, let's wind down the top 10 segment with Upasana, who's joining to tell us about some stocks that are in the news. Upasana?
Well, first up, let me start with Amber Enterprises. CNBC TV18 first reported that Amber Enterprises plan to list electronics arm in December 2024. So firstly, let me start with the main news now. Now, the board has approved the conversion of its electronics manufacturing subsidiary, that is ILJIN Electronics, from private to a public limited entity. Now, board has also approved evaluation of multiple fundraising avenues, including IPO, right issue, preferential allotment, debt, and other permissible instruments to fund its future expansion plans. The board has also approved 2:1 stock split and also approved a bonus issue in the ratio of 25:1. Now, going forward, company has indicated that all the electronics related acquisitions and JV has now been consolidated under this subsidiary. Now, moving on to JSW Energy, the company has secured orders aggregating to 443 crores from Budanda Renewable Energy for the supply of BESS and PCS solution. And lastly, coming to Keystone Realtors Q1 update, overall, if we see collection, there is a single-digit growth of just about 4% on year-on-year basis, and pre-sales is down nearly about 42% on year-on-year basis. Company says it has a strong launch pipeline plan in the upcoming quarters. And if I talk about Q1 overall, it has added 2 projects with 1.9 million square feet, and the estimated GDV of this is 713 crore. So all in all these 3 stocks will remain on our radar today.
All right, we take that point. Thanks a lot, Upasana, for that. So that was a list of all the top stocks that we're tracking this morning. In case you missed it, a quick recap. Stocks with positive news flow. We have LTM, L&T Finance, Just Style, Avantel, Amber Enterprises, JSW Energy. Our stocks with negative news flow, we have Avenue Supermarts, NMDC, Jindal Steel, and Keystone Realtors. With that, let's go across to Manisha for a roundup of all the action coming in from the commodities market overnight, over the weekend. A big spike in crude prices, Manisha.
Well, absolutely, yes. And we are looking at that in prices in Asian markets right now with 4% of gains and inching very close to that $80 a barrel mark. The prices have gained nearly 10% on a week-on-week basis, and this is as U.S.-Iran exchange fresh missile strikes over the weekend. Strait of Hormuz, whether it is open or not, is something that we will understand in the next few days. But if you look at the overall traffic, that seems to have definitely gone down quite considerably from nearly 28 to 35 ships per day in the last 15 days. It has come down to a single digit is what we understand in the last 24 hours. And that is going to impact the prices in sense of geopolitics and a war premium as well. We also are looking at the dollar index, which has climbed above 101, and that seems to be impacting most of the metal prices. So you have gold, which is trading down a percentage point, back below 4,100. Silver is fallen back below $60 an ounce. The higher crude oil prices fuel inflation-led rate hikes, and that is what is bothering this space. The base metal prices also have seen a decline because of the strength in US dollar. So you have copper, which is trading 1% down, aluminum, zinc trading 0.25% to 0.5% on the weaker side as well.
All right, Manisha, thanks very much for that.
Just wanted to wish Manisha as well over the weekend. It was Manisha's birthday. So Manisha, wishing you a very happy birthday. And all three of us gentlemen are looking forward to celebrating with you once you reach the studios. So we'll stay tuned for that.
And this time around, we'll celebrate with not oil, and but a lot of butter on the cake, I guess.
Oil on cake?
Yeah, because commodities, right? We just wanted to... gold and silver would be too much to ask for, actually.
All right, well, we'll take a break. Manisha, happy birthday, and see you in office a little later. Jonathan Barad is going to be with us of ETO Markets. We'll discuss the ongoing tensions in West Asia, the impact of oil prices. Stay tuned, coming up.
Writing. SBI Funds Management Limited launches an initial public offer of equity shares of face value of ₹1 each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central,
providing sharp market intelligence for wealth creation with a commitment to doing it right.
Okay, welcome back. GIFT Nifty will come up on your screen. Are we still down 190? The first look at 8 o'clock was 190 lower. It's not 190, it's 215. So, as we approach market open, 25 minutes out, the pre-open, we've slipped a little bit more. Jonathan Barad is with us to tell us what to make of all of this. Jonathan, great to have you with us here. He's Chief Investment Officer at ETO Markets. Somebody needs to sit on the coastline somewhere there, on the Omanian side or the Iranian side with a pair of binoculars and tell us if the strait is open or not. Ships are passing or not, because US says it's open, Iran says it's shut. What's happening?
Look, I think that's a very fair comment. Someone that's not between the two and gives us some a good idea as to what is actually happening. We continue to get positive rhetoric from the US that everything's all right, but Iran seems to be sitting there, sitting tight and saying they're under control. I do think at the moment that Iran has the upper hand. They've showed us where they're at and what they want. And I think it's really up to the US to try and choose what they do and how they do it. And that, to me, will then hopefully give us some resolution down the track.
So do we know if ship traffic is hit?
We do know. We have seen that the traffic has been hit. One particular tank cargo vessel has been hit. And then that sort of prompted the US to sort of obviously let bombs.
Jonathan, what I meant is, has traffic stopped, basically? Sorry, we know the tank, the drones hitting, etc. But has traffic stopped, or is it still on?
It's according to the US, it is going. According to Iran, it's definitely stopped. So I think I'd go back to your point to say, well, look, traffic has stopped. I think one leverage we'll get that if the US decides to go with the tanker or with the ship through the straits, and we'll see what repercussions we'll have from that.
Right.
So I think we'll see what the US do.
So we're none the wiser about whether it's on or not. Take that point. But what we know for sure is the traded rate on, in the markets. It's spiked, but the spike hasn't been as much as it was earlier. So I just wanted your call on, where do you see prices headed in this uncertainty?
Look, I think at the immediate time, I think prices will go up because we're uncertain. I think that if we get through US Brent price through that 80, then there is a chance that we go up to 85 and 87. That is the resistance at the moment. I think the market's sitting there saying, well, we don't know what's happening. As a result of that, we'll buy crude because we don't know whether the ships are getting through or not. And mind you, the ships need to get through the tankers, not the cargoes. Okay, so to me, that's more of an issue. So we need tankers to go through. We need the Iran to start pumping oil and getting that to the market. And that's what we're not seeing.
Got it. Hi, Jonathan. Good to see you in. Let's talk about the other asset class, that is gold. It went splendidly all the way from $2,000 to around $5,500. From there, it's pulled back and it's showing signs of stabilizing at around 4,100 odd. What's your view on gold? Do you think it's providing a good entry opportunity? I think a few months ago when it reached this level of around 4,000, you had said, I think, that you would be a little bit bullish both on gold and silver. So how are you viewing these assets right now, and what are the levels you're looking at that?
I'm still looking at both of those as being bullish. We are still long both. We have a higher weighting in silver, okay? When I look at the technical side, I'm very comfortable with why it's trading in this consolidation. The fundamental side's a little bit of a stop at the moment because we're seeing a change in interest rate environments in the States. Obviously, if you see rates going higher, that's not that bullish for gold. And as a result of what we're happening now, we might see more consolidation. If, in fact, we see interest rates in the States remaining higher for longer, that's not that positive. But I still think we're going through a consolidation phase because once this is over, then you'll find the Fed will go onto its dovish tone, which we saw recently. So if anything there, I think the trades are still there. I still like them. We're still in a consolidation phase until we can get the rhetoric together that says the US-Iranian war is over.
All right. And between the two, you're more bullish on silver, right?
Very much so, yep.
And the level on silver?
Silver from here, I think it can retrace back to its highs. Silver, as we know, has a good fundamental base, particularly out of China. Remember, Chinese imports of silver at record levels. That is not going to change. They have a long-term feel for consumption of silver, particularly to meet the EV space, the solar panel space. That is not going to change. So when we see silver on a consolidation phase, which we are, it only means that you can actually buy it into these levels. I think the China EV green energy space is still there, regardless of the dip we're currently seeing.
The high, just to complete that point, Jonathan, the high on silver is 120 this year, right? So it's basically you're saying 100% upside from here on silver this year.
I would like to say 100%, absolutely. We'll have to see what happens in the States. But when I look at the fundamentals, when I look at the current macros and fundamentals for silver, I do see it challenging higher prices and even challenging that high of that 120 again.
That's it. That is, that is something if it pans out, right? I mean, 100% from here. Yeah, I mean, why not? But worth studying, as you say, a little bit more, and those who are so inclined can do it. But thanks for pointing us to that idea. Thank you very much, Jonathan, for joining us. Good speaking with you here on CNBC TV 18. Mangalam.
Right, Jonathan, thank you. With that, we'll welcome Dharmesh Kant, Head of Research at Chola Securities. Dharmesh, of the results that came over the weekend, we did have DMart that stood out. 15% revenue growth, margins pretty steady. It wasn't, going off to the races. The expectations were steady. The stock has seen a decline. What do you make of the reported numbers? Soft in line with expectations? And your call on the stock?
Yeah, good morning, Mangalam. Thanks for having me for the show. But definitely the numbers are soft as far as expectations are concerned. And if you see this in light of what the numbers they delivered in Q4, there was a better promise to the growth trajectory. I think this is a realistic number which they have reported. Same-store sales growth is, on the downtrend, and it's likely to be the case going forward into the future. They have transitioned to home delivery as well. So quick commerce is the vertical which they have also started. Let's see how that turns out. But overall, going by the way things are panning out, I think 15-16% kind of a growth on an annualized basis, a blended growth, is what is doable for them. And in light of that, with stable margins, 50 basis point here and there may still happen. The valuations are still pretty on a upward side. So it's a pretty steep valuation it's standing on, even if you look 1 year forward. So I think eventually a time correction will play out. The stock may not correct that much, and the valuations has to fall below 30 times 1 year forward earnings multiple. So that is the kind of decline I see. But it's more to do with time correction rather than a price correction.
Got it. Okay. All right. Hi, Dharmesh. Good morning. Good to see you, Ben. Dharmesh, let's talk about a couple of other stocks then. LTI Mindtree or LTM. The numbers look pretty okay. Nothing too great out there. However, the management commentary is sounding extremely optimistic. And if you look at the growth that they're guiding for, it could be one of the best that we'll see from the larger cap names. What's your view on the stock? And do you believe the management can go ahead and do that sort of numbers they're talking about? Better growth than FY26 will be a bit of a challenge, though you have the rupee depreciation that could support them. Your take?
Very good morning to you, Nigel. Well, definitely, I mean, the commentary was far optimistic than the numbers itself. If you look at last 5 quarters, sequential growth on the revenue in dollar terms, it has come down from 2% to 0.1% this quarter. Going forward, management expects that this is the bottom of the growth trajectory, and from here things may pick up. But to my mind, I mean, entire technology space will more be a tactical and buy depending on a couple of quarters kind of a visibility. Because the deal wins, even if it is there, the time period is getting shortened to 1 or 2 quarters rather than a multi-year kind of a deal will which annuity blend to it. So that's going away. And I do believe, I mean, if they are seeing the next 1 year pipeline and based on that, they are guiding for a better growth trajectory than FY26. The stock has already corrected 35 to 40% from the previous size. So there's a scope with 19 or 20 times 1 year forward PE multiple. It can still garner some traction, 5-10%. So we are taking IT as more of a tactical buys based on opportunities which may come, but the disruption is far less. And the trending kind of a sustainable growth trajectory looks difficult to our mind. So tactically, yeah, it may do well today. And 1 or 2 days, currency tailwind is already playing. But for a fundamental couple of years kind of a buy position, we are not in that camp.
Okay, well, Dharmesh, morning. L&T Finance, any thoughts? Strong numbers.
Yeah, definitely, yes, Prashant. I mean, it was very strong numbers from them, 30% kind of a PAT growth. And all even the banks, if you see, like Indian Bank or Bank of Maharashtra, they have reported very good set of numbers out there. So financials, this time around, they are delivering, and our expectation is 25 to 30% kind of a PAT growth will be there. But we are more focused from NBFC to banks per se. And the reason being why I say so is, if you look at the numbers of, say, the Indian Bank, the advances growth was around 14%, but the net interest income growth was around 17-18%. And that is what was hurting them last financial year. NII growth was not happening because of the interest down cycle playing out, and there the liabilities get priced, have a lag effect, whereas assets are priced much earlier. So that's the reason why this growth was missing. So here on other income and net interest income growth is going to boost the profitability of all the banks. And the best pick out there, I still go by Bank of India on the buy side on the public sector banking space, Axis and IndusInd on the private sector banking space. NBFCs, though all of them will report very good set of numbers, be it L&T Finance or even Bajaj Finance and the others in the league are likely to report good set of numbers with profitability in excess of 25% and AUM growth of 22 to 25%. It will surprise you on the upside of the financial company. We are liking housing finance in that space, and other housing finance is the topic out there.
By the way, I think there is Morgan, which has come out with a note on housing finance companies this morning, and they're highlighting, some of the private home finance companies which did very well. I mean, names like Aptus, I think Home First finds a mention, and a few others, which listed a few years ago and did very, very well initially. I mean, the runs were pretty spectacular. And then there were, all these, because they all have private equity funds, etc., and there was constant overhang of selling, which kept coming in. But that Morgan note, we'll highlight it with some more details a little later. But Dharmesh, take your point there. Your pick, sorry, is what in the HFC space?
Other housing finance.
Other housing finance, yeah. Okay, got it. Well, we'll take a quick break. We're back with some technical trades. Sudarshan Sukhani and Mitesh Thakkar joining in on the other side. Stay tuned.
ए दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क, और सर आपकी ब्लैक कॉफी। चॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई, और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया
Welcome back. You're watching us here on Bazaar Morning Call. The Gift Nifty indicating a lower start to trade near 198 points, 200 points lower as we speak. Opens right near the support zone for the frontline index. Let's see where we go from here. But a bunch of portfolio changes announced by Kotak Institutional Equities model portfolio. And why is it that the brokerage believes that the Nifty 50 has still room to go all the way up to 26,500? Hormaz joins in with the details.
There's some interesting notes coming in from both Goldman Sachs and Kotak Institutional Equities. I'll start off with Goldman Sachs first up, where they are saying that they still see room for the Nifty to see a recovery towards their June 2027 target of 26,500, which is higher than the current record highs for the Nifty, which is at 26,370. And that's around about a 10% upside that they see for the index from current levels after that 9% drawdown that they saw from the first half of the year. And they also say that the ultralight positioning of the foreign investors leaves ample room for the flows to return to the Indian markets. That's one of the reasons why they see a recovery on the index. But they also go on to caution that the recent flare-up in West Asia could also fuel some near-term volatility in the markets. Now, why have they turned constructive? If you remember, Goldman Sachs had downgraded India in the month of March and had also cut its target on the Nifty. They say that lower commodity prices, a stable currency, resilient domestic growth, healthy earnings expectations in the second quarter, and a potential recovery in select domestic pockets is something that is driving this constructive stance for them. Now, they have upgraded utilities to an overweight. They continue to remain overweight on banks, energy, refiners, and the technology, media, and telecommunications theme, the TMT. And they also remain underweight on exporters and downstream oil, and have downgraded select materials to an underweight stance. And they have identified 15 large cap stocks who could benefit from their key themes and catalysts in the second half of the year, which include the likes of Reliance Industries, HDFC Bank, Kotak Mahindra Bank, 3 Adani Group names, which is Adani Enterprises, Power and Green Energy, PSU names like NTPC, HAL, Mazgaon Dock and Power Grid, along with some other names like Eternal, Interglobe Aviation, HDFC Life, Indian Hotels, and Make My Trip, which is of course not listed in India. But that was Goldman Sachs. Now, Kotak Institutional Equities has made some changes to its model portfolio as well. They've included SBI Life with a weightage of 150 bips. An interesting inclusion is TCS with a weightage of 150 bips as well. And they have also raised their weightage on L&T by 100 bips to 400 basis points. Now, why have they included TCS? They've also gone on to clarify that this inclusion of TCS is not an endorsement of the IT sector in any form. They continue to remain underweight on that. The only reason is that there is discomfort on the extreme underweight that they have on the sector, and of course the valuation comfort that the fall has provided. Of course, to balance these new inclusions, they have moved their investments in ICICI Prudential Life to the mid-cap portfolio. They have also removed Mankind Pharma from the portfolio. The positions on DLF have been trimmed from 150 bips to 30 bips, and from GMR Airports, which is 160 bips, now down to 70. They have also included CRISIL and DCB Bank in their mid-cap portfolio, and Dixon, Dr. Lal and Info Edge have been removed from the portfolio after this recent outperformance that they have had.
Yeah, that TCS comment is interesting, almost, isn't it? I mean, there is inclusion into the model portfolio. I mean, we like it, but we don't really like it, right?
Including it, yes and a no at the same time.
Yeah. Okay. No, basically saying now we're not changing our fundamental view, but some exposure to it because of the huge underperformance we've seen. Thanks very much. That's Goldman and Kotak with some changes in terms of their view on model portfolio, etc. At the bottom of the screen, monsoon likely to gain. Monsoons have disappeared, at least from Mumbai skies, over the last, I think about 1.5 weeks. And Met now saying that rainfall activity after 20th of July, unlikely to be strong enough to make up for the current rainfall deficit. So it'll pick up from the 20th, but not in a significant and strong enough way, is what the Met is telling us. And cumulative rainfall deficit for the season, that is from the 1st of June, and I'm assuming this is data till yesterday, is about 18% or so. And, of course, this is not, Mumbai or one state specific. This is all India at this point. There are no low pressure areas resulting in weak rainfall activity, and some more data has become at least where we are, which is Mumbai, has become pretty hot once again after a pretty good spell we had for about 2 weeks or so.
We had the Western Met Department join us on the channel, and this was when, the rains were pretty heavy. They did say that from the 8th to about 15th, we won't get much rain, and it revives in Mumbai at least on the 15th, but the National telling you that maybe from July 20th for
Absolutely.
the nation.
Well, we're going to take a quick commercial break, but there's an very important variable which will keep coming and going. It'll come into focus, going to go out, but you need the rains. You need strong rainfall activity across in a well-distributed way in that sense. We're back with the pre-open rates. The management of Radico Khaitan joins in. They've achieved a 1 million case sale rate per month for their Magic Moments brand. Abhishek Khaitan joins us on the other side. 5 minutes to go for the pre-open.
Michigan.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC TV 18 Motilal Oswal studio. Well, let's go across to an exclusive conversation that I had with the management of Shyam Metallics, the chairman and MD, Mr. Brij Bhushan Agarwal. I visited their Kolkata office, and let's listen into a slice of that conversation. He spoke about a whole host of issues, but let's listen in to his growth strategy as well as the expectations for East India, since now you have the state and the central governments that are aligned. Well, Mr. Agarwal, in the last 15 years, there have been various small steel companies that came and went because the Indian steel cycle has gone through a lot of pain in various phases. What makes Shyam Metallics stand out in this sort of environment?
See, I'd been always very vocal on 2-3 major factors, if you see all my interviews and all. Number one, we had been extremely very prudent and very conservative on our approach, It doesn't mean like we don't grow or we don't want to grow. ROC, if you see, ROE, if you see, debt, we had been always a, zero debt companies. And apart from that, the capital allocation policy, the strategy, cost. So these are the factors. We always see that we have to be one of the lowest cost or most effective, capital allocation, so that, whatever return we had been promising, we should be able to over-deliver. And I think we have already proved in last 4 years after the IPO also, and if you see from inception also, when we had been always growing more than 20% CAGR.
Okay. And what about the return ratios that you mentioned? What is the ROE, ROC targets that you like to maintain from here on?
We generally maintain, close to 17, 18% to 20%.
Okay.
That is the general target, what we see.
Got it. Final question before we let you go. State has got a new government out here. And now there's an alignment between the state as well as the central government. What are your expectations from this new government, and how do you see the state as well as the sector progress from here on?
First of all, we all know that, this eastern part was suffering for almost more than 50 years. We had never seen an alignment of a central government or the state government. Now, with both the alignments, since we have the central government in the state, we'll see a lot of development will happen in the Eastern India. And being an Eastern India company, being an Eastern India company, the kind of result we had been delivering, we will be definitely doing the better, results, because we'll see a lot of development coming up in Eastern India, across, all the sectors, because so much infrastructure is here, so much facility, talent, and resources are here. So I'm very optimistic, This is really going to change a lot of better numbers, and we'll see a good growth in the company.
Well, then you can catch a longer conversation with the management of Shyam Metallics on Chartbusters at 10:30 a.m. and all through the day on CNBC TV 18. Okay, well, we're approaching market opening then, so let's get in Mr. Sudarshan Sukhani, who's joining us on the show, as well as Mitesh Thakkar. Good morning, gentlemen, and good to see you all in. Well, over the weekend, you have a bit of a skirmish between the United States as well as Iran. And there's uncertainty now that's crept back in. Crude oil prices have spiked up as well. And because of that, the GIFT Nifty is suggesting we pull back 200 and around 220 points out. Mitesh, you go first. Tell us where does support come in at? And would you look to buy into this dip?
So, I think, good morning. Last week when kind of declined to about 23,800, and I was worried about a breakdown, but we kind of managed to hold on to that support. The view was that we're back into the range. So it was never, looking at a fresh high or an immediately market getting into a pattern of higher tops and higher lows. I think we're still in that consolidation broadly, 24,400 to about 23,800, give and take a few points. And the Nifty might again be pushed towards the lower end of the range. And if that holds, I think then, the sideways consolidation will continue. In case we start closing below that, if there's some more bad news on that front, then I think we might see a slight kind of a dip.
Right. Sudarshan, your call on the frontline index and individual stocks?
Yeah, good morning. My call is very different. What the market is doing. Every time we used to hear about Hormuz closing, we would open 400, 500 points lower. Slowly, the market is forgetting about that event. We are opening 200 points lower, and the chances are that when the actual open comes about, it will be less than that. So it's a matter of time before we forget about this geographical event. The markets are building a very strong base. I'm all in favor of what Goldman Sachs said. We'll see 26,500 plus in the next 1 year. This is a time when you want to buy every dip. So today, Once the market settles down, wherever it settles down, it's a buying opportunity for short-term traders also. That's the Nifty. Now, you wanted my stocks. Indian Hotels is a buy. We can look for a very sharp decline because then suddenly, who's going to live in hotels if Hormuz is closed? That's the time we want to go and buy it. So Indian Hotels is a buy with a stop under 735. ICICI Prudential is a buy with a stop under 500. The stock has done nothing for 5 years and is priming for a very big move. Oro Pharma is a sell with a stop above 1600. Swiggy is a sell with a stop above 280. But the buys I'm suggesting and the point for the Nifty is if you have a longer time frame, you'll be a bigger winner.
All right. Buy, and then you have Indian Hotels and Swiggy as a call. Mitesh, your stock calls?
I have two buys and two sells. On the selling side is Page Industries with a stop at 39,850. Look for a target of 38,700 to begin with. And Kotak Bank also could decline a bit. Keep a stop at 385. Look for targets of 362 on a negative sell side trade. And on the buying side is Brigade. And real estate does look like it's turned the corner, though I think today you might see some pullbacks. But Brigade, if you get a slightly lower in the opening phase, around 565, 567, buy with a stop at 549, a target of 600. And also a buy on SBI Life around 1855 with keep a stop at 1838 there and look for a trading target of 1895.
All right, gentlemen, thank you so much for joining in. We'll come back to you shortly as well before the pre-open for your 9-10 calls. With that, a little too early to speak about this on a Monday morning at 9 a.m. Radico Khaitan is the first management of the show. The company reported strong quarterly sales for its flagship vodka brand, Magic Moments, and that delivered a total of nearly 3.25 million cases during the quarter, which is an over 43% yearly growth. To discuss this and the way forward, we are joined by Abhishek Khaitan, who is the managing director at Radico Khaitan. Thanks a lot, Mr. Khaitan, for joining in. Strong performance coming in for Magic Moments, but investors would want to know if you could give us a sense on how much does Magic Moments contribute to your overall revenue and the kind of growth that we've seen, over 40%. How much of that is likely to continue?
See, actually, if you see our Magic Moment vodka, we in the last quarter we did 3.25 million cases, which has been a 43% growth. And in fact, it would be the first quarter where we have done 1 million case each in every month. And what we are seeing that globally, if you see, vodka is 28% of the entire spirits market, whereas in India, it was only about 3.8% of the total spirits market a year before. Last year, it became 4.5%, and now it is close to 6%. So what we were anticipating that the vodka segment, where globally it is 28%, how come it's so low in India? So I think that structural change has actually started to show. And what we are seeing, vodka being a lighter drink, and people are now trying to have more of the flavors and everything. And it's a total structural change which is happening to the vodka segment altogether. As far as Radico goes, 33% of our volumes is vodka, Magic, and 22% volume is Magic. And in terms of value, it is 33%.
All right, 22% volumes and 33% value. So basically a third of your revenue coming in from Magic Moments. That grew at over 40%. So means your overall portfolio has grown much ahead of what you had guided for earlier. Should we expect an upward revision to your first quarter guidance post the numbers?
See, right now I won't be able to speak much on the guidance part, but what I can easily say is that what I've been anticipating for a decade, we are seeing now it happening actually on the ground level where the vodka has taken off, and especially after we launched the flavors of India. It's a series of vodka where we have launched the ethnic flavors from India, like the jamun vodka, the mango vodka, the thandai vodka. These have started really picking up in the metros as well as the tier 2 towns.
All right, hi Abhishek, good to have you on the show. So this million cases that you sold every month in the first quarter, could you help us out with a couple of details? What was the geographic spread of that? And also, what was the nature of these products that were sold? Were they the lower priced ones or were they the higher priced ones?
See, I'll just give you a little flavor. Like if you see places like, say, Uttar Pradesh, Rajasthan, Madhya Pradesh, Maharashtra, they have seen a massive shift towards the white spirit, that is especially the vodka. To take you an example of Uttar Pradesh, 10.4% of any alcohol sold in Uttar Pradesh in 2025 was vodka, which became 11.6, and now in the coming year it is close to about 17%. So there's a massive shift in all these states.
Oh, that's an interesting one. 10.5% turning into 17% in Uttar Pradesh. But, beyond the top line, Mr. Khaitan, how would you say the raw material costs have moved in the first quarter, especially after the US-Iran war and the kind of geopolitical uncertainty that we're seeing? What kind of margin projections would you make after this?
See, we've guided last time that our from last year, irrespective of the raw material prices, we expect the margins to be up in excess of about 125 basis points. And there has been an increase in the glass prices. There has been an increase in the tetra prices, etc. But in spite of that, we are confident because of our premiumization. Our margins should be up by 125 basis points in the current fiscal.
All right, Abhishek, we have to ask you about the UK-India Free Trade Agreement as well as the EU-India Free Trade Agreement. All these factors now will begin to play out. So how does your business, say, look in the next 3 to around 4 months?
See, we are one of the largest importers of scotch from the UK. In terms of value, we'll be importing about close to 250 to 300 crores of VMS in the current fiscal. So I think a 75% reduction in duty would be a good cost advantage to us.
All right, cost advantage. So the question then is, have you decided whether you will pass on the cost savings to the consumers or would you let it stay in your margins?
See, because these we use it for blending, etc. So I think this would be like, we've had cost pushes also. So I think the prices of these brands are already established.
Well, let's talk a little bit about the market and the market share perspective as well. Could you give us a sense about the growth that you've seen for the industry? Have you grown faster than the market as well?
See, last 5 years, if you see, our premium growth has been much ahead of the industry. And we, like in the vodka, if you've seen, we've grown by 42% in the first quarter. So I think we have guided of a 20% plus growth in our premium segment, P&A segment. So I think we should be, we will be well within we'll be meeting the guidance. And our luxury segment also, we have guided that in the current fiscal, we should be 25% plus. So I think we are quite well positioned for that also.
All right, well positioned for 20% plus growth in P&A and 25% growth over and above that in your luxury segment as well. Since we're speaking about whites, you had a plan for tequila as well. What's the strategy and the rollout plan here? By when should we expect that in the market and on your income statements?
No, the tequila is on. So I think we should be getting out with our tequila in the current fiscal.
All right, you will launch your tequila in the current fiscal. We'll obviously talk more about that post your first quarter numbers when you're at liberty to give us more numbers. But moving away from whites, obviously majority of the Indian market is still dominated by the browns. How's the demand been there? If you could tell me a little more about the whiskey portfolio, how's that doing?
So browns are also doing well, like our Royal Ranthambore, our Rampur, our After Dark, which we have revamped. I think all are getting a very, very good traction in the market.
All right, all of them getting very, very good traction for the market. That's reflecting in your stock price performance and your business performance as well. Thanks a lot, Mr. Khaitan, for joining in. And as they say in your industry, cheers and good luck for the first quarter numbers. But yes.
Vodka, tequila, all at 9 o'clock in the morning.
All at 9 o'clock in the morning. You speak about that.
He's putting on a very good performance for a teetotaler, I must say. Cheers and all. Huh?
So when you're not drinking, you're reading and when you're watching all these things, so this is exactly what you do.
Well, I think, all told, right, Radico has done phenomenally well. And one of the favorites amongst those who like the space and we ask the question, which is the pick out of the lot, and Radico comes up quite often. Well, I think Sudarshan is back with us. Mitesh is with us as well. 9:10 call. Sudarshan, what do you have?
Indian hotels, if you see a dip, buy with an initial stop under 735, adjust the stop.
All right. And Mitesh?
I'll go with the sell on Page Industries.
Okay. Sell on Page. Any levels, Mitesh?
Yeah, looking at targets of around 38,700, 650 on the downside and a stop at about 39,850.
Well, let's just take a quick look at what is a dip, right? At the end of the pre-open session on the Nifty and where we have settled as far as the start is concerned. It's down 167, 170 odd points. So it's in line with what the indicative open was at 8 o'clock in the morning, but not as bad as the 200, 210, which it was showing about 20, 25 minutes back. On your screen, I'll look at the stocks as well in a bit, but let's just go across to Ananya, who's here with the first quarter conference calls of Indian Bank, which reported a very strong set. Bank of Maharashtra reported as well their FY27 guidance now. Ananya, take it away.
Yes, so a strong set of numbers from both the banks. Let us look at some con call highlights. Let me first start with Indian Bank. So they maintain a confident outlook. If you see guiding for credit growth at the upper end of 13 to 15%, deposit growth around 13%, and NIM at the upper end of 3.15 to 3.25%. Now, your management expects the CASA ratio to stay near to 40%, cost to income around 45%, and GNPA to improve to 1.5 to 1.6%. Now, recoveries are also guided at 4,500 to 5,500 crore, while agriculture and gold loans are expected to grow at 15 to 16%. Now, the management mentioned that the bank will continue building ECL provisions, remain selective in low-yield corporate and NBFC lending, and expects FY27 performance to trend toward the upper end of the guidance. So that's a positive for the bank. Now, coming to Bank of Maharashtra, they also retained its FY27 guidance despite a strong Q1, now targeting 16 to 17% business growth, 18% loan growth. Here, 14% deposit growth is expected by management, nearly 15% NII growth, and NIM of around 3.75% we can expect. Now, management also expects GNPA below 2%, NNPA below 0.25%, credit cost below 1%. Now, the bank plans to add around 200 branches annually. They mentioned may raise up to 5,000 crore to support growth if required.
Ananya, we will come back to you. We just got market open and we'll look at those two stocks as well. What do we have? 24,020 on the Nifty, about 0.75% lower, 0.8 lower now. You got the Nifty Bank, which is down about 0.9. The mid-cap index is down 0.8. The small-cap index is down as well. So this is the overall sort of open. Uniformly lower, reacting, of course, to the weekend news flow, which we started with, which, of course, made the picture a little tricky. So it's not 200 lower on the Nifty, but, I mean, this is the first kind of sort of, change which is coming up at this stage. Let's look at the Nifty heat map, the 50 stocks and how they're starting before we go any further. What do we have? ONGC, once again, spiking as oil's back to about 79. TCS, HCL Tech are the other two. IT, right? I mean, IT is not doing all that bad. So TCS and HCL Tech are in the green, but Wipro and Infy are not down that much. So we'll see. Apollo Hospitals, NTPC, Dr. Reddy's are some of the other names. On the other side, of course, there's Indigo, which is lower as oil's gone up. Tata Steel, Maruti, Shriram Finance are also down at this point in time. So that's the picture. More, of course, I mean, overwhelmingly lower this morning. Bangla.
Well, for the mid-cap end, it's more news-specific than, the general sentiment. Even though there is a decline of almost 0.6% on the index, we have 1,800 stocks declining for about 600 stocks which are advancing. The stocks on the way down and the way up are all result-related reactions. So Avenue Supermarts, for one, has opened about 3.5% lower. We have Keystone Realtors as well. Their pre-sales data not doing too well, down about 40%. That stock too has opened about 4% lower. But on the way up, just look at Just Dial, 11% higher on the back of strong revenue growth. But at the same time, we are seeing, the management change that came by as well. VSS Money, the MD and CEO, will step down. Alongside that, we are seeing some traction on other names as well. Canada HSBC Life Insurance is up 7% at open. We're seeing, increased selling in a couple of these financial names. So ICICI Lombard stands out. We have M&M Financials. And as expected, you have the oil marketing companies which have opened on the red side. So HPCL, BPCL, IOC, all of them down anywhere between 1.5 to 2%. On the upstream side, we have Oil India, which is doing well. But stocks of the morning, definitely Just Dial, Avenue Supermarts, and Keystone Realtors. Nigel.
Well, that's right. Just tell the numbers look good, and I think the cash in the books is more than the market cap any which way. So that's one stock that's flying away in today's trading session. You have Fino Payments Bank. Well, that stock, in fact, is up. It's up on very, very large volumes. I think we have the operational update that's come in there with regard to the new accounts that have surged up. The loan referral as well is higher. So I think we should pull that one up for you on the screen. Fino Payments Bank flying away, up 9.5% as we speak. So good move out there. Vedanta Iron and Steel, well, that one's seen some large trades. Volumes are very, very high. Last few trading sessions, it was moving lower from, I think, more than 40 rupees. It corrected to around 32 rupees or thereabouts. Now it's up close to around 5%. So that's the big stock in there. What else is moving around? Avenue Supermarts, Mangalam already highlighted, falling on rather large volumes, down close to 3.5%. NMDC should come up for you on the screen. There's a price pullback that we've seen for the first time in this calendar year itself. So that, I think, has opened up a little bit on the back foot. But as I said, the street had a bit of a sniff on Friday morning itself. And Jindal Steel, that, rejig at the top continues, which is making the street a little bit uncertain, though they're positive on the cost savings as well as the volume growth for the time being. Jindal Steel as well, because of the CEO moving on. Stock is opened up with a cut of around 2%. And obviously, you'll have these, gold finances, I think, that have opened up a little bit on the back foot. Muthoot is a little bit lowered, down close to around 1.5% or thereabouts, guys.
Just two stocks, right now, which are on our radar. Swiggy is down about 2%. The FSSAI has issued 9 notices to Instamart following multiple consumer complaints. We'll monitor that as we go along. But remember, last week, we saw wild moves on the upside on Swiggy, so maybe it's coming off from there as well. So from a big move of almost 8 to 9% that we saw on at least 2 or 3 occasions in last week, the stock has opened about 2% lower. The other one is Ether Energy, which has opened about 1.5% higher. The board meets on July 15th to mull a fundraise. So fundraise for Ether Energy, that stock up around 1.5%.
Okay, all right. 180 odd points lower is what you have on the Nifty, 24,028 at this point. Just Dial, of course, seems to be the stock of the morning. I mean, it's a market cap-wise small 5,000 crore company in that sense. I mean, would be categorized as a small cap, but there's a change in and management changes. I mean, at least sometimes do prove to be pretty consequential. Stocks underperformed hugely, and we'll see what really comes through. I mean, the last, I think, much talked about change in management was Bata India, which is, again, I mean, a huge underperforming stock. That day, I remember the stock was up sharply. Of course, it's given back most of those gains. Bata, I mean, on day one of the announcement, the stock went up quite a bit. There's this now, which is Just Dial. I'm just mentioning both together because both have, at least in terms of price performance, stocks not done well at all. What else do we have? Asian Paints. I mean, actually, it's the usual suspects where, travel and, hit by input prices, where where oil is in the mix and those kind of things, which are, of course, taking a backseat. It's pretty natural to expect that kind of thing. Dixon is down about 1.33%, had a big move recently and down about 1.25%. HDFC Bank's down about 1.4% odd or so. On the other side, Ramco Systems, which has gone up like a rocket recently and then come off a little bit. I think the recent high is about 950. Stock fell to about $800, and it's back at about 850 at this point. Jindal Drilling is another one. I mean, again, it's like that oil play up and down, shows up on both sides on big moves on as far as underlying oil is concerned. There is 63 Moons, which is coming up with a 10% pop. 743, and it's not low volumes, decent sized volumes at this point. Usually it doesn't come up and doesn't get mentioned, but
just a word on 63 Moons. In fact, I was just noticing that as well. On the exchanges on Friday post the markets, they have given us a first quarter information update for 63 SATS Cybertech, which is basically their cyber security arm, and they have given us updates saying that the FY27 target that they had for orders, they've met 82% of that already. So 288 crore worth orders is what they've got in the first quarter. 53 crore worth cumulative AI cyber ops, of which 13 crore was booked in the first quarter. And they have over 3.25 lakh paid subscribers and 2 million plus downloads. So some information coming in on their US cybersecurity subsidiary, and that stock's up around 9%.
I was had I think 20. Basically, the high was made around late 24, 25, but Yeah, went up, quite a bit from about $100 to about 1,100 rupees in about 2 or 3 years. Of course, after being bombed out after all that controversy, etc. But that's 63 moons for you. Q1 update and markets responding to it. Markets around 180 points. Vikas Khemani is with us, founder, Carnelian Asset Management. Vikas, good to have you with us here. Thanks very much for joining us. No dearth of doublers this year, and it's only been 6 months of the year, Vikas. So it's pretty, what's done well continues to do well. Momentum in, the entire electrification, power kind of theme, which continues to run ahead. What do you like thematically, Vikas? Let's just take it that way, and then we can talk specifics.
I think, that's how things change. We last 1.5 years, we have had huge macro, uncertainties. But I think business level things were okay, India level things were okay. And as those macro uncertainties are settling down, suddenly those businesses which were beaten down because of the, macro uncertainties are bouncing back. And that's what happens every time. Same thing had happened in post-Ukraine war 22. 23 was a great year. Same thing is happening this time around. So I think generally speaking, in general, we have been very, very positive, and themes and they don't change. India has the same story. India has same drivers of the growth, be it manufacturing, be it and across the board, be it BFSI, be it consumer stories. So I think India is such a beautiful broad-based story that you can play out what you want, whether it is healthcare, CDMO. So I think one can go on and on. But so I think as the macro uncertainties are receding, they still some don't seem to get over. But at the same time, now broadly markets have understood that it is pretty much walking on the path of Ukraine 22. Ukraine war is technically over, but world moved on, and I think Iran was technically still on, but world is moving on, and those supply chain and oil price issues are sorting out. So I think from here environment looks pretty decent, and most of the same theme which we've been playing works out. But specifically, I want to draw your attention, and I think we have released a note on this as well. On the manufacturing side, last 2 months, this crisis has brought very, very good multiplier effect. Number one, post-tariff crisis, India has gone ahead and signed the FTAs with the EU and many other countries, which is far bigger than we have ever had. So almost getting access to $1.5 trillion market, which is a very, very big change, right? And that will play out over time. But and second is that in this recent crisis, Indian currency has depreciated between 3 to 15% against various trading partners. Both of them have a multiplier impact and are likely to give a significant advantage to Indian manufacturer, both from an import substitution perspective and export-oriented perspective. And combination of these two will drive this segment and across the board in a very, very significant way. It will have a multiplier impact rather than only additive impact. So that's the one silver lining out of this recent crisis we all must understand.
All right. Hi, Vikas. Good morning. Good to see you, Ben. Vikas, I recall you had a lot of conviction on Laurus Laboratories, and the stock didn't do anything much for a long while. But once it got going, it just went up from, I think, 400 rupees all the way to 1,400 rupees very, very quickly after consolidating for a few years, I think. I was looking at some chatter online as well with regard to Biocon. You seem to be quite optimistic on that one. That as well has gone through a bit of a consolidatory phase, maybe not achieving what the street thought it would achieve. Do you think Biocon is getting into that space where you'll be extremely bullish for the coming years?
One of our large waiters, obviously, and it's a public information. So we've been very, very positive optimists. We think that the company is getting into a new phase of growth over the next 3, 4, 5 years. And it is very hard to build the kind of capability which Biocon has built. There's no other company which has built in India. It's the largest company in the biologic space. We like the things where there's a huge capability, but there's a short-term market disruption, perception change. Perception is, clouding the capability. And if you can do, and same thing was the case in Laurus when it was 300 rupees where we bought. I think the entire market was, negative on them about their capability. But when we did our work, we found their capability extremely good. And we are very happy to wait for the business to come in. And that's what happened. As business came in, there was a capacity and capability, and the business came in, and that's what drives the earnings growth and the market price. We think that probably similar things can happen. And not only, I'm not commenting on a stock specific name, but generally speaking, this is a setup we like. companies with capability and capacity and great advantage. And once the change starts happening, it does not go short term. It goes very long way. Because then the compound effect really plays out.
Right.
Just to complete that loop on Biocon, Vikas, you said it's the largest weight. So obviously you're positive and it's all public information in that sense. My question is not so much about Biocon, but in many of these cases, you're also a savvy it's also important to buy at the right time and in that sense. And obviously you don't want to sit on something, buy something and sit on it and it's dead money for many years, right? I mean, there has to be an inflection point, something changes. Is that the way you think about, entries in that sense, Vikas? I mean, how does one determine that? That's the question.
Absolutely, Prashant. I think you got it very right. We are not a contra investors. We don't buy for the sake of contra. Contra investor does that, there's a huge capability, it looks cheap, and hopefully someday it will come back. I mean, that's not our style. Because that can take 1 year, 2 year, 3 years. Biocon would have looked contra 3 years ago also. It would have looked contra 5 years ago because the stock price did not do for a very long period of time. We basically look for a catalyst or inflection point because that is where your weight is slightly lower than than when you buy based on the hope. So at least and that requires a lot of deep work, which is cutting the clutter, avoiding the market perception, going a bit deeper, and those kind of things gives you only when you get those kind of insight. You can take bet with conviction. I mean, that's our style. I'm not saying we've been wrong many times over, so don't get me wrong. But that's at least our style, and so far it's worked well for us.
100%. We, understand that and appreciate that as well, Vikas. But you've also been a champion of the Indian manufacturing space, and you've made serious returns in names like Apar Industries, as well as Anup Engineering, etc. I wonder whether you continue to hold them still, or at some point you think that maybe the valuations have run ahead of what the opportunity is.
We launched our manufacturing fund in August 2020. Ever since, I think this question I've been asked in 21, 22, 23. Every year I've been asked saying that, is this manufacturing over? Is it kind of thing? And I have continued to say, and I said today also a note has got released where we are saying manufacturing 2.0. It is a very, very long-term decadal trend. I think even till 2035 it will play. Our manufacturing share in GDP is only 15-16%. That can very well go up to anywhere between 22 to 25%. And that's likely to happen. It's a very, very structural opportunity. Within that, there will always be cycles because manufacturing is very wide space. It cuts across auto components, chemicals, capital goods, EMS. It's a very wide sector, even consumer. It's not one segment. It's a very, very wide segment. Pharma, CDMO. I mean, you can keep looking at it, right? So thing is, there will be intermittent cycles within the sectors. Chemicals had its own cycle. There will be intermittent cycle. But structurally speaking, if you take a 10-year view, it's a very, very large opportunity where, think about it, your migration is happening from 15% to 20-25% of GDP. Very rarely you find such themes. So it's actually, if you ask me, it's going to stay here for a long time. I'm not saying that there won't be intermittent cycle. There will be. But the whole theme will stay. If suppose one sub-segment does not work, you move on. We sold most of our chemicals in 22, but we recently bought it. So I'm saying, so you have to be cognizant of those intermittent euphoria getting built, cycles getting built, because investing is not about being part of euphoria. Investing is about being rational about what you are doing. So I'm not saying that buy anything and everything in manufacturing to make money. Once you know this theme and perspective, then you got to identify your companies, risk reward of individual stocks. How do you make money? Those underwriting becomes very, very important.
The comfort, I mean, if you can square the dot. Now, the thing is, lots of companies in the manufacturing space, right? I mean, they're doing not just their core thing, but because they have the capability of doing other things as well, right? I mean, the companies in defense now, or maybe actually the other way around, there are lots of forging companies which are now starting to supply to defense. I mean, the ecosystem, if you have core manufacturing facilities, expanding because the market is there, aerospace, defense, many other sectors as well. You want a name, right? Again, publicly disclosed, PTC Industries, Vikas, right? Pretty bullish. Again, you want to talk to us about that?
Prashant, your temptation will take me back to stocks every time, and I've tried to resist you many times and tell you that it's better not to talk on that. I think as a compliance policy, would like to keep talking only on the sectoral themes. And honestly speaking, if I tell you I like manufacturing, and that means nothing. You got to go and do your work on the companies, and also that's our job. That's what our business model is, right? And so there are many themes, like I said, within manufacturing, within aerospace, too, and all those themes are going to only get bigger and better because once the ecosystem gets built, it has a compounding effect. The first part of the layer takes time to build, and that's what's happening in the last 4 or 5 years. And at times, when you look at only the first early growth of 4 or 5 years, everything looks expensive. But if you see next 5 years of growth, might not be only 10-20%, which could be even multiplier. You will be surprised many of the companies will become 4x, 5x in next 5 years. So in that context, the growth becomes, the valuations of today, which is appearing on a trailing PE basis, looks pretty reasonable. So hence, investing is all about looking and having conviction about the future outlook on the growth. Once you get that right, I think you will have far more conviction than, and this is about any name, any sector, or any company for that matter.
All right, Vikas, always a pleasure speaking with you. Thank you so much for joining in and giving us your view on the markets. As we speak, there is some recovery from the lows in the broader markets in particular. The advanced decline lines come up for you. In fact, when we started trade, it was close around 1,800 stocks which are declining. And now, the number of stocks which are declining have come off, and the number of stocks which are advancing have come up as well. So those lines have actually come closer to each other. A stock that is buzzing in trade today is L&T Finance after reporting a strong set of first quarter earnings. Asset quality and loan book improved while the NIMs moderated marginally. Sudipta Roy, who's the MD and CEO of the company, joins us. Thanks a lot, sir, for joining in, and congratulations. It was a decent set of performance that came by. If I was to ask you at the end of the first quarter, and as you look at the next 3 quarters, what are you targeting when it comes to loan growth and your NIMs? Because your net interest margin saw a bit of moderation. How do you view this going forward? And loan growth, if you could give us a sense, what would lead that growth?
Thank you. Thanks for the opportunity. To take the first question on loan growth, I think as part of our Lakshya 2031 guidelines, we have guided for a 20% CAGR on loan growth. However, one of the things which is very important is that if we find risk-calibrated sort of scope available in the market to grow our portfolios, we'll probably grow at much faster pace, which has been the case this quarter. As we are sort of navigating through the sort of a possible weak monsoon as well as the ups and downs of the West Asia crisis, it's very premature to, sort of look forward and sort of hazard a guess on what should be the sort of the ideal loan growth during this period. However, I do believe that that 20% number is something that we are pretty confident of achieving. Now, obviously, if things settle down, if we have that 90% long period average monsoon predicted, and in the West Asia crisis settles in the sort of, it has been going up and down, right? And if it settles in the next couple of sort of weeks, finally, then, we are looking forward to a sort of a relatively strong festive season as well as a good fourth quarter thereafter. So hopefully, the sort of the loan growth should be upwards of 20%. But however, as of now, we will stick to our guidance of 20% plus in line with our Lakshya 2031 statement. In terms of NIMs and fees, if you see, our headline yields have remained relatively stable, but primarily because of the weighted average cost of borrowing has gone up by about 3 basis points, and we have a much larger balance sheet. That has given a 25 basis points impact on our NIMs this quarter. However, if you look at the correspondingly, our fees have been also higher because we maintained a little larger amount of liquidity this quarter, primarily because of the West Asia crisis. We wanted to have a little bit of liquid assets available. That has risen to a higher level of liquidity income. We have had good sort of realizations from our personal loans and SME collections in terms of fees. Our insurance yields have gone up, so our fees actually jumped this quarter. So overall, our NIMs and fees remain stable.
Got that. Sudipta, hi, good morning. So just on the personal loan portfolio, right? That's growing at a very, very fast pace, some 80% growth year on year, 15-20% on a quarter-on-quarter basis. What's giving you the comfort to grow I mean, it's a conscious decision to grow at that rate, right? So just talk to us a little bit about that.
Yeah, so, personal loans, largely our distribution philosophy has been, to tie up with what we call the large digital partners, the likes of Credit, Google Pay, Phone Pay, Amazon, and sort of push forward our origination on that. Now, here is these are the platforms where you find large pools of salaried customers. And these are the platforms where, you are able to build joint scorecards and sort of jointly agree to risk thresholds and sort of cherry pick the customers that meet your risk profile. And because the opportunity of the customers to see the loan offers on these platforms are probably far higher than other platforms. Once this platform stabilizes, they actually see near vertical growth if your digital journeys are sort of frictionless. What we have done over the last, sort of 12 to 18 months was that fine-tune our digital journeys and work very closely with these digital partners. And actually, these are the digital partners which are actually driving our growth. Our cross-sell business, especially to our two-wheeler customers, and we are a pretty large originator of two-wheelers, and we have been originating a large amount of prime two-wheeler loans over the last 12 to 18 months as well. That the cross-sell business also has, the personal loans cross-sell to the two-wheeler business has also increased. So overall, between the sort of increase of disbursement through the digital partners as well as increase of cross-sell to our two-wheeler customers, our personal loans business has actually maintained a strong growth. However, the risk-calibrated sort of outlook remains, and actually our credit performance on the two-wheeler business, on the personal loans business continue to improve with every passing quarter.
And this is coming through what, 2-3 platforms, this growth?
Primarily Cred, PhonePe, Google Pay, and Amazon. These are the large partners. However, there are a couple of other partners.
And the rates of growth will continue to be turbocharged here, or you will moderate it, depending on what happens?
I'll sort of say that probably as the balance sheet size grows a little larger, it will probably moderate towards the end of the year. However, for the next couple of quarters, the growth rates are going to remain strong.
All right. Hi, Mr. Roy. Good morning and good to see you, Ben. Well, tell us a little bit about the ECL. Is there a possibility of there could be a rise out there? And what's giving you confidence that, by the end of this year, credit cost comes down, I think, to around 2% odd is what you're guiding for by the end of this fiscal year?
Thanks, Nigel. I think when you talk about our ECL models, we actually calibrate our ECL models once a year, which is in Q4 of the financial year. And this year, we have been prudent on our ECL modeling. And the fact is that we are now providing more also on stage one. As our balance sheet is growing larger, as part of our ECL model, we are providing more on stage one and stage two, and also keeping stage three adequately provided. So obviously, if you see our PCRs sequentially have risen by about 2 percentage points from 67 to 69%. And as our balance sheet grows larger, we'll be prudent in our ECL modeling. However, if you look at our credit cost has been at 2.54% this quarter, downward trajectory of about 10 basis points, effects of all our credit work that we have been doing, especially on Cyclops, which is live on our 4 business lines and going to be live in our microfinance as well as mortgage business line this year, has been showing its results. This will continue coming down by about 10 to 15 basis points every quarter till we reach the trajectory of 2 to 2.2% as committed by Q4 FY27 this year. And as we have committed in our Lakshya goals, we do not stop at 2 to 2.2%. We actually want to drive it further downwards from 2% as part of our Lakshya goals. So over the next financial year, you will see this pairing downwards below from 2%. So obviously, the downward pairing of credit costs will continue, and our credit frameworks that we have built, our AI-enabled credit engines that we have built, are delivering excellent results. The results are enshrined in slide 14 of our analyst deck, and we urge our investors to have a look. And I'm very, very confident that this trajectory will continue downwards.
I'm looking at that deck itself, Mr. Roy, the Lakshya 2031 goal that you have. It reads more like an American AI agent as against an Indian finance player, the kind of deep tech and operating system that you've spoken about. I just wanted to understand from a business standpoint, if you could, over the next few years, give us a sense on how much it increases your business prospects by, and secondly, how much it reduces your costs by. If you could quantify those data points for us, and what is the kind of PPOP or cost to income ratio that we should target going forward?
So thank you for that question. The fact is that we have been investing very heavily in this new emerging technology, and we have almost a technology team of about 1,000 plus, engineers and data scientists now between our technology centers in Bangalore and Mumbai. In terms of business, I'll give you an example of our two-wheeler business growth. When we implemented Cyclops in our two-wheeler business, and that's been 24 months in operation, actually, it is an engine that actually sort of sharpens credit growth, sharpens credit. And so when we implemented for the first time, we actually saw our market shares fall. Our actually market share fell from about 7% to 5.5%. But however, as the portfolio continued to clean and as our systems, and as our sales teams, sort of got used to operating within that sort of environment, actually our market share started going up. So wherever we were doing about 650 to 700 crores of disbursements on two-wheeler business 1 year back, we're currently doing about 1,000 crores of disbursement on a monthly basis. And our market shares have gone up by, depending upon the market, has gone up by between 1.5% to 2.5%. Right? So the fact is that this we expect to happen everywhere. First, the system will go through a little bit of norming, and then as the system stabilizes, it will give our sales teams as well as our digital channels far, far more sort of latitude to increase our market share and take those customers which others are afraid to sort of underwrite, because we are underwriting the customer in a far more deeper holistic sense, and we are very confident about their outcomes. Now, in terms of efficiencies also, in our collections business, it is showing efficiencies. For example, wherever a human call in terms of self-cure, in terms of curing a pre-delinquency would take anywhere between 280 to 300 rupees. Currently, we are doing about 10%, within 10 rupees, we are curing those sort of delinquent customers. So obviously, in the last 3 to 4 months, we have only saved about 70 crores in our sort of pre-delinquency management exercises, especially in our urban business by using our AI bot calls. We have also sort of deployed a lot of co-pilots. I would not like to go into granular details here on the call, but I would urge our investors to look at it in an investor deck. Overall, I do believe that, over a period of 3 to 4 years, all our AI initiatives will add somewhere between, 30 to 40 basis points in terms of, OPEX improvement overall. And obviously, and probably a market share gain. Market share gain is a little difficult to quantify at that particular point in time, and we will have to see how that pans out. But overall, what we can say is that the implementation of AI, especially on a cost-calibrated basis, we are very focused on cost of AI as well, will be net positive for the company, and we remain steadfast on this approach.
Okay, all right. Sudipta, thank you very much for joining us. Good speaking with you. Stock's done well. I mean, I think coming about 23, 24% coming into the first quarter results, another 3% this morning. Numbers all doing great. But expensive? It's a question mark. 2.5 times F528 book of course, this is forward estimates, but won't change much if you look at a range of estimates for the next 2 years or so. 331, phenomenally. Stock's done very, very well. Well, Geo BlackRock has launched the Prism Hybrid Long Short Fund, a specialized investment fund. That's a SIF. Now, the fund allows an interval structure, allowing redemptions twice a week, and it is powered by BlackRock's global investment capabilities and the Aladdin risk management technology. We have Sid Swaminathan, MD and CEO at BlackRock Asset Management, joining us here in our studio. Sid, great to have you with us here. Thanks very much for joining us.
Thanks for having me.
So, exciting times, new products on the anvil. Talk to us a little bit about what this is about and what do you hope to do? I mean, what are the aims here with this fund?
Yeah, absolutely. As you said, new product for us. Very, very excited. We're actually closing the NFO today, so it's a very, very busy day for us in the office. But thinking about what the product is for, and it's all about the customer fit, because you can always come up with a cool idea or an innovative strategy, but if it doesn't meet a customer need, it's useless, right? So we thought a lot about this, and I think when you take a step back and look at kind of where the investors have evolved to in India, right? And we're getting to a stage where there is still, there's kind of like a barbell structure evolving. So you've still got a huge amount that need to come into the market. So participation and access is still a very, very big focus area for us. And that's why you focus on, simple funds, SIPs, 500 rupee. If you can get it lower, even better. That needs to carry on. On the other side, you're starting to see more and more of these, what I call evolved investors, right? So they've been in the markets for, 5, 6, 7 years, done really well, mostly through their equity exposures. And now they've built up this kind of, let's call it a pot of wealth. And they go through a market that is, let's say, a bit more turbulent than what they've been used to. And they're starting to look for differentiated kind of outcomes. So how do I get a fund into my portfolio that behaves differently to what I already have, whether it's generating some returns when markets go up, markets go down, but also when markets are, let's say, flat for a certain period of time. And that's where this category itself really comes into play. So I think the SIF, from a timing perspective, I think has worked out really well for the overall category. We've seen that from the flows themselves since these have launched. And the fact that you can use derivatives to generate outcomes that can kind of withstand different weather situations. So they're more all-weather portfolios. That makes it really interesting. So for us, we've obviously had the expertise, of doing these kind of solutions through BlackRock. We brought some of that in here to India through Aladdin, and we built a team here that's really has expertise in derivative strategy. So we're super excited to be combining that.
You've indicated 9 to 11% returns here on this one, right? I mean,
yeah, that's typically what it's a hybrid strategy. So we have a mix of, let's call it equity collars, as we like to call it. So these are equities, but with options overlay on either side. So you're not really taking too much directional
what's the
equity
maximum
risk.
drawdown one should expect? Have you backtested this through periods of crisis?
Yeah, so we have about 5 to 7 years of backtest. So typically, this tries to protect anything more than a 1-2% drawdown. And actually, backtests are great, but sometimes you need out of sample experience as well. So one of the things that we looked at was we've been running a paper portfolio for the last sort of 6, 7, 8 months, and from a timing perspective, that works well. Like Indian markets have seen a lot of volatility, so you can test that. So March was a good example when the markets are down 11%. The paper portfolio is down less than 1%. So that's a good sign that it's outside of the backtest, it's able to show some kind of resilience, which is very important for these kind of funds.
In what sort of environment do you expect the fund actually to outperform, and where could there be a risk of underperformance? You just said that the paper portfolio did well in a challenging time.
Yeah.
So how do you see things move ahead from here?
Yeah, really good question. I think when we say all-weather portfolios, that's what the goal is, right? So we should not confuse this with an equity fund, right? Okay, if the equity markets are rallying, this is not going to keep track with that, for sure, right? It's not by design, it won't. So the goal here is to try and generate that consistent 9 to 11% is the range. Let's call it 10 to make it easy, through all scenarios, and then minimize the drawdown, right? You're getting to a stage now where, we're more than catching the right, let's call it outperformer. It's starting to become more about avoiding the big drawdown.
Right.
This is the fund that's kind of designed to do that. So avoid the big drawdowns and then steadily kind of generate that 9, 10, 11%.
One of the challenges of executing something like this in a market like India is execution risk, or the impact cost that you have. Because on paper portfolios, obviously, if there is a large trade which is taken on a certain option, the price doesn't move as you would have expected. So how much of that do you think could be the impact cost of executing these trades, especially when it becomes a certain size?
Yeah. So happy to answer that. I think very, very relevant, right? So the way where we sort of run paper portfolios on Aladdin as well is it's as close to real as possible without it being real money. So we're able to measure the impact costs even on our sort of paper trades to see, okay, what would have been the impact if we went and traded this size in the market? So that's one piece where the simulation is as close to reality as possible. Then the second piece is the systematic process itself. So this is something that we've brought to India. We've run a few other funds on it. And the advantage of that process is that typically the positions that we tend to take are much more diversified because we have views on a much larger sort of basket of securities. So that already helps as well because the individual impact cost, no single position has a huge concentration risk. So the combination of the two gives us a lot of confidence that this is a fund that we can scale pretty quickly without really having an impact on the total return expectations.
Sid, since we have you in the studios, just zooming out a little bit, the AUM is now 20,000 odd crores?
Yeah, we just crossed 20,000 crores, so happy to kind of share that here. So just crossed also 1 year since our first launch. So we're very happy with the start that we've had.
What is the retail share? What is the institutional share now?
So we're about 5,500 in retail, and the rest is institutional. So from a mix perspective, also very happy. Over 11.5 lakh retail investors. So the first year in terms of where we've got to, we're super happy. But it's all about how do we grow from here? I think this is just the beginning for us.
And equity ETFs, etc., in the coming months.
It's a busy 2-3 months ahead of us. We obviously closing this fund today. ETFs in the pipeline in the next sort of 1 to 2 months. We've also got our entity approved in Gift City. So that's also something that we're looking to bring online, offering both outbound international exposures and inbound access to kind of NRIs and global investors. So
you want to give us a few years ahead, what kind of AUM target you're looking at? And break it up for us.
I've been asked this before as well. I think not yet is the right answer for me because the first year, very happy with all of these sort of building blocks that we're putting in place. We have to see what the response is. We have so many capabilities that we want to bring online. Conditions are changing. So rather than put a specific AUM target, for us, it's more about how are we bringing sort of new innovative solutions to the market, growing the market, and then seeing, okay, what are we capturing in terms of the net new growth of the market? That's really the target for us in terms of share of new growth rather than a fixed target of AUM.
Perhaps will come. Follow that. Thank you very much, Sid. Great speaking with you. Congratulations. 20,000 crores, 1 year in, and more coming.
It's also brought good news for the market, actually. As we speak, the Nifty is picked up. It's moved to the high point of today's trading session so far. Still down about 100 points, but a significant recovery from the lows. And we've seen the IT index actually pack a punch. The Nifty IT index is higher by about 1%, led by TCS and Infosys, both of them, which have seen an up move from the lows. With that,
TCS is up
2.5%, 2.65%. The rejig at the top, perhaps the street likes that. And apart from that, the numbers weren't particularly bad when it came to the street expectations as well. Take a short break, come back, get you more on the markets. We are tracking our quarterly special, quarter se quarter tak, where we track what's taking place and what the expectations from the insurance sector, the life insurance sector, are in the first quarter. Stay with us.
Welcome back, and as promised, it's time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector. Today, Yash joins us to tell us what do we expect in Quarter 1 FY27 from the insurance space. Yash, take over.
Well, as far as the life insurance industry is concerned, it is stepping into the earnings season with one big question, and that one is that can strong premium growth, which we've seen for life insurance companies, translate into equally strong profitability? Growth is expected to remain healthy, but margin performance for life insurance companies, the underwriting performance for general insurance companies will be tested in the first quarter. Let's start with the life insurance sector. As far as broader expectation is concerned, Axis Max Life Insurance, Canara HSBC Life Insurance and ICICI Prudential Life Insurance will deliver a double-digit APE growth. HDFC Life and SBI Life are expected to report a relatively softer single-digit APE growth as far as the first quarter is concerned. On profitability, the value of new business, or VNB, is expected to grow in double digits for most life insurers, with HDFC Life and SBI Life likely to be the exceptions here. Another important trend this quarter, the negative impact of the loss of GST input tax credit will impact VNB margins, and that is expected to be partly offset by a more favorable product mix for life insurance companies. Now let's speak about company by company, starting with HDFC Life. APE growth is expected to be around 7%, while the retail APE growth is likely to be around 5% growth. The product mix is expected to tilt towards traditional products over ULIPs, while VNB margins could decline on a year-on-year basis because, as I said, of the GST input tax credit impact. Moving to Max Financial Services, where expectations are considerably stronger, APE and retail APE growth, they are projected at to be growing at about 16 and 17% respectively. VNB margins are expected to expand marginally despite the impact as far as the GST implication is concerned, while absolute VNB is likely to grow at a double digit. Speaking for SBI Life Insurance, the street expects a 35% APE growth and 14% retail APE growth. VNB margins are likely to remain broadly unchanged on a year-on-year basis, with the bank assurance continuing to dominate. Now, the APE mix followed by the agency channel at ICICI Prudential Life Insurance, the expectations remain positive. Strong APE growth is the expectation as far as ICICI Prudential is concerned. Slight margin expansion is expected, while VNB margins is expected to grow as far as early teens growth is concerned. Moving to the next company.
All right, Yash, just catch a breath, have a glass of water. I think you're getting a little, what we'll do is we'll go back to Yash in a bit. But I think we have the analyst join us as well. Maybe bring him in and then we can go back to Yash to complete the general insurance space. Manas Agarwal is with us, research analyst at Bernstein. Manas, good to have you with us here. Let's just finish live first, then we'll go back to Yash for the general space. Talk to us a little bit about what your picks are. Which company is expected to outperform? Where is the growth likely to be? You heard Yash give us a lowdown.
Thank you for having me. And I think Yash was doing a great job in talking about the trends. Max, obviously, for all companies, we know the top line APE numbers already. Max seems to be stronger than others. What will weigh on margins for everyone is going to be a GST impact. The product mix, we've seen sum assured growth be stronger than our total APE growth for some of these companies. So there seems to be a product mix shift which will offset that. The other thing that I think not a lot of people are factoring in is the yield curve has come down again to mid-March levels. So whatever was an uptick in terms of margins for the end of Q4 and a negative hit on the book values, that will reverse in Q1. So I think that is what is at a sector level. From a company level, we continue to like Max, I think, stronger APE growth than others. Margins more or less, give or take, in the same ballpark range, QOQ. So Max is preferred at these valuations. We are happy to look at SBI Life and HDFC as well. However, HDFC Life numbers in Q1 on a top line basis have not been great. So at least between the three of them, the pecking order would be Max, SBI, and then HDFC. Within the market performs, from a near-term perspective, IPO momentum is good. Valuations are indeed now quite favorable. So I think with the constraint of it being a market perform, we need the stake sale to happen for a re-rating, but that is where we are. LIC, stake sale overhang again from the government. We don't know when that gets resolved. But momentum in Q3, Q4, and even Q1 seems to be very strong for the year on a week basis.
Okay. Stocks have come up quite nicely, post, especially names like SBI Life, etc. recently, right, after the monthly numbers. Where is the maximum? This is a near-term question, but on the back of numbers, what we've seen, and in your coverage universe on the life side, where is the maximum upside from here?
I think there's a lot of upside in all the names given how these stocks have derated. Multiples for HDFC, Max, and SBI are close to 1.7, 1.8 times FY27 EV. We think these multiples offer good entry levels. We like Max the most, as at the same multiple you're getting better growth and no idiosyncratic risks like HDFC needing to gain counter share at HDFC Bank, and SBI Life numbers are fine. There is that headline risk from potential banker open architecture regulations, which we don't think make a lot of sense. But that is what the media reports tend to indicate that may happen. And that hits SBI Life a fair bit if that happens.
Okay.
So Max over the other two.
Got it. Let's get to general now. So back to Yash with a quick preview on general insurance companies and what they could report. Yash.
Well, of course, we spoke about the life insurance companies. Now moving on to the general insurance companies. Health insurance sector is expected to continue to lead the sector's growth. Motor insurance premiums in this quarter are likely to remain stable for the companies, and better fresh business momentum along with improved claim efficiency could help improve the combined ratio as far as general insurance companies are concerned. Starting with ICICI Lombard, premium growth is expected to be in the range of about 7 to 9% net earned premiums. They are likely to be supported by the health segment. As I said, the motor business is expected to remain broadly stable on a sequential basis. And of course, importantly, the combined ratio, that is expected to see some improvement on a year-on-year basis. At Star Health Insurance, the premium growth is expected to be in that range of about 19 to 20%. Insurance revenue, that is likely to register a strong double-digit growth, and the combined ratio, that is expected to improve on the back of lower loss ratios and improving expense ratios. Finally, Niva Bupa Health Insurance, the premium growth here is expected to remain robust at about 31 to 33%. While the loss ratio may rise on a year-on-year basis, the combined ratio is expected to remain broadly stable. So far, for the insurance sector, writing more business is only half of the story. In this quarter, the earnings season, the bigger question is how much value that business which these insurance companies have written will derive for them, and that will be a key monitorable, and the answers will lie in the quarter to come.
Okay, all right. Yash, thanks very much for that. I believe we have a bit of a technical issue with Manas, but we can try and get him back on in just a bit from now. That's insurance for you. We'll take a break. Manisha on the other side. Focus on commodity. Stay tuned coming up.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Okay, welcome back. We got markets which are down 100 points, which means they're up 100 from the day's lowest level. I mean, the low was made within about, I think, 40-45 minutes of open, and we've picked up since. Well, let's just focus on commodities, and oil is back in focus because it's up. It's also off the day's high, I think, a little bit. But, you know, over the last 24 hours, from Friday's close, we are up a lot. Manisha is here with details. Manisha, take it away.
Thank you for that, Prashant. Well, yes, we started the day with 4.5% on the higher side. Since then, it's a bit of a profit-taking that we've seen on the higher side, and that is because of the kind of statements that we are hearing in from various countries. And there you have it. In last 1 week, we've seen 10% of gains come in for the crude oil prices. In the last 1 month, though, we are still a 6% on the higher side there. The escalating tensions in Middle East is something that seems to be supporting prices right now. We all do know that US and Iran have exchanged missiles over the weekend, and Iran has said that the Strait of Hormuz would be closed until further notice. But of course, there is statement from US and various agencies as well suggesting that the Strait of Hormuz will be open to commercial traffic. This is what US has said. It has been about the retaliatory strikes, really, that is keeping the prices on the higher side because there's a huge unrest in the Middle East. Iran has extended to Qatar, UAE, Oman, Bahrain, Kuwait, Jordan, etc. And that tells you that the whole Middle East yet again is quite jittery there. What we have, or what we do understand via various reports, is that when it comes to Jordan, there have been attacks on command and control center and drone hangars therein. When it comes to Kuwait, well, the US radar site and rocket launching systems have seen attacks coming from Iran there. It also has to do with Oman, by the way. The US aircraft carrier support and refueling platforms have been under attack. And then Qatar, which actually has been a mediator and has been talking to Iran, has seen first of the attacks come in since the month of April. And this is on jet maintenance centers and command facility there. UAE also, after April, May did not see anything. June was quite peaceful as well. But then July has seen air defense engaging missile and drones from Iran outside borders, is the statement coming in from UAE there. And Bahrain as well has said that they have intercepted several Iranian aerial attacks. So most of Gulf countries have come out with statements saying on how they're intercepting missiles with Iran or the kind of attacks that they have seen within their facilities there. There also are reports on how Iran and Oman have been in conversation about the arrangement of managing the strait and the transit routes there. This is something that the US is really trying to solve right now, that it is a free commercial movement that we should be looking at Strait of Hormuz. When you look at the overall maritime data, then that tells you on what really is happening at Strait of Hormuz. 195 ships are right now within the Strait of Hormuz. This is as per the maritime data. It also says that in past 24 hours, we have seen 54 ships enter and 70 leave within that Strait of Hormuz. There also is data that has come in from Vortex and Kepler, etc., which suggests that when you see the time period past the MOU, which was between 18th of June to 5th of July, we have had 513 ships transit via the Strait of Hormuz between that period there. The peak recovery clearly has been 72 ships. That was on 24th of June. When you look at reclosure, and that has seen a decline yet again, that was 11th of July. And it is only about 31 vessels that passed during that one day. In last 24 hours, there's a lot of confusion on whether or not the ships are passing via or not. It perhaps has grown to zero, or there are reports that various ships perhaps have closed on to their automatic tracking systems and perhaps are navigating that area. So not much of a clarity coming in from there. And there you have the crude oil prices, more than 4% of gains continuing. So we are closing on to that $80 a barrel mark. Interestingly, the street will also watch out for the dollar index, which is climbing above 101. So many of the dollar-denominated commodities clearly have seen a pressure because of that. And the safe haven buying seems to be going in crude and then, of course, in dollar index. What the street will watch out for in this week is going to be the U.S. inflation data. And then, of course, it's about the Kevin Walsh testimony in front of Congress on Tuesday and Wednesday. So those statements will tell us on where the economy, inflation, interest rates, all of that perhaps could move on.
All right. Thanks very much, Manisha, for that. Well, it's oil in focus. And of course, ship traffic remains the #1 key data point to watch for oil in terms of direction from here. Lata has a special Indianomics lined up. She speaks with Nilkant Mishra in his first interview after being appointed executive director to the World Bank. That conversation comes up on the other side. Stay tuned.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
ए दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया.
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी. सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर. सर आपकी ग्रीन टी.
थैंक यू दया. गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई.
अंडा सर्कल हाँ आया.
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का. उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया. शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था. सब मीठा मीठा था, गुड़ जैसा. कड़वा हुआ जब कोविड आया.
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं.
Welcome to a very special Indianomics. My guest is economist and equity expert Neelkant Mishra, who has just been appointed Executive Director to the World Bank. Neelkant, of course, has been our go-to expert to connect the dots between markets and macros. He is very much a private sector professional, currently, of course, still with Axis Bank, and before that in Credit Suisse. But he has also been very active in policy making. He has been member of the Prime Minister's Economic Advisory Council and also currently part-time chairman of the UIDAI. Neelkant, thank you very much. We are very proud that this is your first media interaction after the appointment announcement.
Thank you.
Though I guess you're taking over next week only.
Yes.
Okay. So still with Axis, and therefore I will stick to the questions you will answer because of your Axis role.
Thank you.
First, let's get through with the earnings season. We've got about 4 or 5 important results. What is the sense you're getting? Is it going to be better than expected? Is it going to be double-digit earnings growth?
Double-digit should happen because there's been significant rupee depreciation. Quite a few of the firms benefit from that. There is significant revival in credit growth. So at least our expectation is that the banks we cover should be showing 12% plus earnings growth.
If Indian Bank is an example, then it should be very good.
Yes. So credit growth is fine. There's some NIM compression, but otherwise, again, no reason to have high provisions. There are some sectors where there would be margin pressure because input prices did go up, and I don't think the companies had the clarity, and very rightly so, for taking prices up in the end market. And therefore, there is some. So while volume growth in autos, for example, was very strong, there is also a fear of margin compression. So, but I do think that double-digit earnings growth in the quarter should be possible. But in market, right? I mean, if from the market's perspective, June quarter is priced in.
Quarter is priced. No, that is true. But what about from the FII perspective? That is the more important worry for us, not so much domestic investors who have kept the faith. The outflow has clearly stopped. But is there a growth magnet?
So more than the reported earnings growth, I think what FIIs will respond to is earnings revisions. See, because markets will always be forward-looking. I mean, it's not that the fund manager has suddenly changed their stripes. So, so I do think that the 1% plus earnings cuts that we saw in April and May each should slow down. So June was slightly better. We still had some cuts, but very, very minor. And with these results, I expect to start seeing some upward revisions as well. But frankly, we don't need that. In fact, the fact that in the month of June, I don't remember which particular day, but on a 30-day period, there was significant outperformance of the Indian market. And almost all of it came from the growth in forward earnings. So if we stop seeing cuts, then the forward earnings start looking much better. FII's inflow, though, I think we should not anticipate for a while. See, the world, and you're seeing that, even when the ceasefire happened, there was apprehension that all of us had that this looks very shaky. And there are too many moving parts on all sides, and therefore it can break. And with that kind of uncertainty, you must have seen the dollar index is shot up.
Yes.
And the yields in the US are moving around unexpectedly.
Yeah, 4.6 or so.
Yeah. So so in this environment, it is very hard for someone to choose emerging markets as an asset class. And especially as I think most people realize that the boom that is happening in Korea, in Taiwan, which has led to the outperformance of the EM basket, is also deeply cyclical in its nature. So by nature. So I think EMs as an asset class may not see much of inflow. India's steady reduction in weights in the benchmark should stall now. Maybe we start seeing some upturn. But I'm not banking on a significant inflow from FIs.
Okay, I'll come back to the FPI question later, but the more important flows that we are expecting are FCNR. Now, every now and then we get some news, UAE is doing this, Britain is doing this, but is the 50 billion guess of the market something you'll back?
I think so. I think there is a possibility it can be significantly more.
There are some who are betting on 80.
Yeah, we are among them.
Okay.
But see, a lot will happen closer to the date. So if you think about it from the saver's perspective also, you would want to see where the yields are, what are the options. I mean, why would you commit to a certain return even before you see where the markets are, right? So even like say, own personal investment, if you have liquidity, you would say, oh, you know what, I think the market to correct. And if the market corrects a lot, maybe I'll put the money in there. So that means that all parties, not just the savers, but the banks, the global banks who have to provide leverage, the regulators who can, fine-tune the offerings by giving some clarity or removing some clarity or reducing. So there is a calibration possible. There is clearly from what we see in the initial demand that the demand the inflow can actually be significantly higher if we want it to be. But for now, I think 50 billion seems to be a safe number to work with.
No, I would admit, I think many banks are also believing that September would be the big flow time, or maybe late August. What about, let me come to the earnings season before I get angry mails that you're not asking about markets. First, IT sector. We've got TCS and L&T or LTM already. What is your sense? Do you think IT is going to be the dog in the house, or do you think you're going to see AI earnings? Just how will you invest in that space?
So our team put out, so we have had a coverage transition. The new analyst has put out a very deeply researched note on what really is the role that IT services firms play, and how much is the disruption that these large language models can bring about. And so the conclusion that he has, which I broadly agree with, is that there needs to be a significant transition in how these firms work. But at the same time, this is not the death knell for Indian IT. Having said that, I must say that from a PE multiple perspective, I don't think the uncertainty is going away. See, when you talk to people who are experts, so like just this weekend, I was spending time with my college buddies, 4 of them, and as you know, my only formal training is computer science.
Yes.
They're all very successful tech entrepreneurs, all of them deeply involved in AI. And so some of the changes that have happened, like so December, January onward, some of the models that started coming up on code generation have improved dramatically. So it is very hard for anyone to have a very firm view on what are the things that AI can actually take over. So this does not mean that IT services firms don't have a role to play. you look at Microsoft and all of these tech firms saying we will have FDEs, like the forward deployed engineers. What is FDE? It's IT services.
Yeah.
So, and if Microsoft is putting through FDEs, IT services firms can put up equally qualified and maybe a lot cheaper FDEs as well. So there is an opportunity, there is a business. My concern is that from a market perspective, the P multiples, for someone to go and bet on a trend, you either need very low Ps where you say, okay, this prices in all the uncertainty, or you say that, look, let me wait for clarity. So, and I'm afraid the P multiples are not low enough. Okay. So there could be volatility around earnings. So people may get excited that, you know what, the damage is not that serious, which frankly is true. Even in the month of April, there was 15% plus growth in IT services exports in dollar terms. Yes. A lot of it from GCCs, of course, went to 3%, but after 7-8 months, generally there is a month where it is weak, so there is nothing much to worry about. So I think that services exports are still continuing. The concern for IT services firms, from the market perspective, is what business model, who will evolve first, and all of these uncertainties are reflected in the low price to earnings multiple. Okay. So, so that P multiple revival, I think, will take longer.
Okay, so price is the uncertainty, not really business survival. Yeah. Which sectors should investors bet on now? I mean, again, there is a price which has made defense and some power expensive. But otherwise, which are the sectors that now that can pull in the indexes up?
See, when you are looking at market positioning and your time horizon is say 3 to 12 months, you have to be less fundamental and a lot more tactical. Okay. Meaning that you know what, consumers look beaten down. Any point, say 3 months, 6 months later, you could see, I would say 6 months later, some serious chatter about the pay commission coming up.
No, but consumers do look beaten up. If you looked at Marico's guidance, it looks far more convincing than the Ps we are giving to some of the...
exactly. And the fact that, there is people started talking about pay commission, I think, way too early. Okay. But once the clarity emerges on, how this is going to play out, and around this time, you also see a significant improvement in the real estate market. Because if you visualize a very large set of people with fixed salaries and pensions who suddenly see a significant bump up, what are you going to spend on? Yeah. So you're going to spend on housing, you're going to spend on cars, you're going to spend on maybe not clothing, right? Because clothing and food, etc., are generally established, or maybe schooling. So this drives a pickup in momentum. And so these are the sectors that, as of now, both real estate and consumption look fairly beaten down to me. But that's more a 12-month view. From a tactical perspective, maybe even IT can rebound given given that everyone is sitting negative. So even a minor positive development can actually drive a flare-up.
Okay, let me ask a key question and then come back to, because there are other sectors I want to speak with you. Where are you on this, since you speak to policymakers, on this, where are you on this entire debate of taxing debt versus equity? I mean, my sense is that debt has been treated too much like a stepchild with, slab rates, and equity gets a far better treatment. Is there an argument to bring it somewhat closer? Because equities attract, people are investing in equities without any other thought, what age you are, what is your risk appetite, nothing. It is only the taxation which seems to be guiding. And it is also leading to overvalued equities, foreign companies like Hyundai or Whirlpool or Prudential wanting to sell out. So is there a case to bring the taxes closer?
First, I don't think the outperformance of equities, or the fact that even 2.5, 3 years back, I went on record saying that Indian equities seem to be considered safer by the market than even G-Secs. And that observation is still to some extent true. While P multiples have come off and equity risk premium have gone up, I would say that can still be said. But I'm not sure it's all tax.
Okay.
Because it's about the plumbing. So given that the SIPs and the mutual funds have actually done an excellent job, and there's some serendipity, just confluence of positive developments like post demonetization, everyone wanted to put money, they put in money, and then monetary conditions were too tight, so economy was slowing, and then post COVID there was a massive rebound and everyone made money. There's a good feedback.
Yeah.
The same treatment on the bond side has not happened. Now, is it all because of tax? I'm not so sure. Should coupons be taxed at marginal rates? I think those are deeper questions. But again, the underlying concern that people seem to have, which I think is totally misplaced, that because interest is charged or taxed at or deposit at the slab rates, that's why banks are not getting deposits. I think that's totally wrong, and it's conceptually wrong. Because deposits in the system are a macro variable. It is money in the system. Now,
it is the cost at which it comes.
Yeah. So
and you are chasing deposits because it's not the most attractive.
But, so do the banks, given that we just discussed that credit growth is picking up and profit growth is picking up, provision levels are low, everyone is sitting on a lot of Tier 1 capital. So is the objective to boost bank earnings or bank EPS, which maybe there is merit in thinking like that, but it is not about that, deposit growth is only 12% and credit growth is 17%. And so if you do that, deposit growth will pick up. That's the point I'm trying to address.
Fair enough. Okay. I have to browbeat this point a bit more and then ask you a few more questions on the India growth number as well. The GDP number has a lot of pull, and I'm a little disappointed why people are not talking about 7. I seem to be the only one. All those questions after the break to you, Neelkant. Yeah, back in a jiffy. But for Bazaar viewers, you will get to view the entire show after market hours.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर, आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई,
Well, there's remarkable recovery after the Indian market took it on the chin as warring US and Iran exchange airstrikes again to secure complete control of the Strait of Hormuz. Brent is near $80 per barrel. OMCs, paint makers and airlines remain under pressure while upstream plays have held their positive territory. Though as we speak, the market significantly off lows.
L&T Finance posts its highest ever quarterly profit growth of around 29%. Higher disbursements, asset quality and retail book strength aid the overall show in the past quarter. The management tells CNBC TV 18 that they expect to clock in a CAGR of 20% on loans as opportunities present themselves.
Steady 10% growth in top line lifts first quarter earnings for Just Dial. Higher employee costs and other expenses dent the margin show. Additionally, company has announced appointment of the new CEO and CFO. The stock extends gains in early trade.
Avenue Supermart sees a muted start following a lackluster show in Q1 results. The management adopts a cautious tone. Like-for-like growth of stores more than 2 years comes in at 5.5% versus 7.1% same time last year. The company reports flat margins while profits are up 11%. A deep dive into those results with Bernstein's Jigyanshu Gore coming up on Chartbusters.
Among other stocks reacting to their quarterly updates, pre-sales for Keystone Litters falls 42% and the stock is lower. Meanwhile, 63 Moons Tech achieves 82% of their FY27 order book target in the first quarter. The stock skyrockets in early morning trade.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And though the markets are down, we've seen a big recovery from the day's low. In fact, the Indian markets are relative outperformers from the Asian market basket. Hey, Mangalam.
Hi, Nigel. You know, if someone told you that over the weekend we will see just a 70-point cut, 50-point cut on the Nifty and the Nifty bank would be actually in the green, you would be happy. And you would take that with both your hands. And at the same time, if you look at the advanced decline, that tells you the story of the day. We started today's trading session with just 600 stocks in the green. And that number has now zoomed past 1,500. And there is the green line, which is above the red line. Perfect time to get in Shivangi Sarda for a quick technical check on the market. Shivangi, your view on the index and individual stocks?
Good morning, Mangalam and Nigel. Thank you for having me. So we've seen that the indices have been very strong to absorb any kind of declines, even though the global cues had inched us a little lower. But the support from lower levels is quite strong. So we are, hinting at 24,500 next again on the cards for Nifty index, with a support base at 23,950 level. So buy and decline to continue over here with excellent stock-specific action to continue. Now, talking about Bank Nifty, of course, this has been an outperformer and it has been consolidating at the higher zone from the last 19 trading sessions. The index has kind of comfortably held above 58,000 levels, and till the time it holds above the same, we could see the next 58,500 and 58,750 odd levels with a support of 57,750 zones.
Got it. All right. What about individual stocks?
So individual stocks on my radar, first up is Adani Green. We've seen this one has been, quite strong, and this stock has actually given a good follow-up after the breakout on the monthly basis from the last 4 months. And recently, there has been a quick turnaround from its retracement level on the daily basis as well. And volumes are adding up along with the price surge. So looking quite positive. We're recommending a buy here. The next targets that we're looking out for Adani Green is around about 1640 levels with a support base of 1530 zones. The second pick on my radar is the strongest of the entire diagnostic labs. It's Loris Labs that I'm talking. On the monthly basis, it has made an upward sloping channel. Continuous buy and decline can be seen from the last 40 trading months. And we've seen that, this has held on to the higher levels and, follow-up is quite strong here with good amount of OI and rollovers from the previous series as well. So overall, derivatives and technical both looking quite positive for this one. 1600 is next what we're looking out for Loris Labs, and 1500 would be the stop loss.
Got it. Okay. All right. Thanks a lot for that, Shivangi. For the time being, we slip in a short break. When we return, we'll be joined by Jigyanshu from Bernstein to discuss Avenue Supermart's Q1 results. Stay tuned.
ए दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी। और
Welcome back. You're watching us here on Chartbusters, CNBC TV 18. Let's take note of some of the earnings that came over the weekend, and one of them was Avenue Supermarts. 15% revenue growth, the margin staying steady. Soft performance as against what the street was anticipating, and that explains why the stock is off highs as well. Jignanshu Go, Director and Senior Research Analyst at Bernstein, joins in. They have an outperform call and a 5,000 rupees stock price target on Avenue Supermarts itself. Jignanshu, what do you make of the numbers? I take your point entirely on, averaging out fourth quarter and first quarter numbers to take out the aberration that we saw in terms of kitchen stocking. But despite that, 17% revenue growth and the kind of valuation multiple that the stock is trading at, what explains your outperform call? And if you could give us a sense of the target multiple that you're looking at.
Sure. Thank you, Mangalam, for having me here. Always a pleasure, first of all. If you average out the 2 quarters, as we've written in the note, it's around a 17% revenue growth for Q4 plus Q1 versus Q4 plus Q1 last year, and a 17% PAT growth. Now, this margins holding up even at a PAT level is slightly different from what we have seen in the last 2 years, where we saw margin continuously declining as the company was investing in stores. It was investing in better experience at its stores by having more employees and building capabilities at the corporate level. So our 3-point thesis for why we believe the stock deserves a good multiple and why we see it improving from here and our target price is: number one, we think the store expansion will remain elevated, 80 plus over the next 3 years minimum. Possibly it can go higher. Second, we believe the drag from the non-metro stores will be recovered over the next year or so, and hence the SSSG in general will be closer to the double-digit number as we go forward, which means the revenue growth should be higher than today. And third, we think the margins will expand because the investments they've made are in fixed costs, and DMart, especially grocery retailing, is a fixed cost business. So with SSSG, margins expansion will happen, and hence our EPS numbers are slightly higher than street consensus, and our valuation is broadly in line with street consensus. So we think it's a 20% upside. Most of the upside comes from EPS upside than from valuation re-rating. Given we expect this to be a 20-25% EPS growth company for the next 3 years, we give it a 60 times multiple on F28 EPS.
All right, 60 times on F28 EPS. What does the commentary around DMart Ready tell you about quick commerce? Because if you listen to what Anshul Asawa said, in the large metros, their stores aren't growing as much on an SSSG basis. And at the same time, they have reduced the number of stores that they're servicing on DMart Ready. What does this tell you about the larger space? Because one infers from this that the large metros, they might be facing competition from quick commerce, but beyond large metros, quick commerce is difficult to scale. Is it a DMart specific problem or is it an industry thing?
I think let's look at the metros first. This is not the first time that DMart has made a comment regarding the mature growth profile of its higher performing metro stores. They have made this comment in the last year analyst call, the year before that as well, which is obvious because from our checks and understanding, some of the large stores in Mumbai are doing more than 300 crores per store of revenue. And at that scale, given what we see of the store physical footprint, it's difficult to push through a materially higher number of people than they are doing today. So given that, it's not a big surprise that their metro stores aren't growing. It's also not a big surprise that there are 4,000, 5,000 dark stores in the top 10 metro cities, which may be which would weigh on DMart's growth. What we are encouraged by is, despite that core large metro stores not growing, the stores which are 24 months and above in terms of tenure are growing still at 5.5%. And I think that is the most encouraging part. Their LFL has not dropped below 5.5, despite the intensity of quick commerce that we have seen in the last 2 years. Their core TG remains different from the TG which has embraced quick commerce today, even in the large cities. I think outside of the large cities, we do think the quick commerce proposition itself needs to evolve. Discovery needs to happen. And I think the quick commerce players have themselves been stating that none of the cities outside are profitable, right? In fact, the quick commerce industry itself today is not profitable, even in metro cities, besides Blinkit breaking even at an overall level. So yeah, I think the proposition needs to change. DMart Ready is a DMart specific problem. It is not an industry issue. I believe they are still trying to find the right product market fit for their business. I am not sure if they know why they do DMart Ready. What is the role of DMart Ready within the DMart portfolio?
Right.
So there are strategic problems and questions they need to answer, which is why the retreat to a small number of cities.
All right. Take that point. Thank you so much, Jignanshu, for joining in. Short conversation, but effective nevertheless. With that, we'll take a short break, come back on the other side, excerpts of Nigel's chat with the management of Shyam Metallics. Stay tuned.
Request.
Welcome back. Here, tuned in to Chartbusters. Well, in an exclusive conversation, I caught up with Shyam Metallic's chairman and MD, Mr. Brij Bhushan Agarwal, at the company's Kolkata office. I began by asking him why Shyam Metallics is focusing on diversification when many of its peers are actually looking at capacity expansion. Let's listen in to his response to this particular question and also how he sees the company evolve from here on.
This has been a very similar approach which we had been doing from the inception.
Right.
From 2005 to 2020, we invested in multiple diversified portfolio, creating more and more value across the supply chain. So you beat specialty alloy, carbon steel, and other energy businesses and also intact in this same company where, though we are consuming the power captively, but we had been always very pro-cost,
Right.
So the concept is like, we have to create a diversified portfolio, number one. Number two, we start with a very initial startup to learn the business, and the business scales after 2-3 years.
Right.
So this has been the major strategy on our side from inception. And we believe we have to create something very exceptional as a company. And if you see the record of 2005 till 2020, when most of the company was struggling,
yeah.
Our company, Shyam Metallic, was growing at double-digit, more than 20% CAGR.
Okay.
So this has been a strategy, where we see that, we don't have to just invest in one vertical, but in the multiple diversified portfolio in metals.
Right.
Because I believe this is all the same, and the process are same. And where we see that, there is a scalability and there is a good tailwind in the time to come,
right.
we invest in the business.
You're talking about the cost side. What about the cost of power? I believe you have a bit of an advantage. So if you could give us those numbers, what is it and how does Shyam Metallics move on that front?
Today we are operating almost close to 600 megawatt of power.
Okay.
We have a cogen and we have a coal washery.
Okay.
So most of the fuel what we utilize is, from the rejects.
Okay.
So it's almost, I can say very proudly, like we are almost a zero discharge plant where, we try to utilize all the rejects and the waste which comes from the plant for our power generation. And since it has a cogeneration combination, our cost of power is lesser than 2 rupees 50 paisa.
Which is much lower than what the grid offers.
Yeah. So grid is today, 6 rupees, 7 rupees.
On the diversification part of things, what we have right now is the steel. We know you want to foray more into stainless steel, which is going to be interesting. Aluminium as well as wagons. Any other plans with regard to diversification, or this is more or less the verticals and you will build from here?
See, majorly I would say these are more the verticals.
Okay.
Like, stainless steel, we just started a couple of years before. We acquired a plant through NCLT.
Right.
And today, our run rate from that plant is close to 120, 130 crores per month.
Right.
So we want to enhance the run rate to close to 600 to 700 crores per month.
The street is very interested with regard to this point on stainless steel. The reason I say that is because, the industry currently is roughly around 5-6 million tons approximately. Nameplate could be a little bit more as well. And you have one large player in there. Now you're looking to be the next big formidable player. From around 150,000 tons, you're talking about 750,000 tons. What do you think? You're going to be replacing the current smaller players, or do you think the imports that are coming in there, that's giving you enough scope to go in there and scale up this business?
See, the market is growing.
Yeah.
If you see the stainless steel market is growing very fast.
Yeah.
There is no much competition in this market. And the second is, because since we are in metals, we see a lot of value we will be able to put forward in this business.
Right.
So I'm very optimistic because, if we are able to target 10 to 12% of the market share, that is going to be a good value in next 3 to 4 years.
Well, sir, scaling up capacity is great, but it comes at a cost. And you've got an ambitious plan of close to around $1 billion in terms of capex. You're saying you're going to be debt-free. Is there some equity issuance that you're looking at, or will all of this be done via internal accruals?
See, Nigel, if you see in last 4 years, we have capitalized almost close to 9,000 crores. And when I'm talking for next 5 years, 9,000 crores, it's actually extremely, conservative, prudent.
Okay.
So personally, I don't see any challenge.
Okay.
So we are very comfortable and we are going to utilized from our internal accruals.
But Mr. Agarwal, that doesn't answer my question. Will you be looking at some equity issuance? Will that be some raising of money via equity?
There's a lot of interest from international funds and all.
Okay.
But at present, we don't have such requirement.
Okay.
But in the interest of the company or the shareholder, if we see certain thing is going to add bigger value, we might look for.
Has there been any strategic investor from overseas that's looked at coming and taking a chunk of Shah Metallics?
We are very choosy on the investor side, and also we have to also see the interest of the shareholders, because we have to dilute the equity. So we have to see the best combination.
So the way you would put it is, as of now, there is no need of raising funds.
Not at all.
There is interest that's coming in there. But you'll have to take a call with regard to when you actually want to do that.
Perfect,
is that fair?
Perfect.
Is there any inorganic growth that you're looking at from Shah Metallics? Because you've been doing some smaller acquisitions and you've been scaling up those businesses as well.
Basically, I would say we have a lot of expansions and growth, organic, which is going on.
Okay.
So presently, it is not very serious on the table, but yes, as a businessman, as an entrepreneur, we always look for a growth and all. So focus 90% is going to be organic, in the same space and in the same product and the same value chain what we are doing.
Let's focus on another aspect. Currently your market capitalization is close to 26,000 crores odd. You're doing an EBITDA number of around 2,300 crores approximately. But you're saying that EBITDA number goes up from 2,300 crores all the way to 6,000 crores. So could you tell us, what kind of valuation you believe that Shah Metallics should be trading at, when your EBITDA goes actually to that 6,000 crores?
See, if you see in last 4 years, 300 rupees, our stock value is close to more than 950. It's more than 3 times.
Yes.
So when I'm saying today from 18.5 to 45,000 crores revenue, what we are targeting. So I see there's a lot of opportunity on the valuation side, because earlier it was more on the commodity steel side, but in last 4 years, if you see, we are penetrating more on the B2C, more value addition, more niche product.
Right.
So definitely there's a lot of upgradation on the rating, which is due, I personally feel. And the trust and the perceptions, the shareholders, what they were having 4 years before and now, they're also seeing what we committed, we delivered more than that.
Right.
So I'm very optimistic. We see a great value down the line.
You're saying the stock is up 3 times since the times you listed. Do you think in the next 5 years it should be up another 3 times? Going by what you've laid on the table.
It's difficult for me to say 3 times or 5 times, but I still see it's a great opportunity, because the company is doing very well. And in the toughest time, we had been growing. And if you see in last 4 years, from 6,500 crores revenue, we have gone to 18,500 crores revenue. So this is, the trajectory group, what you are seeing in the past of 4 years, and before also we had been growing. So yes, I'm very optimistic.
As you said, you've already moved to around 80,000 crores of revenues. Now, post this expansion, you're going to have big verticals with 10,000 crores each of revenues.
Perfect.
Do you think at some point of time you'll actually want to have more listed entities from Shah Metallics, maybe a different vertical for carbon steel, maybe stainless steel, and maybe other products?
This is in one of the thought ideas, but it's too early, too premature for me to discuss on this. But yes, if we see that our investors, our shareholders are going to get a better value after, this demerger and all, might be we think of evaluating this after 4 or 5 years, but not before 5 years.
All right. Well, the management of Shah Metallics sounding extremely optimistic on taking that EBITDA number from 2,300 crores to more than 6,000 crores. They're saying probably they could look at a demerge in the next 5 years as well. And they've seen various interests coming in from both foreign funds as well as strategic interests coming in from foreign investors. We'll have to see how that goes. For the time being, the stock is enthused. The big outperformer from the metals pack up close to around 4% as we speak. Well, on that note, though, we'll wrap up on this edition of Chartbusters. You stay with us. The team of Trading Hour comes up next.
The one.
Good morning, you're watching Trading Hour. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Patakia. Joining me as always is Ritu Singh. Well, the market started off on a lower note, on a negative note, on expected lines considering the developments in West Asia. But there has been a significant recovery from the lows of the day. Yet again, the 24,000 mark, the bulls have managed to defend that level, at least as of now. And we are back above the mark of 24,100, and aiding that recovery is the Nifty Bank, which had almost turned positive at one point of time just a few minutes ago. But that has also seen a very, very significant recovery from the lows of the day. Earnings season has just begun. Numbers starting to come in now. The action will pick up as we go into midweek. So there is a lot to watch out for. We'll, of course, discuss the earnings expectations as well on the show. But Ritu, well, not as bad as feared, and you'd possibly take that at least in the first couple of hours.
That's, spot on, Hormaz. I mean, the markets clearly have been looking west for some of the cues. But, as domestic earnings pick up and some of these numbers are looking good, the numbers we've got so far, hopefully that perks up sentiments. We've already seen some bit of a recovery in the last hour of trade. But you do have Brent that's hovering around 80, and that's not good for India, for the markets, for the macros. The rupee has been under pressure as a result of that as well. And look at the anxiety index. The volatility index has spiked up almost 8.5% on the back of this. But that said, the market breadth, it's pretty even, Stephen, although there are more stocks that are declining than they're advancing. The Bank Nifty made a bit of a recovery, but it's still trading with cuts of more than 70 points as we speak. And for the frontline index, it's an 80-point cut as of now. Let's see if that picks up later in the day today. But, there's broad-based sell-off as a result of this, barring the IT pack and the PSU Bank, which is doing relatively better than the rest of, the pack there. But metal, realty, FMCG, pharma, all of that under pressure. But let's put the spotlight, as always, on individual movers and shakers, and Hormaz is standing by with that list.
There are two good things that have happened since the start of the trading session. Yes, we opened gap down. Yes, we made a low on the index as well, around about the 24,000 mark. But the first good thing that has happened is that the Nifty has managed to defend the 24,000 mark, at least as of now. So 24,020 is somewhere around those levels is where the low has been made so far. And we have recovered around about 100 points from those levels. The other good part is the fact that the Nifty Bank has led the recovery, yes, but the Nifty Bank also managed to defend a very important support. 57,496 was the intraday low that the Nifty Bank made, and it has recovered from those levels. So again, 57,500 turning out to be a support for the Nifty Bank, and it is now closing in back towards the 58,000 levels where it had closed last Friday. So after that 1,600 point sell-off mid last week, the Nifty Bank has been on the recovery trajectory and has performed far better in comparison to what the Nifty has done. Earnings reactions today are mixed. Just Dial, of course, is the star of today's session. 15% higher on the stock, the biggest single day gain in 2 years. Incidentally, it was on the 18th of July 2024 that the stock had gained 20%. Avenue Supermarts, of course, weak results. They were already almost priced in during the business update, so another 2% gone here today. And Aventel has also done well in today's session. But take a look at the updates as well, the business updates. Fino Payments Bank is up 12%, yes, and 63 Moons as well, trading with gains of around 11% in today's trading session. The one stock that is contributing to the recovery today on the Nifty is TCS. It managed to meet its expectations in the first quarter. The stock came off the highs on Friday, sparked a rally in the mid-cap IT space, but today it is holding fort, 3.5% higher on TCS. In fact, it has also been included in the Kotak model portfolio today. Of course, they have gone on to clarify that also does not mean that they have turned bullish on the IT space. But since we are on the IT space, the one stock that stood out on Friday was Zensar Technologies, and not Zen Technologies, but I meant Zensar. That stock is up another 5.5%. 6% in today's session as well. Kalyan Jewelers, well, another day of gains as well, 8.5% higher in today's session. So Zensar is up 7, Kalyan Jewelers is up 8.5, and Muthoot Microfinance too. After that very strong business update that it gave on Friday, and the stock went up 12-13%. That stock too is extending its gains. Muthoot Microfinance was the stock, not Muthoot Capital. Of course, that's another 3% added in today's trading session. Housing finance companies is a bullish note that has come in from Morgan Stanley earlier in the day. The 3% 3% higher on Home First, 4% higher on Aptus Value, 1.5% on HUDCO as well. So good going for a lot of these housing finance companies. And lastly, stocks at 52-week highs. A lot of small cap names that are doing well. Hester Biosciences is in a 20% circuit in today's session. The top gainer on the small cap index. Novartis is doing well, a 12.5% higher. Sham Metallics, of course, Nigel spoke to the management, and that exclusive conversation, you can hear that all day long on CNBC TV 18. The stock doing well as a result, 4% higher at a 52-week high, Ritu.
Well, there's so much action in individual stocks. Hormaz, thanks very much for running us through that list. Kalyan, Zensar, I mean, look at those names gaining day after day. But let's zoom in on another such stock, Just Dial. Now, that's gaining in trade today because the company has named a new CEO and CFO. The leadership shakeup comes alongside a very steady first quarter show. Vinny joins us now with all the details. Vinny, it's the leadership change on one hand. This is the best top-line growth since COVID that the company has posted.
Absolutely, a very, very strong top-line growth that the company has seen coming in 8 consecutive quarters on a sequential basis that the company has managed to see a double-digit growth. So after 8 quarters that you're seeing such a strong growth coming in. So good growth, good revenue growth on a sequential basis as well. Margins slightly lower on a quarter-on-quarter as well as on a year-on-year basis. This is due to higher employee costs. Margins have come in at 26.7%. Now, apart from that, like you mentioned, what we're seeing is a leadership transition that's happening. BSS Money, who is the founder and MD CEO of the company, for 33 years, is now stepping down from the executive role as on 31st of July 2026. Who's going to come in place of him? Dinkar will be coming in, who is the ex-Flipkart wholesale strategy head. He's been a part of Bain & Co. He's been a part of Accenture as well. So strong background that he's bringing on board and will be taking the role as from 1st of August, full-time CEO role. So that is interesting. Apart from that, the CFO role also. We have Dinesh Taluja, who will be coming in as the CFO of the company. He's the former non-executive director. He's linked with Reliance Retail previously as well. So that he will be taking the role, and this is replacing in July as well. So 2 new positions coming in or transitions coming in on the leadership side as well. And it'll be key to watch out for from here on, given the cash on the books for the company is at around 6,000 crores. Where are they making the investments and what's the strategy from here on will be key.
Vinny, thank you for that update there. Cash on the books higher than its market cap, 16% higher now on Just Dial, continuing to build on to those gains from earlier in the day. The top gainer among the top gainers on the small cap index in today's session. What's also had done well earlier in the day is L&T Finance. Earnings for the first quarter were strong. Stock still holding on to gains of around about 2.5%. So still there and thereabouts is L&T Finance. Ananya is here to do all the number crunching. Ananya.
Well, yes, the stock is rallying following the strong Q1 business update. Now, if you look at the numbers, the PAT is up 29% year-on-year and 12% sequentially. Where earlier they came out with their business update, the momentum was healthy with AUM up 27% and retail disbursements growing 36%. Now, here, if you see margins soften a bit, but stronger fee income and improving credit costs, supported the profitability. Now, today, L&T Finance MD and CEO Sudipta Roy was on our channel where he shared an optimistic outlook on the business front. Now, the key takeaway from the whole interaction was the increasing use of AI across the franchise. Now, he mentioned that AI initiatives have already delivered savings of around 70 crore in the past 3-4 months in pre-delinquency collections, particularly in the urban portfolio, and are expected to improve operating efficiency by 30 to 40 bips while also supporting market share gains. Now, he also reiterated confidence in bringing credit costs down to below 2% over time and achieving 20% plus loan growth under the Lakshya strategy, while maintaining a prudent stance on provisioning and liquidity amid uncertainty around the monsoon and related to West Asia crisis. Now, let's listen into MD and CEO Sudipta Roy.
I think as part of our Lakshya 2031 guidelines, we have guided for a 20% CAGR on loan growth. However, one of the things which is very important is that if we find risk-calibrated sort of scope available in the market to grow our portfolios, we'll probably grow at much faster pace, which has been the case this quarter. As we are sort of navigating through the sort of a possible weak monsoon as well as the ups and downs of the West Asia crisis, it's very premature to, sort of look forward and sort of hazard a guess on what should be the sort of the ideal loan growth during this period. However, I do believe that that 20% number is something that we are pretty confident of achieving. This year, we have been prudent on our ECL modeling. And the fact is that we are now providing more also on stage 1 as our balance sheet is growing larger. As part of our ECL model, we are providing more on stage 1 and stage 2 and also keeping stage 3 adequately provided. If you look at our credit cost has been at 2.54% this quarter, downward trajectory of about 10 basis points, effects of all our credit work that we've been doing, especially on Cyclops, which is live on our 4 business lines and going to be live in our microfinance as well as mortgage business line this year has been showing its results. This will continue coming down by about 10 to 15 basis points every quarter till we reach the trajectory of 2 to 2.2% as committed by Q4 FY27 this year. And as we have committed in our Lakshya goals, we do not stop at 2 to 2.2%. We actually want to drive it further downwards from 2% as part of our Lakshya goals. So obviously in the last 3 to 4 months, we have only saved about 70 crores in our sort of pre-delinquency management exercises, especially in our urban business by using our AI bot calls. We have also sort of deployed a lot of copilots. I would not like to go into granular details here on the call, but I would urge our investors to look at it in an investor deck. Overall, I do believe that, over a period of 3 to 4 years, all our AI initiatives will add somewhere between, 30 to 40 basis points in terms of, OPEX improvement overall.
Bullish commentary there coming in from the management of L&T Finance. We'll do one thing, we'll slip into a short break. But when we return, we'll focus on the bond markets with Manisha Gupta. So stay tuned.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
When the market moves, we don't just report, we decode. From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV18 Market Central, for your daily source of market intelligence and wealth creation, with a commitment to doing it right.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome back. As promised, shifting focus to the bond markets then. Manisha Gupta is here with the latest. Manisha.
Well, thank you so much for that. When it comes to rupee and the bond markets, they would be very, very closely following on what is really happening in sense of Middle East there, where over the weekend we have seen an escalation, and that has taken the crude oil prices higher by 4% on the Monday morning trade open. Also, when you look at the dollar index, that's trading at 101. You have US inflation data this week, and that is what the street will take further cues for. For the very close home at bond markets, it is going to be about 9 states which are looking to raise $248 billion via bond sales on Tuesday. But apart from that, there are various private issuances as well which are in the market today and tomorrow. Let me take you through that. And within that list, you have Globe FinCap coming in first. They're looking to raise 3 billion rupees, and they are doing it via issuances of 2 bonds with different maturities. The bidding for that is today. For today, it also is about Acme Fintrade, which is looking to raise $250 million. They are doing it via 2-year bonds. You have Nomura Fixed Income Securities Limited, which is also looking to raise $3 billion into the market, and they are doing this via issuances of bonds which are maturing in 2028. And then there is Incred Financial Services. They're looking to raise nearly $1 billion, and they're doing it via reissuances of bonds, which are maturing in 2028. And then finally, the last company that is looking for bids today is Tata Power Company. They're looking to raise nearly $15 billion. They are doing it via reissuances of 5-year bonds, which are maturing in 2031. I have a short list of companies which are issuing bonds tomorrow as well. Within this, you have Vagoli Estates looking to raise $2 billion with the issuances of bonds which are maturing in 2029. And then you have Mizo Capse, which is looking to also raise up to nearly $1.5 billion with reissuances of bonds which are maturing in 2031 therein. Interestingly, what the markets are also looking at with a lot of hope is now towards Bloomberg, because what we have seen in the previous week, that Bloomberg has now facilitated first electronic trade in India government bonds via its terminal. What it does is it internationalizes the Indian government bond markets. It allows also the FPIs to execute transactions in the domestic and international banks via a single electronic platform. The offering, of course, is the part of Bloomberg Electronic Markets, and it also provides FPIs with an end-to-end automatic window. And finally, investors can also access liquidity from domestic as well as the overseas banks via this.
Manisha, thanks very much for bringing us that update. Now, that's all about the bond market. We'll move on to some of the interesting takeaways that have come in from the HDFC Bank annual report. And there are two things we'd like to highlight. One, of course, is on the headcount. And two, the other question that the street has been asking about, governance, which has been addressed yet again in the letters from this annual report. Now, first on the headcount, this is actually the first time in 9 years that the headcount at HDFC Bank has fallen by more than 3,000 employees in FY26. And the employee count now stands at about 211,000, down from about 214,000 in the previous year. Why? Because, the bank is deploying more and more technology, and therefore it is able to redeploy talent from the back-end functions to more customer-facing roles. In fact, in the annual report, you have the CEO, Sashi Jagdishan, talking about how technology-led efficiencies are enabling this kind of a redeployment, and it's increasing productivity across retail assets, trade operations, raise customer standards, respond to customer requirements much faster, and so on. The other part, of course, is a significant portion of the letters from the chairman and the CEO being dedicated to the governance concerns that were raised by the exit of the former chairman, Atanu Chakravarti. Sashi Jagdishan saying that the bank faced a very challenging event with the resignation of Atanu Chakravarti. And he also went on to say that the resignation letter, which had raised questions about governance standards, saying, happenings were not in congruence with his personal values and ethics, did not find any merit in the law firm review that was done covering the 2 years preceding Chakravarti's resignation. Again, you had Keki Misri, who's the interim chairman, reiterating, to sort of put these governance concerns to rest, saying, yes, there had been a lot of speculation about governance standards, but that the bank has acted very swiftly, and he hopes that that will address some of the concerns. Also ended by saying that, this law firm review gives them sort of a clean chit, and they're fully committed to maintaining the highest standards of transparency, and anything that comes up in future that warrants review or attention is going to continue to receive careful consideration. So that's as far as the HDFC Bank annual report is concerned. We'll slip into a break for now, but when we return, we'll be joined by Gautam Duggar of Motilal Oswal Financial Services on their earnings estimates. Stay tuned for that chat.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
ए दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया.
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी. सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना. सॉरी सर. सर आपकी ग्रीन टी.
थैंक यू दया. गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई.
अंडा सर्कल हाँ आया.
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का. उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया. शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था. सब
Welcome back. The market's still in the red, but able to continue, comfortably hold up against the 100-day moving average. So now at 24,148, the 100-day moving average 24,19. That's the rate we're looking at. The Bank Nifty as well. There had been a bit of a recovery at the start of the show, around 11 o'clock, but now again we're seeing this downward pressure. 57,922 is where the Bank Nifty is at. Let's do one thing. We'll quickly get in Somil Mehta, the head of retail research at Mirae Asset Sharekhan, who joins us for a quick technical check of the market. Somil, what are the near-term levels you'll watch out for the frontline index, for the Bank Nifty, and any stock picks that you have, for us today?
Good morning to everyone. Markets are range-bound. Markets have been in range-bound for a little while. We saw a breakout above the range just for probably 2 or 3 trading sessions, but that failed again. Last week, we saw a very sharp reaction downwards from the 200 daily exponential moving average, which is a caution sign right now. However, markets are still in the range between 23,800 and 24,200. Again, the resistance on the upside is 200 daily exponential moving average, which is 24,400. So my view at this point of time is range bound to a little cautious. If we close below the 20 and 40 daily moving average, which is around 24,000, 20 daily moving average, and 23,900, which is 40 daily moving average. If we close below this averages, then probably I'll get a little more negative from here. But at this point of time, range bound to cautious for Nifty. Bank Nifty, again, very range bound between 57,000 on the downside and 58,600, 58,700 would be the resistance, a very, very crucial resistance. My view is negative to a little cautious at this point of time. The reason is the momentum indicators on Nifty and Bank Nifty both are in selling mode at this point of time. I'll be expecting this range bound correction to complete and then again, break on either side. But at this point of time, cautious. I have 2 stocks on the buy side, and I'll be expecting these stocks to do well in the medium term outlook. The first one is MFSL. MFSL has broken out of a range on the hourly charts, taken support at 200 daily moving average. Good support around those levels. Stop loss would be 1618. Target would be around 1720. The other stock is United Spirits. United Spirits last month broke out of a huge basing out pattern, trading about 20, 40, 200 daily moving average. Great setup here. I'll be expecting short to medium to be medium term to be very good for the stock. Stop loss would be 1370 and targets would be 1440.
Somil, pleasure having you today. Thank you for joining in with your views on the index and your specific stock recommendations as well. Max Financial and of course United Spirits. But well, after TCS is doing well in today's trading session, what's also doing well is HCL Tech. And while TCS managed to meet its already subdued expectations, a lot of hope lies on HCL Tech as well. Has generally been the outperformer among the large cap IT names, 3% higher today as well, ahead of its results that will be reported after market hours. Rima is here with the expectations from the street. Rima.
Well, expect a soft quarter from HCL Tech this time. Dollar revenue growth seen lower by 1.5%. If you remember, Q4 was also a very weak quarter for the companies. Their top line declined by 3.3% sequentially because of budget cuts at telecom companies. There were 2 SAP project cancellation, and the management had indicated that some of that will spill over into Q1. And plus, there is that AI-related deflation, which is eating into the books of IT companies. So put all of that together, the street is working with about a 1.1% decline in revenues on a quarter-on-quarter basis. Margins, though, for the company could inch up because in the prior quarter, there was a restructuring hit of 122 basis points, which will not be there this time. And plus, we've got that currency tailwind. Profits should be up about 2.5%. I think the key is, will the company hold on to its revenue guidance of 1 to 4%? What analysts point out that after having a weak Q1, a soft start to the year, the ask rate in Q2, Q3 and Q4 will be very high, 2.5% to achieve the middle of the guided range. So therefore, there is a possibility that the upper end, so 1 to 4% is the current guidance, the 4% could be brought down to 3.5% or maybe even 3%. Another number to track very importantly will be the advanced revenue number. What the company said in Q4, it stood at $155 million, and even the deal win trajectory, because just last week, the company won a very large $1.1 billion net new deal, which got the street very excited.
All right, so keep your eye out for HCL Tech's earnings later today. Rima, thanks very much for bringing us what to expect. We'll slip into a short break. When we return, we're going to be joined by Gautam Dugar of Motilal Oswal Financial Services on earnings estimates. Stay tuned.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ये दया कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। चॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
Welcome back, and it's the start of yet another earnings season, and this time around the street is pricing in some subdued expectations so far. But what is Motilal Oswal penciling in for the quarter? Gautam Duggar, the Managing Director and Head of Sales of Institutional Equities at Motilal Oswal Financial Services, is joining in. Gautam, good morning. Thank you for taking out time. You know, the previous few quarters have disappointed, to say the least, on the earnings front. Is there a change in trend that you are anticipating? Because from what I can gather from your note, if you exclude metals and oil and gas from your coverage universe, you're expecting a profit growth of 11% and an EBITDA growth of 7%. But including them, the growth is still pretty subdued.
Hi, good morning or rather good afternoon. Thanks for having me here. We are expecting a very, I would say, a decent quarter. If you look at aggregates, there is a disproportionate impact of the losses from OMCs. So at an aggregate level for the 380 companies that we cover, the earnings are expected to decline 3%. However, if you exclude those 3 OMCs, the growth is 14% for the rest of the 377 companies. I'm talking about profit after tax. For Nifty, we're expecting about 10% growth. And then for the different cohorts of the coverage, that is large, mid, and small cap. In large caps, we are expecting about 13% growth ex-OMC. In mid cap, about 17%. And in small cap, at about 20%. So small cap is turning around after a long time. Mid cap continues to do well. It's been outperforming large caps on earnings for last 8 quarters. And this quarter will be no different. And large cap is somewhere there about 10-12%. So if you look at the aggregates, the impact is largely owing to the losses for OMCs. If you strip out those 3 companies, the growth is pretty decent at about 13-14%. In fact, the top line growth is at a 4-year high now. We're expecting a 17% top line growth. So clearly the return of inflation, the nominal GDP growth going into double digits, some of the high frequency data points that we have seen, be it GST, the credit growth, all of that is pointing towards improved demand conditions in the economy. And we expect the subsequent quarters to become even more stronger. In fact, after 2 years of flattish earnings performance, this is the first year where we are expecting a double-digit earnings growth for Nifty at about 13-14%.
Okay, Gautam, hi. This is Ritu. That sets us up nicely for some of the specific comments to get in from you. And let's start with the big one, banking. I mean, everyone from HDFC, ICICI, Kotak, Axis, they're all reporting numbers this Saturday. So far from Indian Bank and L&T Finance as well, we've seen good commentary, very good numbers, in fact, from Indian Bank. How should we extrapolate that to see, what kind of growth we can see? The credit growth numbers at 18.6% running at that 2-year high. Looks like a good setup.
Yes, financials will have a decent quarter, but our preference there, and in fact, the growth is also higher on the non-bank side. In fact, within banks, we are expecting private banks this year to perform well. And particularly this quarter, we are expecting mid-size and small-size bank to outperform large banks. We're expecting on aggregate for banks a 10% earnings growth. But within that, the mid-cap banks on private side, we're expecting 30% plus growth. Large caps will have a very flattish kind of an earnings growth this particular quarter, but subsequent quarters we are expecting the trend to improve. So on a full year basis, if you look at the total private banks as a cohort for our coverage universe, we're expecting close to 20% growth. But the real excitement and the alpha on earnings stands with NBFCs, both on the lending and the non-lending side. In fact, non-lending, we are expecting another strong quarter across the board, be it large, mid, or small caps. Non-lending also has been doing pretty well for the last few quarters. We're expecting that trend to continue. So, in fact, on the lending side of NBFC, we had seen a 30% growth on earnings last quarter. This quarter also should be close to 25% plus. Non-lending should be close to 20%. So, which is where we are more excited, the mid and small size private banks, and then NBFC, both lending and non-lending. Large banks, while they will continue their steady performance, the growth kicker is there on the rest of the segment.
While Ritu gears up for yet another busy Saturday, TCS, some flashes at the bottom of your screens just a few minutes ago that they have signed expansion of their collaboration with ABB, the multi-year, multi-million dollar deal that they have signed. The stock has now moved to the highs of the day, 4.5% higher now on TCS. And since we are on this subject, Gautam, TCS had practically zero expectations this time around, and it has managed to at least meet those subdued expectations. The long-term trajectory is still uncertain when it comes to clarity on deal wins and so on. Does the same go on for its large cap IT peers as well, or do you expect an outlier in the form of HCL Tech or Infosys? Or do you believe that the mid-cap IT segment, the Persistence and the Coforge will emerge as outperformers yet again this time around?
We expect mid-caps to emerge as an outperformer yet again, which is where we are positive. Large caps, irrespective of the results, a commentary on the impact of AI, the AI deflation, the kind of order books that they are seeing, because we have still not seen deflation in the revenue. So going forward, if we see flattening out or some sort of a deflation in revenue, that's where I think the market will be focused more on. Having said that, the valuations have corrected a whole lot. In fact, we're talking about a trailing 14, 15 Ps now for the large cap segment. So clearly there is a value. When that value gets unlocked remains to be seen, because there is lots happening on the AI side and commentaries of managements are changing every 30, 40 days. So let's see. Clearly there is value in that sector.
Gautam, what about the automotive space? The sales numbers that have come in so far looked strong overall, but profits have been weaker in the first quarter. Typically, what are you expecting? I think your report says about 5% growth only because of all the commodity price action.
This is well known, Ritu. We have all seen the impact of commodity prices last quarter. So this quarter is going to reflect that impact in terms of numbers. So while the top line is strong, you will see impact on margin coming through this quarter. This quarter should have a very flattish kind of profit growth for the 28 automobile companies that we cover. Having said that, we have raised our weight in our model portfolio and automobile sector further. We expect the continued strong volumes to now get complemented by the reduction in commodity prices, which should reflect in the profitability improvement going forward in the rest of FY27. We have M&M, TVS in our model portfolio. On the auto ink side, we already had Happy Forging. Now we have added Gabriel. So we are very positive on automobile and even the other consumer discretionary sectors, which is where we have a big overweight in our model portfolio.
Gautam, beyond what we just discussed, is there a sector that could emerge as a dark horse this time around on the positive side? And is there a sector that you are watching with a lot of caution this time around? Does capital goods fall into that category, especially considering the concerns that are surrounding the sector that have emerged over the last month or so and the run-up that these stocks have seen as well?
Yeah, so definitely capital goods, I put caution not because of the business, but because of the valuations. The stock has had a phenomenal run-up, especially on the power side, those which are a play on AI, data center kind of a boom. So earnings are there, very strong earnings, not just for the quarter, but for the next 2 years also. In some of those stocks, we are projecting 32-35% kind of an earnings CAGR. But stock has had a phenomenal run off late, and therefore from a near-term valuation point of view, they look fully valued. So there could be some time correction. There could be some price correction also, who's to say, because the last 3 months have had a very good run up there. On the dark horse side, I'll keep my eyes on real estate because that sector has languished for a long time. Of late, we have seen some rally out there. But this is a space which I'll keep an eye on because the sector has gone out of radar in the near past. Aside of that, we continue to like consumer discretionary. We have a big overweight there. We like the non-lending and capital market side of the NBFCs. We are very positive on telecom, select healthcare names. We are underweight on staples, obviously. We have a zero allocation to FMCG that continues. IT remains an underweight for us, so is commodity. So that's how we've placed. But I think the real game in FY27, as far as the earnings are concerned, is going to be outside of Nifty. And that's where I think the money-making opportunities also will emerge. India's become more of a bottom-up market of late. The last 2 years, we've seen earnings been flat top-down, but there have been many stocks, many sectors which have delivered 20% plus kind of earnings compounding. We expect that to continue. And therefore, in this quarter's model portfolio revision, we've shifted roughly 700 basis points of weight away from large caps towards mid and small caps, because we think in every big cohort of India, whether consumption, financials, tech, industrials, or healthcare, the big benchmark stocks have started growing in a very modest manner, whereas the real growth is coming from the niche plays in the respective domains. So while you have a positive view on a particular cohort or a sector, it's very important which particular stock you are selecting to benefit or capitalize on that growth.
Gautam, out of time, but such a pleasure having you here, and thanks for giving us that great summary of what to expect as we head into the earnings season, and hopefully some of those FII flows that have started to come back from June also sustain on the back of that momentum. Thanks very much, Gautam, as always, for your time. We'll do one thing, we'll slip into another short break. Up next, we're going to discuss market fundamentals with Devang Mehta of Spark Capital Private Wealth.
ए दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला।
Welcome back. The index continues to hold above the mark of 24,100, still around 70 points lower on the Nifty. Good time to bring in Mangalam, who's at the FNO desk, to tell us the latest trends. Mangalam.
If you look at it, the Nifty is down about 1/3%. The Nifty mid-cap index down about 1/3%. So is the Nifty bank. We're down, not necessarily out, but there is still uncertainty, which is why the market's not running off to the races despite recovering from the lows. And the fact that there is uncertainty is best described by the volatility index, which is up around 8% right now, holding above the level of 13. Remember, we had last week pointed out when it fell below the level of 12 that the market is pricing in a fair amount of complacency. And now we're moving towards pricing in the geopolitical uncertainty that we're in right now as well. The only, good part about all of this right now is the IT pack, which seems to have put a bit of a bottom in place. And we've seen strong outperformance. The TCS stock is up 5%, Infosys up 2%. We're seeing good traction in HCL Tech and Tech Mahindra as well. All of them have protected the lower end of the market because that index is a fairly weighty index on the frontline Nifty that we're talking about. Today's low on the Nifty also coincides with important supports that we're looking at. 24,000 is today's low, 24,020 is the 100-day moving average, and 20-day moving average is 24,044. The important part here is that over the last week or so, with the recovery in the market, the 20-day moving average has moved above the 100-day moving average, which does indicate near-term bullishness for the frontline index. And so long as the Nifty Bank holds its 200-day moving average, we don't really have a big problem for the market. Today's low on the Nifty Bank, slightly above the 200-day moving average, so no problems out there as well. But on the way up, there is supply. Why do I say that? Because while we've seen writing at the 24,000 put, 24,100 put telling you today's low would be protected, we are continuously seeing the 24,150 call and the 24,200 call being written as well, telling you levels upwards of 24,250 to 24,350 on options that expire tomorrow. We will see some bit of resistance. And amidst all of this, the put-call ratio too has inched all the way up to 1.41. Typically, around 1.25 to 1.35 is where the market is slightly overheated. So 1.41 won't make bulls feel very, very comfortable.
Mangalam, thanks very much for bringing us that update from the F&O desk. Good time to bring in Devang Mehta, joins in from Spark Capital Private Wealth to discuss market fundamentals and his top sectoral picks. Devang, thanks very much for your time here. Since we were just talking about earnings and, we've started with a decent set from as far as the banking space is concerned. Let's begin there. Do you expect NBFCs to see a bigger rally from here compared to banks? And what are you expecting in this earnings season from them?
Thanks, Ritu. Thanks for having me on the show. I think, yes, clearly this is one segment which ideally should do well. And when I talk about banks, I'm talking about the entire BFSI space as such. We all know that over the last 3-4 years, generally the private banks have underperformed. Some of the PSU banks had come to the fore and cleaned up their balance sheets. A lot of these companies are now coming out clean and are also, if you look at the lending cycle, that's also on the uptrend. Yeah, if you look at the credit growth for a lot of such banks, two things. One, the real numbers of some of these banks and also the updates that were provided provide a bullish scenario. The second sector which you talked about is NBFCs. Of course, I think most of these NBFCs seem to be in a sweet spot, courtesy 2-3 things. One, of course, the capex cycle has started to move. The second, yes, of course, the consumption updates that we saw this quarter and even last quarter. I think there are a lot of positive sounds and noises around it, be it discretionary consumption, it also be it a little bit bottom of the pyramid, non-discretionary consumption type of companies. I think it augurs very well. Look at autos, look at watches, look at jewelry, look at also companies, as I said, the bottom of the pyramid type of companies where a lot of such consumption has started to take shape. I think even the monsoon that was a culprit has also seen a bit of recovery in its fortune. So my sense that this sector probably is a good proxy play to play the economy. We also seen the corporate profits to GDP rising in the last quarter, which is around 5.2%. This has risen 2.6x over the last 6-7 years, which is something extremely good. I'm not talking about this sector, but overall for the markets as well. So I think, yes, credit growth, banks, financials, I always talk about the quasi-financials or the capital marketplace. They should also do well on the back of a lot of penetration and density rising for the financial marketplace as well.
Devang, good morning. Thank you for taking out time. You know, the metals are also one name that have been swaying after the outperformance that you saw at the first half of the year. There has been some underperformance that has come in because of the strength of the dollar, fears that the US Fed will eventually go on to hike rates and so on and so forth. Aluminum prices are also correcting in the global markets as well. Is the best done for the metals at least for the year, or do you believe that this underperformance that you have seen recently can turn out to be a buying opportunity going forward?
I think generally what has happened in the metal sector is, I think it was a stupendous performer last 2-3 years when your overall markets were actually not doing well and a lot of sectors underperformed. I think what I'm seeing in the last 4-5 months, precisely since the onset of the war, and of course there are a lot of narratives around it, is that there has been sector rotation. I know it's a buzzword right now. There is a lot of sector rotation that has come to the fore. Probably, I think more and more money is now going to chase companies or sectors or themes which are more domestic centric, where India calls the shots. Very typically, as I always talk about, a lot of capex oriented companies are companies which are in engineering, manufacturing, companies which are in capital goods, infrastructure, companies which are part of the consumption universe, and also companies which benefit from credit growth. And at the expense of being repetitive, I'm saying that somewhere if there is global linkages where there's a lot of global volatility. As they say, change is the only constant. I say that volatility is the only constant across the global arena as well. So my sense that it is best that someone takes it as a trading play, but someone who wants to probably compound their money in the next 3-5 years at a decent rate, I don't think metals, IT, all this qualify as great buys. Yes, they probably can be good tactical buys in the portfolio, but as I said, the themes that I mentioned earlier are more in a way structural rather than cyclical.
Got that. Not going to make money from metals and IT. You think, Devang? Quickly, a word on the jewelry space. I mean, Kalyan Jewels is one stock that's just going up and up. I mean, in July so far, it's up 31%. Titan as well posted a good business update as well. Your view on the sector, how the valuations stock up, and if you see further upside from here.
I think, yes, this sector seems to be all doing all the right type of work, because what we have seen is Titan has been just exemplary. You saw the correction in the stock, not now, but even during COVID times, right? The stock had reached a 3-digit type of a figure. But all these companies normally do bounce back. As we know, the aspirational Indian probably wants to buy more and more, maybe jewelry or more and more into watches or higher end, upper end type of consumption. And I used to always say that what was luxury earlier is now more and more becoming necessity. And India INC probably the Indian consumer wants to spend more and more. So my sense that, and there are very few candidates here, right? So there are auto companies, the luxury ones, some of this, the car selling companies, the SUV type of companies, which see a lot of such sales rising month over month. I think since the GST benefit has trickled in, auto companies have done well. Coming back to the jewelry as well as the watches segment or the segment which is more into luxury, I think this will probably do well. What we have seen is most of this companies, even if the rural stress goes out, I think it will also start doing well. So mostly we have seen tier 1 and tier 2 cities being beneficiaries of a lot of measures taken by the government, infrastructure creation. I think all this is interlinked. So my sense that consumption plays, typically the discretionary consumption plays like this company should keep on doing well.
All right, Devang, thanks very much for joining us here with your views there. Appreciate your time. We'll slip into another short break, but when we return, we'll get you more on the markets and macros. So stay tuned.
Welcome back. Just before we went into the break, we were talking to Devang about the fact that Kalyan Jewellers is one stock that has been on a tear, and today is no different. Fourth day of gains, another 10% added to the tally, and the stock is now up 50% in just 4 sessions. And who better than Mangalam to decode what's happening in the stock? Mangalam.
Well, Kalyan Jewellers, if you're a shareholder on Kalyan Jewellers, the last 4 or 5 trading sessions will have not only the stock but you sparkling as well. Nearly 50% jump is what we've seen in the last 4 trading sessions, but more importantly from last week's lows as well. It's a big move. In the month of July so far, it's up 31%. So that's a massive up move that we've seen. But remember, it comes after a big spate of underperformance over the last 12 to 18 months. From its 52-week high, the stock, despite its up move, is still down about 17 to 18%. And if you look at the last 12 months, Kalyan has actually underperformed Titan by a factor of 50%. Titan's up nearly 37%, whereas Kalyan is down about 12%. And despite this up move, the stock is still fairly below, the price at which the promoters bought. Remember, way back in 2024, promoters bought 2.5% stake from Warburg Pincus at about 535 rupees per share. So it's still a long way off. And which is where I think, people would have looked at the first quarter numbers, where Kalyan Jewellers grew almost as much as Titan, not faster than that, albeit slower than that, and the stock saw a big nosedive. And at lower levels, someone would have said, we have to look at this growth in context of valuation. So at that time, Kalyan Jewellers was trading at around 17.5 times. And after this 50% up move, the stock is trading at 25 times FY28 price to earnings as compared to Titan, which is at 55 times. So at lows, it was actually trading at a 70% discount to Titan's valuations. Even now, if you look at it, it's a 56% discount to Titan's valuations. At peak, Kalyan Jewellers has actually traded at a 38% discount to Titan's valuation. Obviously, it's not Titan, and it therefore plays at a discount, but at peak, that discount was as low as 38%, and right now, despite the up move, it's still about 50% plus. So what are the triggers that we're tracking for Kalyan Jewellers from here? Growth outperformance versus the industry. Barring this quarter, the last 12 to 13 quarters, Kalyan Jewellers has actually grown faster than Titan. Will that continue or not is something we'll track. Expansion via franchise route. They've expanded their stores using the franchise route. Will that have an impact on a better ROIC for them, return on invested capital or return on capital employed for them or not, is something that we'll be tracking. And Candier, which is the CaratLane equivalent of Titan for Kalyan, has actually grown at 112% in the first quarter. Can that outperformance continue for Kalyan or not is something that we'll be tracking. They're growing almost as much as Titan, but the valuation discount is higher than what we've seen in the past.
It continues to glitter, does Kalyan Jewellers, of course, after a prolonged period of underperformance, but the last 4 days have been anything but underperformance. Mangalam, thank you for decoding that for us. And it's time now for the macro signal. June was a record month with bank deposits seeing one of their sharpest increases in decades, credit growth hitting a 2-year high, and commercial paper issuances also surging to the highest level in 55 months. Ritu is here to tell us what exactly has transpired. Ritu.
Well, India's banking system has received an unexpected liquidity boost, or expected even, you can say, and foreign money appears to be at the heart of it. Now, bank deposits have surged by nearly 7 lakh crores in just a fortnight, ending the 30th of June, which is the third highest fortnightly increase that we've seen in 29 years. Now, while quarter-end deposits typically account for part of that jump, you see that every quarter, but SBI research estimates that a significant share of this came from the FCNRB deposit window, along with external commercial borrowings, the overseas foreign currency borrowings, and portfolio inflows, with total capital inflows of around $15 billion estimated. Now, the surge follows the RBI and government's recent measures to attract foreign capital and to strengthen the rupee. The immediate impact of these inflows is already showing up in bank lending as well. So bank credit growth accelerated to 18.6%, which is the fastest pace that we've seen in 2 years for the fortnight ending the 30th of June. Banks extended 3.8 lakh crores of fresh loans during this fortnight, taking advantage of that stronger liquidity. And meanwhile, in the first quarter of this year, the incremental bank credit has jumped to 5.6 lakh crore rupees, which is more than double the number that we saw last year. And it's not just banks, where all the action is. Companies are also borrowing more. So, for instance, Commercial paper issuance rose 19% year-on-year to 5.38 lakh crores in the April-June quarter, while June alone saw the highest ever monthly issuance in 55 months. Now, SBI research says the simultaneous rise in bank credit and market borrowing suggests that economic activity has been stronger than expected in the first quarter. The return of foreign capital is also improving our external position. Now, since the government's measures were announced, India has already received around $7 billion in FII inflows, including, like we told you earlier, about $2.7 billion into bonds through the fully accessible route. Now, RBI's foreign currency assets have also increased by $4.4 billion in a single fortnight. So for banks, this means stronger liquidity and potentially lower dependence on expensive wholesale funding. And that's the macro signal for today. And on that note, Hormaz and I take your leave on this edition of Trading Hour. Thanks very much for tuning in. But stay with us. Halftime Report will take all the action forward.
Reasons.
ए दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
Stocks trade soft following a fresh exchange of strikes by US and Iran. IT and consumer durables notch up gains, while realty and FMCG are the big drags.
The stock of DMart owner Avenue Supermart slips on a slowdown in sales growth in Q1. Cautious management commentary sparks some concern, but several analysts keep the faith.
Brent crude jumps 4% to nearly $79 per barrel on fresh strikes by US and Iran. Fears of supply disruption fuel the rally even as US and Iran issue contradictory statements on the Strait of Hormuz being open or shut.
Neelkant Mishra, Executive Director Designate at World Bank, tells CNBC TV 18 FII inflows should not be expected soon as emerging markets remain a difficult play for investors. He sees earnings revisions as key to drawing flows.
Hello and welcome to Halftime Report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Bhatra and with me Sonal Bhutra. Well, it's turning out to be a session where we are seeing an intraday recovery take place in the markets. So the Nifty now at above 24,150. Remember, the low point of the day for the Nifty today was 24,000. But that's not the case for the Asian markets. So if you just pull up a lot of the Asian markets, it has been a very dull and insignificant kind of day for them. So that is because of the geopolitical tensions. So we have the likes of the Kospi, which was down around 7%. It slipped below the 7,000 mark for the Kospi, and it was the lowest level that we've seen since the 4th of May. Remember that the US futures are lower at this point in time as well, so that would be something to monitor, with the Nasdaq futures showing a cut of over 1% at this point. But we've recovered. Let's see whether we manage to build on this kind of recovery. Hi, Sonal.
Hey, Ekta, welcome back from a holiday, and you've come back to the volatility, coming back to the market. And the West Asia risk is something that markets are factoring in as well. But of course, we have seen a recovery from the lows of the day as well. Ekta spoke about the Asian markets, and India did, or MSCI India index did outperform Asia ex-Japan and the EM index last week. And the recovery that we are seeing from the lows also is an important thing to track. If we talk about the net flows in the market, especially when it comes to FIIs, that is something which has been in the positive territory in the month of July so far. So we started the year with negative flows, 35,962 crore rupees. That is what we saw in the month of Jan. Feb saw a positive number. Then we did see a big outflow of around 1,17,000 crore rupees in the month of March. That became lesser, but again, it was a negative figure nevertheless. In June, it was a 49,340 crore of negative number as far as the FIS flows are concerned. And in July so far, we've seen inflows of 15,157 crore rupees. But as Neelkanth Mishra did indicate in his chat, it's all about earnings, and that is something that the FIIs will be watching out for. And that is something that could keep the flows afloat as well. But we do have a lot on the show today.
Yes, absolutely. And on the FII inflows, just on the cash market, I think out of 7 sessions, we've seen inflows of at least, or 6 sessions, we've seen positive inflows of around 4 sessions at least from the FII stable for the equity market. So that's definitely a positive. But nonetheless, let's tell you about what we have lined up for you on the show today. Tensions escalate after the US-Iran trade, fresh strikes with traffic in the Strait of Hormuz in limbo. Amina Baker of Kipler will connect with us to talk about the ship movement in Hormuz. Sham Metallic says railways and defense will contribute close to 10% of their revenue mix in 4 to 5 years. We'll get you excerpts from an exclusive interview with the management. SmartWorks co-working space has leased out over 930 seats to the India-based subsidiary of a UK-based tech firm. We'll be talking about the new leasing deal with the management of SmartWorks, and a quick update on what are the latest changes in Kotak Institutional Equities model portfolio, and what is Goldman Sachs India strategy going forward. All that coming up on the show.
Okay, all right, let's move on, and it's time for our What's Trending segment, where we are focusing on the market. Kotak Institutional presents a portfolio rejig, while Goldman Sachs makes a case for turning constructive in the current environment. Hormuz is breaking it down for us. Hormuz?
A very interesting note from Goldman Sachs, and the fact that this AI trade unwinding is coming in as a blessing in disguise for the Indian markets. And one of the factors why Goldman Sachs has turned constructive is saying that there is room for their Nifty recovery, for the Nifty to recover to their June 2027 target of 26.5, and that is higher than the recent all-time highs that the Nifty made earlier in the year, which was 26,370. You're mentioning FII flows, and they say that this extreme underweight that foreign investors are on India, that makes way for the flows to return in a big manner as well to the Indian market. However, it only comes with a caveat that this recent flare up again in West Asia could possibly bring in some near-term volatility for the markets yet again. Why have they turned constructive now on the Indian markets? Of course, the fall in commodity prices from 120 to almost 70, a stable currency, resilient domestic growth, healthy earnings expectations for the second quarter, and a potential recovery as well in select domestic pockets as well. So as a result of which, they have upgraded the utilities segment to an overweight. They continue to remain overweight on banks. They continue to remain overweight on energy refiners and the technology, media, telecommunication space, which is the TMT, as they say. They are underweight on exporters and the downstream oil companies, and they are also downgraded select materials to an underweight rating. And based on this, they have highlighted 15 large cap stocks that could possibly do well in the second half of the year. They include the index heavyweights, Reliance Industries, HDFC Bank, Kotak Mahindra Bank, Adani Group stocks, Enterprises, Power and Green Energy, PSU names like NTPC, Hindustan Aeronautics, Mazagon Dock, Power Grid, and of course some other names like Eternal Interglobe Aviation, HDFC Life, Indian Hotels as well. Make My Trip, of course, is not an Indian listed company. On the flip side, Kotak has made some changes to its model portfolio. The most interesting bit is the inclusion of TCS to the model portfolio. 150 bips weightage assigned to TCS, 150 bips weightage assigned to SBI Life as well, a new inclusion, and the weightage of Larsen & Toubro being increased by 100 basis points to 400 basis points. But Kotak has come out with a very specific caveat that the inclusion of TCS in the model portfolio is not an endorsement of the IT sector by any means. They continue to remain underweight on the IT sector as they have been for a very long time as well. Now, to balance these changes that they have made, the investment in ICICI Prudential, which was 160 bips, has been moved to the mid-cap portfolio. Mankind Pharma's weightage for 140 bips has been removed, and investments in DLF has been trimmed to 30 bips from 150 bips earlier, and on GMR Airports to 70 from 160 bips earlier. And some mid-cap changes as well. TRISL and DCB Bank have been the inclusions, and Dixon, Dr. Lal and Info Edge have been excluded courtesy of the recent outperformance that you have seen on all of these names.
Okay, absolutely. Well, thanks, Hormuz, for getting us all of those details with regards to the model portfolio changes by Kotak and what Goldman Sachs' view is on India. But let's talk more specifically about stocks. Fino Payments Bank is buzzing in trade today on the back of a Q1 business update. Ananya is here with more details on why the stock is up around 9%. Go ahead.
Well, yes, the stock is surging today, if you can see on back of the June business update. Now here, if you look at the numbers, new account opening rose 31% year on year, taking the total account base to 1.8 crore, while average deposits increased 11%. Now, digital engagement also remained healthy, with digitally active customers up 22% and Fino Pay active users rising 38% to 8.4 lakh. Now, the biggest highlight was loan referral disbursals, which jumped 3.5 times, supporting the bank's proposed small finance bank transition. On the weaker side, if you see transaction throughput declined 35%, largely due to the ongoing shift from cash transactions to UPI, though the pace of decline has moderated. If you look at the stock itself, it is surging today on the back of this update, extending a 14.4% rise over the previous 3 sessions. It is up 11.9% over 1 week, 11.6% over 1 month, and 14.3% over 3 months, significantly outperforming the broader market during these periods. Now, however, the long-term trends remains weak, with the stock still down 42% year to date and 48.6% over the past year. So the stock is recovering, but the rally will depend on whether the business growth stays strong throughout.
Okay, all right. That is Fino Payments Bank up 9%, but this year itself, the stock is lower by 43%. And that's about specific names, but we do have Vivek, who's joining us now on the wall with all the stocks that are moving around in the broader markets. Vivek.
Well, thank you so much for that. Couple of names that we've discussed, Just Dial, Home First, amongst the top gainers in the session today. But have a look at Kalyan Jewellers. This particular stock up almost 47% in just last 2 trading weeks, and the gains have gone ahead and been extended in today's trading session, higher by almost 9.5%. JSW Infra, after a brief pause, this particular stock has resumed its uptrend, up almost 6.5% in the session today. And Triveni Engineering, remember, there's a significant lever over here. The company has gone ahead and said July 22nd as the record date for demerger of the power transmission business arm. On the other hand, quite a few laggards. Well, can't look beyond ICICI Lombard, one of the top drags as far as the F&O space is concerned. Friday, this particular stock was higher significantly, but today, this particular stock giving up all of the gains that it saw in the week gone by. DMart, again, after the Q1 operational update, the stock did underperform. The results have not been so good, so the stock is down another 2%. Continued losses, especially as far as DMart is concerned. Angel one of the top laggards as far as the small cap space is concerned today. BDL, Bharat Dynamics, increased competition from private players as far as one of the key products that the company manufactures is something that has led to a bit of a worry, down over 3%. And Blue Jet Healthcare, one of the top gainers in the week gone by, post a very strong subscription to the QIP. That particular stock seeing a bit of profit booking today.
All right. Thank you so much for joining us with that list, Vivek. With that, we'll slip into a short break. When we come back, we'll connect with the management of SmartWorks co-working spaces. The company has leased over 930 seats in one of their deals. Stay tuned for that conversation.
Democrats in support.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central.
Providing sharp market intelligence for wealth creation with a commitment to doing it right.
ए दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
ए दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और
Welcome back. You're still tuned into Halftime Report. SmartWorks co-working spaces, that's the stock on our radar. The company has leased over 930 seats to the India-based subsidiary of a UK-headquartered global professional services. To understand the opportunity here and a lot more on the business, Harsh Binani, the co-founder at SmartWorks, is joining us now, and we'll focus on the three focal points: area under management targets, the contribution from Singapore market, and also the FY27 outlook. Harsh, good afternoon. Thank you so much for joining us. Before we talk about the business in general, let's talk about this particular deal. The new 60-month contract adds about 58 crores of the committed revenue as per the press release. How much visibility does your overall contracted revenue book provide for the next 3 to 5 years? And how much of the existing engagement from this particular client has already been recognized in the books?
Thank you so much for having me here. Good afternoon. The expansion of this large global enterprise continues to be a reinforcement of the strength of the SmartWorks operating model. And Sonal, it signifies a much more tectonic shift that we are currently continuing to see at SmartWorks. Look, frankly, 5 years ago, companies were asking a lot about should we build in India? But today the question has changed. How fast can we scale in India? Here is where SmartWorks is really well positioned to continue servicing. And this deal signifies that. The deal started with 930 seats and now it's expanded to about 1730 seats. And what we've seen is that the large enterprises want three things. They want speed, consistency, and zero operational distraction. This is exactly where SmartWorks platform is well positioned. To your question around our contracted revenue, last quarter we had reported a contracted revenue visibility of 5,200 crores. So this current deal will be in addition to that. And at 16 million square foot, which is our current scale is no longer turning out to be an advantage. It is really the compounding engine behind which smart work continues to grow quarter on quarter. And you've seen from our model, 90% of our revenue today is coming from large enterprises, where over 37% of our revenue is from more than 1,000 plus seater deals, which is what this existing deal also signifies.
Harsh, just wanted to, move a little away from this particular business and just ask you about the strategic rationale behind acquiring Work Studio in Singapore. Instead of possibly pursuing an organic strategy, you're looking to expand into the Singapore market. How lucrative is it for you, and when does it reflect in terms of numbers, and how much?
Singapore is a very important strategic market for us because it gets us closer to our customers. A lot of the headquarters of APAC-led companies are based in Singapore. Prior to this expansion, we already were present in Singapore over the last 2 years. The 2 centers that we had in Singapore were profitable and cash flow accretive. This continued to give us confidence to expand and grow in Singapore. So this expansion that has happened currently in Singapore is largely funded from the cash flows that the business has generated over the last 2 years. And given that this was available to us at a very, very attractive valuation, we believe that this is actually going to be a very good move for us to gain time and continue to speed up our expansion in Singapore. So going forward, you will continue to see a mix of organic and inorganic expansion in Singapore. Today, Singapore is about 2% of our revenue, but from a profitability lens, it continues to be more profitable typically than an average Indian center.
So how much more profitable is the Singapore center? How do the business dynamics differ there? And since you're talking about Singapore will continue to be a big part of your business, 2% right now, what do you plan to scale it up to in, say, next 3 to 4 years? Is it just Singapore, or will you be looking at any other Southeast Asian markets as well?
India continues to be the center of gravity. In India, our scale is at 16 million square foot. And just to put into perspective, Singapore is at about 50,000 square foot. So while Singapore will continue being an important expansion driver for us, we are fully conscious that India is going to be where most of the action is. So the 2% revenue you can expect over the next 3 years to double, but India will continue to be a much larger part. And Singapore, of course, will be more profitable than India. But from a relative sense, India is, on an absolute sense, going to be much more profitable.
So you said that you're going to expand in Singapore from 2% to 4%. Is it just Singapore? As I asked, would it be any other Southeast Asian country as well? What is the kitty that you have in terms of capex to do this expansion here?
Our platform continues to be self-sustained. Prior to IPO, we had raised only 500 crores of equity. During IPO, we had raised an additional quantum of 450 crores. And this cash flow strength of our business will continue allowing us to expand from the cash flows from within the business. So from an earmarking perspective, we have a total capital allocation. We don't necessarily allocate separately for Singapore or other markets. Whatever expansion you will continue to see in Singapore in the near term will be funded from the cash flows that the business will continue to generate, while majority of the cash flows will go to fuel our expansion in India.
Okay. So just explain to us, Harsh, how profitable is Singapore as compared to the Indian markets? How much are you making in Singapore, say in terms of margin as well as profit margins, as compared to India?
Singapore typically operates at 300 or 400 bips higher than India. However, I do want to mention that Singapore is only about 2% of our revenue. So from a relative sense, the contribution is not as large as India, but it continues to be a very, very attractive market for us because we are starting to see the network effects play out in Singapore. Indian customers from here want expansion in Singapore. The Singapore customers want more space in India. And it, of course, allows us to continue getting closer to the customers that we have in Singapore.
Okay, so that's about the Singapore business. Harsh, how has Q1 been for you in India? You said 16.1 million square feet of total built-up area. What do you end this year with? What kind of seat addition will you see this year?
As we've guided during our Q4 earnings, we continue to expect 28 to 30% revenue growth. At 16 million square foot, we currently have about 10 million square foot operational. And we expect that by the end of FY27, we will have close to about 13 million square foot operational. Currently, our contracted revenue is about 5,200 crores, we continue to expect this to go up during the course of the year. The two other important metrics that I just wanted to highlight, which this current deal also signifies, that SmartWorks platform is continuing to see large enterprises take large deals with us. So as we speak in FY27, for example, 82.5% of our revenue is already contracted, courtesy these large enterprise deals that we are doing. And the second interesting feature which makes our business very interesting and long duration is the fact that over 30% of our revenue actually comes from clients who continue to expand and scale with us across multiple cities.
Okay. All right, Harsh, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's SmartWorks. The stock is up around 1.4% in today's trading session in actually a market which is a bit weak, but you'd have to say that there's a further recovery in the Nifty. So 24,180 is where we're at. So there's an incremental 30-point recovery which has taken place from the time we started the show. Just about flatline for the Nifty, and the Sensex possibly going to break into the green also quite soon. We'll take a short break, but on the other side, we'll get talking technicals. Stay tuned for that conversation. Ajit Mishra of Religare Broking will be with us.
Yeah, look, Iran is being
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर
Welcome back. Well, it is an intraday recovery for the market, so good time to get in a technical check. Ajit Mishra of SVP Research at Religare Broking joins in to discuss what he's strategizing today. Ajit, hi. Welcome to the show. Well, for the Nifty, now we're at around 24,184. So there has been a smart intraday recovery which has taken place. How would you play the second half?
Good afternoon. So basically what we are seeing at present is that the short-term moving average, 20 EMA, is playing out well. In the last trading session also, we saw that 24,000 is something that Nifty could defend. And today also, we are seeing a similar trend unfold. The good part is that, again, we have reclaimed the 100 EMA mark as well. But the upside still seems capped, means we have multiple resistances to cross. So I believe that the consolidation is likely to continue. So maybe close to around 24,200 mark, where the call writers are still active, we may continue to face hurdle. And once we surpass that, then the long-term average. So when it comes to the index, 23,800, 24,400, broadly, that could continue to be the range that we anticipate the index to trade in. Banking looks relatively better, means in case if we manage to surpass this 58,400, 500 levels, we are set for the next leg of the up move. So that may result in next leg of rebound in Nifty also. IT is definitely playing an important part, but I believe that more of consolidation tone is likely to continue. The focus should be more on stock-specific opportunities.
What would those stock-specific opportunities be, Ajit? What are you betting on?
So BHEL is what we like. Means after almost a month of consolidation, the stock has again reclaimed the short-term averages, and we are seeing noticeable momentum with volumes. So 428 is what we are eyeing as an immediate target area. So with stop at 396, one can go long in BHEL. And then we have CDSL, where we have seen a fresh trend reversal after almost 2-3 months of consolidation. So here 1550 is what we are eyeing as a target zone with stop at 1380.
Okay. All right. Well, Ajit, we have some queries, so let's get going on that. We have Shweta Punj, who writes to us from New Delhi. She holds 100 shares of Swiggy, which she's bought at around 250, and she's asking if she can add more shares for the shorter term. So as of now, she's sitting on a profit. She's asking if she can build on her portfolio for Swiggy. Ajit, what would you recommend to Shweta?
Ekta, the trend is still negative, means though we have seen a recovery or a rebound, but still the trend has not reversed yet. So I would recommend her to avoid any fresh adding, but she can continue to hold her position. Now the buying price should be the stop loss area, means close to around 255, she can maintain the stop loss. And let's say the stock manages to hold 280 levels, then maybe around 290.95 is something where she can consider booking profit. And let the stock stabilize and form a base, and then probably we may see a reversal also.
Okay, so that's on Swiggy. We do have one more query for you, Ajit. Shashank Bhardwaj is writing to us from Mumbai. Holds 200 shares of Delivery at 400 rupees a share and asks if there is more upside to the stock so that he can book profits. His buying price is 400. The stock is trading at 510. What are the charts suggesting?
Sonal, first a disclaimer that we have recommended to our clients also at the level close to around 460, 470 and with 535 as a target area, if I'm not wrong. So we still have that position running, and we believe that the kind of momentum that we are seeing in Delivery is likely to sustain further, and 535 is what we are eyeing as an immediate target. So you can definitely stay put. 495 on the trailing basis should be the stop loss area.
Okay, all right, Ajit, we're going to let you go on that note. Thanks very much for joining in and giving us all of those answers to queries that we have on Halftime Report. For the markets, it's recovered, but what is the F&O space telling us? Mangalam is here to debrief us on that. Mangalam, over to you.
Well, it's a jostle between Nifty Bank as well as the Nifty IT index. The IT index is actually doing a lot better in today's trading session, and that's supporting the frontline index at the lower end. But the Nifty itself is facing some supply at higher ends as well. There's been a remarkable recovery that we've seen from the lows. All of that has still not taken us out of the woods, and that's what we're seeing in the volatility index, which is up by around 8.5% as of now. The good part, however, is that there is strong support at the lower end for both the Nifty as well as the Nifty Bank. The Nifty, obviously today's low coincides with the 20 and the 100-day moving average. Both of them have seen support and a bounce back for the frontline index from there. And for the Nifty Bank, so long as it holds the 200-day moving average, this is a point that we've been making over the last many sessions, it is no problems. So these periodic declines are actually positive opportunities for bulls so long as it holds the 200-day moving average. But active options tell you that the market's still likely to be in a bit of a range because we're still not out of any sort of geopolitical uncertainty. 24,100 put seeing a lot of writing, 65 rupees premium telling you around 24,000 to 24,050 is where the support comes in. But we're constantly seeing 24,200 calls being written as well, and these are calls that expire tomorrow, and that has a premium of 75 rupees telling you upwards of 24,250, between 24,250 to 24,300 is where supply is likely for the frontline index. Amidst individual stocks, the IT pack, we are seeing some short covering. The biggest gainer today, TCS, shorts are caught on the wrong side. Stock up 6% right now, big index stock. And we have Emphasis and Tata Elxsi, both of them seeing some shorts being covered. But a lot of short positions added on individual names like Bharat Dynamics as well as ICICI Lombard. So I'm monitoring that as well.
Okay, all right. Thank you so much, Mangalam, for joining us with the F&O setup. With that, it's time for a break now. On the other side, Manisha Gupta joins in with Amina Bakr of Kepler on Hormuz transit uncertainty. Stay tuned for that conversation.
ए दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी जॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299।
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
ये दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। जॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299।
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीट
Welcome back, and joining us now is Amina Bakr. She's head of Middle East and OPEC Plus Insights at Kepler. Amina, hi, thank you so much for joining in as always. And there's so much that has happened over the weekend yet again. How are you looking at the vessels passing via Strait of Hormuz? Because we do understand that 17 June to 5 July is when we've seen some 500 plus ships go by. And then, the second week of July clearly has seen some decline come in. But if you do have a number on hand on what are we looking at in sense of traffic in June and now in July?
Good morning, and thank you so much for having me. And you're absolutely right. Since the signing of the MOU, we did see a pickup in traffic overall. I would say the flows through Hormuz in June recorded an average of around 5.8 million barrels a day of flows. Just to put that in context for you, it is a recovery. However, it's still far from pre-war levels where we used to have something like 20 million barrels of flows. But last week, we had the attack on several vessels in the Strait of Hormuz, which eroded confidence again, and we quickly saw the number of vessels declining. But I'd also like to note here that the vessels leaving the strait, were stranded vessels, and we shouldn't take this as a complete recovery. This is the first sign of a recovery, and what we watch out for are empty vessels actually entering the strait, and we don't see the confidence yet of enough empty vessels re-entering the strait. And definitely now, with President Trump announcing the end of the MOU and we were seeing attacks, escalate in the region. Iran has launched attacks again on many of its Gulf neighbors, including Jordan. So we are unlikely to see, a recovery from that level. We need to see a sustainable peace deal.
Oh, well, absolutely. And that seems far from done right now with what really seems to be happening between US and Iran and the impact that we've seen in various other Middle East Gulf countries. That is, Would you say this is going to take much longer than what the street was anticipating, perhaps this year, some part of next year as well, before we have a resolution in hand?
Yeah, definitely. I mean, this is dragging much, much longer than anyone, I think, anticipated, and definitely longer than Trump anticipated. I mean, when we started this war at the end of February, he said that it's going to take 3 to 4 weeks maximum. And today, I mean, it's the 13th of July, and we're still, in this conflict. The problem is that the MOU didn't resolve the underlying big political rift between the U.S. and Iran. Sure, it could open the strait for a few days, but it doesn't resolve the issue. And clearly, Iran wants to maintain that leverage in Hormuz, and that's why it's been attacking the vessels.
When it comes to Strait of Hormuz, Amina, is Iran doing this for power or revenue or both?
Well, I think, I mean, it's the leverage that it has over the conflict, really, and we cannot assume the fact that the strait is going to return to what it was pre-war, and this is something that they want to, I mean, make it very, very clear. And what I can see from contingency planning here in the Gulf countries, they're also not counting on the strait being what it was pre-war, and that's why, I mean, there's been an acceleration with a number of pipeline projects in the Gulf that are going to take maybe a few years. But that just goes to show you that that no one is counting on normal flows anytime soon.
Going forward, even as we do see Iran and US continue into this conversation, and of course there is Oman and Qatar playing their own roles as well, what kind of a resolution would you say would work best for this area now?
Well, I mean, obviously, they're kind of, I mean, the idea is to return the strait to a point where countries don't have to pay a toll, because that opens a kind of can of worms to all other natural straits around the world. So, I mean, if they can come to an agreement around that, that would be kind of the first step. But it's clear that Iran, I mean, wants to name the toll in another form, calling it a security fee, calling it an environmental fee, and they also want to safeguard the fact that they are going to get compensated for the conflict. So I don't see these issues being resolved anytime soon. I see this dragging, and it's a very dangerous point because we are not at the same place where we were in February. Stocks are drawing down. We don't see a refilling of stocks that has happened. So this puts generally the energy ecosystem in a more fragile place.
Clearly does. Would you say, I mean, amidst all of this, we've seen a very measured reaction come in from the investors, though, because even as the Strait of Hormuz is perhaps shut again, as you mentioned, there's hardly any ship or an empty ship vessel entering in. Just about a 4 or a 5% of a move that we've seen in the Asian markets, and we're off the kind of highs where Asia really opened in reaction to what happened over the weekend. Would you say it's a very measured, very damp kind of a reaction coming in from investors?
This will remain a mystery to me. I mean, I have no idea why heightened geopolitical risk at this level does not reflect in prices. It's either traders not understanding the impact, or they do understand the impact, and it's just a matter of them trading in a way that is more profitable somehow. Because on the other end, I mean, if we do get a headline, say end of this day, saying that the MOU is back on, a peace deal, and everything is back okay, we might see a decline that is more dramatic than the increase. But I think there's been just generally since the start of this conflict, traders are baking in this geopolitical risk, not paying attention to it, normalizing it, and on the other side, upplaying the narrative of a super glut. And quite honestly, I don't see that we have any super glut in the system.
How would you look at the prices performing from here on? I mean, as you mentioned, well, yes, we haven't seen prices run up. Even before the MOU was signed, prices had already started to come down. There is a net shorts that the markets are working with in sense of derivatives in both of the crude contracts there. So what are we looking at in sense of prices going forward from here?
Yeah, sure. I mean, we are going to see, we did see a slight elevation, as you said. I mean, we like prices are almost, Brent is almost touching $80 at the moment. It might kind of stay at that level given the where the conflict is at. But like I believe in gravity, I believe in fundamentals. And I do believe that fundamentals will catch up to this price at some point. When it would happen, I mean, that's a question that's kind of beyond me.
Oh, it is.
Okay, all right, Manisha, thanks very much for that. As of now, at least the Indian markets seem to be brushing off concerns with regards to Brent crude, because we do have the Nifty, which is now moved into the greens. We're at around 24,209, and the Sensex, which is up around 51 odd points. So as you can see, there's a smart intraday recovery from the lows of around 24,000 that the Nifty hit on an intraday basis today. For the mid-cap index as well, a little bit of a way to go, so down around 0.3%, but the bank Nifty seems to be following the steps of the Nifty, so just about 66 points away from turning into the green at this point. So that's the update on the markets, going well at this point. It's been an intraday recovery, as you can see on your screen. We'll take a short break, but we'll be back with a lot more stocks on the other side. Stay tuned.
Welcome back. Well, the markets continue to recover, but let's talk about an exclusive conversation. Our colleague Nigel caught up with Shyam Metallics chairman and MD Brij Bhushan Agrawal at the company's Kolkata office, where he spoke about change in the company's value-added product mix and the railways and the defense segment as well. Listen in.
Mr. Agrawal, you've spoken about value-added products as a percentage of your mix. So if you could help us out, what is it at and where do you see this number headed?
See, presently, if you see, it is a mix of intermediate and final product, but all over next 4 or 5 years growth story is more on the value added.
Right.
So from presently, we are close to around 45-50%. And in the time to come, we will take it to 90%.
Okay.
So that is the real value we are adding in the complete.
That's right. And, you know, as a country itself, two segments are getting a lot of attention. That's defense as well as railways. For Shyam Metallics, where do you see the contribution from both these two segments headed to?
See, we are still very active in defense. We are supplying aluminium foils in the defense industry. Our export is majorly dependent on the defense industry in the international market. Aluminium foil, you know, the battery foil, when we see the battery plants coming up, it will also cater to the EV plants and all. And also with the new aluminum plant coming up, we'll be making the sheets for the railway wagons, for the EV vehicles, because now aluminum is a very, very future metals. We are seeing, first of all, it is a lightweight, so it creates a lot of synergy for all the, companies to convert the heavy metal into a lighter metal. And number two, it is also electric steel, where from the energy prospect point of view, we are seeing that, aluminum requirement is very high. So we are very bullish on this. And this new wagon plant, what we are setting up, should be commissioned in next 3 months from now. So we'll take another 1 or 2 years to get all registrations, trials, and also we are going to see a good penetration coming up from the wagon plant also. So aluminum is going to serve defense and railway both, even the commercial vehicles, some white metal, specialized applications and all. And wagon is going to be completely, the railways.
All right.
So we are seeing a good numbers, maybe in next 4 to 5 years, close to 3,000 to 4,000 crores. We should be able to cater to this category.
All right. So that should be roughly around 4,000 crores on a base of around 40,000 crores. So around 10% of your mix.
Perfectly. Close to that.
Okay, all right. So that's the management of Shyam Metallics. We'll take a short break now. But the other stock which is in focus is Just Dial, which is buzzing in trade after reporting what was a good Q1. We'll be back with more details on why the stock is up 20%.
Welcome back. A noticeable recovery in the markets. We are in the green, just at the flat line, slightly off the highs of the day as well. However, if we talk about, okay, so it's a 48-point uptick. My bad. So we are making higher moves from the lows of the day. Bank Nifty is one of the reasons why these big moves are coming on the Nifty as well. And a couple of stocks which are at the day's high from the Nifty pack. We do have Wipro, which is at the day's high. NTPC is the other one. A lot of these IT names are leading from the front when it comes to gains on the Nifty. Kotak Mahindra Bank, ICICI Bank, Max Healthcare, Adani Enterprises, all these stocks are recovering from the lows of the day. The mid caps are still in the red, but there is, of course, a recovery yet again here. We'll be speaking about Just Dial in just a bit, but we do have Pine Labs, which is up around 7% from the broader market. Zensar also continues to do well. That one is up around 7%. JSW Infra is the other one, seeing gains of around 6%. We do have Vedanta Iron and Steel that continues to be higher, and BHEL is the other one. Billion Brands, which is Grow, that stock is also doing well in trade today. So recovery nevertheless, despite the war risk, as we've been speaking about, coming back on the table.
Yes, absolutely. So the geopolitical risks seem to be brushed off by the Indian markets as of now. And there are a lot of numbers to watch out for. So do watch out for stocks such as HCL Tech, ICICI, AMC, all of them which will be releasing numbers today. So it'll be interesting to watch a couple of these result reactions. But talking about that, Just Dial is in focus today. There's a lot happening at once in the company. The company just posted its fastest revenue growth in 8 quarters, but their margins came in soft, and in the same time, the board meeting, they've announced a complete revamp at the top management. We do have Vinny joining in with the more details on this. Vinny, over to you.
Hi, absolutely right. Like you mentioned, there's a lot that's happened, right? The company reported its numbers, fastest revenue growth in 8 quarters. Margin came in soft, and at the same time, we saw that the board announcement came in. There's a revamp that is coming in at the top as well. New CEO, new CFO, we're going to be stepping in. First, let's talk about the numbers of the company, right? When you look at it, June quarter came in at 327 crores revenue, which is up 9.9%, so almost 10% on a year-on-year basis growth, as well as sequential growth of 6.6%. This indicates that Just Dial has posted the best revenue growth on a year-on-year basis in almost 2 years. When you look at it in terms of collections of the company, collections has also been very good for the company. We're seeing a 13.7% increase, 3,122 crores, which is a very important indicator when you look at it for Just Dial. So that has seen a very sharp growth. So a turnaround that's come in from a flat growth previously when the company was seeing for collections. Margins of the company on the other side, that's also something where we saw a bit of a blip coming in. 200 approximately basis point in terms of decline on a sequential as well as on a year-on-year basis that we saw for the margins. Now, what is the reason for this? Employee cost, that saw an increase. Employee cost was up by 11%. We had other expenses for the company that was also up by around 28%. So that is an increase that has led to the decline in terms for the margins of the company. Move on and talk about the leadership. That is interesting, right? We had the founder who was the CEO and MD of the company, that is VSS Money, who ran Just Dial for 33 years roughly, and is seen as one of these early startup folk founders who is managing the company now, is stepping down on 31st of July. Who will succeed? Dinkar will be coming in his place, who recently was heading, obviously, Flipkart in his previous roles. He had handled the Flipkart B2B business as well, with a background coming from Bain & Company, Accenture. He's been a part of all these companies. And also on the finance side, do not forget, we have Dinesh Taluja, who will be coming in as the CFO of the company. He was previously with Reliance Retail as well. So we have an interesting rejig that has come in here. Dinkar himself also is focusing on B2B. Just Dial also something that will be focusing on B2B. That is interesting to watch out for. Let's talk about the cash of the company, right? 6,022 crores is what this cash stands at versus a 5,900 crore that we saw in the same time in the month of March. Market cap of the company is just at 5,600 crores. So the cash that they're sitting on is much higher. What are analysts like Kotak, Citi flagging that, where is this money going to go? Are they going to be focusing in terms of the strategy of buyback, dividends, or focus on company stated B2B projects? That will be interesting to see, given that we have a new leadership coming in as well. In terms of what other brokerages highlighting, or in terms of the ratings that they've given, Kotak maintaining a buy rating, target price of 1,100. Citi is also maintaining a buy rating. They've increased the target price to 930 rupees per share from previous 900 rupees per share. Both the brokerages are highlighting that the stock is inexpensive, and it is an interesting one to look out for. The real question obviously is going to be whether the management can turn the intent into actual returns and growth. As of now, they do have cash on their books as well.
Okay, all right. Thank you so much, Winnie, for making sense of these big moves on Just Dial. And with that, it's a wrap on this edition of Halftime Report. Thank you so much for tuning in. Business Lunch will take all the action ahead.
Separate.
Markets are off the lows but are choppy following a fresh exchange of strikes by US and Iran. IT and consumer durables notch gains while realty and FMCG are the big drags.
The stock of DMart owner Avenue Supermart slips on a slowdown in sales growth in Q1. Cautious management commentary sparks some concern, but several analysts keep the faith.
Brent crude jumps over 4% to near $79 a barrel on fresh strikes by US and Iran. Fears of supply disruption fuel the rally even as the US and Iran issue contradictory statements on the Strait of Hormuz being open or shut.
Neelkant Mishra, Executive Director Designate at World Bank, tells CNBC TV 18 FII inflows should not be expected soon as emerging markets remain a difficult play for investors. He sees earnings revisions as key to drawing flows.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormuz. You know, those escalating tensions in West Asia saw the markets open in the red, but now we've seen a stellar recovery, markets brushing off those tensions, and the Nifty and Sensex now in the green.
A very good recovery from the lows of the day indeed, as a 200-plus point recovery. You know, two good things have happened here. The first bit, of course, is the fact that we have managed to defend the 24,000 mark on the downside today, at least for now. And the 24,000, exactly that level is the low of the day. So that's one good thing. The other good thing is that banks, of course, they are contributing to this recovery. The Nifty Bank too has managed to defend that 200-day moving average and that 57,500 mark on the downside. That too has recovered from the lows of the day as well, close to 500 points. That's a positive. But the fact that IT is the one that's doing well today. That will be a blessing in disguise for the bulls, and that is of course courtesy of the AI trade that has unraveled in South Korea earlier in the day. SK Hynix falling over 15%, worst day on record. The Kospi 2 ending close to 8% lower as well, and that has had an impact on India. The Dow futures of course trading with losses of close to 200 points. The Nasdaq futures down 400 points. So IT as a sector has done well. Of course, we are counting down to results from HCL Tech later in the day, but a lot of others have done fairly well too.
Absolutely. It'll be key to watch how HCL Tech does in their earnings today. But you know, those IT stocks doing well, riding on that wave that they had with TCS's numbers coming in line with expectations. That stock is up nearly 6% today. We've got Infosys also up over 4% and HCL Tech also up 5% ahead of reporting its first quarter numbers. So that stock they're nearly 6% higher in trade as we speak. The other index that's doing well is the consumer durables space. That is the other gaining index on the Nifty. We've got Kalyan Jewellers soaring 10%, rallying 47% in just 4 sessions. We've got Voltas, which is up 4%, Blue Star up 2%. Now, on the downside, we've got those realty stocks that are not doing well. They're leading the down move after last week's stellar up move, actually. Now, that index is down over 1%, Lodha down over 2%, Prestige down over 1%, and DLF nearly 1% in the red as we speak. Metals also losing their shine. Tata Steel, JSW Steel, and Jindal Steel, all of them down between 1 and 2% in trade.
Numbers from Bajaj Consumer flashing at the bottom of your screens. One of the 4 important names reporting results today. 24% margin, so it's well, a 10 percentage point expansion from last year. Profits are at 70 crore compared to 38 crore last year. The EBITDA performance has been fairly strong as well, and the stock has seen a significant run up as well. So it appears to be in the price as of now. The stock is up 155% on a year-to-date basis. So it's been a very, very strong year for Bajaj Consumer, and that possibly explains why the stock isn't doing significantly much after this kind of margin expansion that you have seen in comparison to the same quarter last year. Business updates from Kalpataru as well at the bottom of your screens. Pre-sales are up 6%, collections are up 17%, and of course that is in contradiction to Keystone Realtors, whose pre-sales were down well over 40% this time around, but although collections had seen an improvement, so 4% higher for Kalpataru as well. And of course Bajaj Consumer doing well for itself after its results. Has had a very good year, in fact. But besides all of these names, a lot of others, other stocks are too buzzing in today's session, and Upasana is here to take us through all of that. Upasana.
Well, certainly a lot of stocks in focus on the back of that Q1 numbers. Firstly, let me start with Avenue Supermarts. Overall, it's been a soft quarter for the company in line with the street expectations. Management commentary also remains quite cautious. Revenue has seen an uptick of 15% on year-on-year basis, and EBITDA margins has seen an uptick of just about 10 basis points at 8%. Next up is Just Dial, continues to remain in focus throughout the day. It's overall been a good quarter for the company. Revenue has also registered a good growth, and margins of the company remains a bit of a softish side. Now, revenue growth stood at 6.6% sequentially, margins down 220 basis points at 26.7%, and also company has gone through a management rejig in which it has appointed the new CEO and CFO of the company. Next up is L&T Finance, NII up 28%, net profit up 29% on year-on-year basis, and overall the asset quality of the company has also improved to 2.8%. Now, the management joined us today morning, in which they have said that they will target 20% CAGR on loans, and they are confident of this 20% plus growth, and they believe the growth would have been much higher if it was not the West Asia crisis and lower monsoons that overall impacted this year as well. Next up is Fino Payments Bank is on focus in the back of its business update for the month of June 26. Disbursals are up this time around very sharply, more than 2.5 times. New account open has seen a sharp surge of nearly 31% on year-on-year basis, and the bank's overall total deposit have also seen an uptick of 11%. So certainly a sharp surge on that front. And lastly, coming to Avantel, revenue has seen an uptick of 35%. EBITDA margin stood at 24.8% versus 20%. Sharp uptick in terms of the margin expansion here as well. And net profit have seen an uptick of 68%. The main growth driver this time around is from the company's key segment, that is the communication and signal processing, which has registered a revenue growth of nearly about 35%. So all in all, certainly these stocks are on our radar today on the back of these.
All right, Upasana, many thanks for taking us through that. Earlier today, my colleague Lata Venkatesh spoke exclusively with Neelkant Mishra in his first interview post his appointment as the Executive Director to the World Bank. Let's listen in to what he had to say about the trajectory of earnings growth and FII inflows this quarter.
Double digit should happen because there's been significant rupee depreciation. Quite a few of the firms benefit from that. There is significant revival in credit growth. So at least our expectation is that the banks we cover should be showing 12% plus earnings growth. There are some sectors where there would be margin pressure because input prices did go up, and I don't think the companies had the clarity, and very rightly so, for taking prices up in the end market. And therefore there is some. So while volume growth in autos, for example, was very strong, there is also a fear of margin compression. So, but I do think that double-digit earnings growth in the quarter should be possible. More than the reported earnings growth, I think what FIIs will respond to is earnings revisions. See, because markets will always be forward-looking. It's not that the fund manager has suddenly changed their stripes. So, so I do think that the 1% plus earnings cuts that we saw in April and May each should slow down. So June was slightly better. We still had some cuts, but very, very minor. FII's inflow, though, I think we should not anticipate for a while. See, the world, and you're seeing that, even when the ceasefire happened, there was apprehension that all of us had that this looks very shaky. And with that kind of uncertainty, you must have seen the dollar index is shot up. And the yields in the US are moving around unexpectedly. In the month of April, there was 15% plus growth in IT services exports in dollar terms. A lot of it from GCCs, of course. May it went to 3%, but after 7-8 months, generally there is a month where it is weak, so there is nothing much to worry about. So I think that services exports are still continuing. As of now, both real estate and consumption look fairly beaten down to me. But that's more a 12-month view. From a tactical perspective, maybe even IT can rebound.
Well, that was Neelkant Mishra, and of course, the other big trigger, apart from earnings in today's trade, will be the fact that the June CPI figures will be announced at 4 o'clock. And this is the first reading after the government announced the fuel price hike. Now, a CNBC TV18 poll is seeing the headline CPI at 4.24 compared to 3.93% in the month of May. Lata is here with what the street is expecting. Lata.
Yes, sir. 4.24 is what the poll says, and it's higher than the May reading. 3.93 was the May reading, because of the fuel price hike, about 5 to 7 rupees getting added on. Food CPI also will be higher. That's going to come very close to 5% according to our poll. 4.97 it says, compared to 4.78 in the previous month. That is for May. The 4.24 number, headline number, is also important. It's important because it is the highest number since January of 2025. Also, it's only after January of 2025 that the CPI headline has gone over 4%. So that makes the reading a little significant. Likewise, even that 4.97 food inflation will be the highest since December 2024. So, a 19-month high in terms of food inflation, 18-month high in terms of headline inflation. Only core inflation will be benign. The food inflation, people are worrying about cereals. There is a slight uptick in prices, and then a few others like edible oils as well. All these are in anticipation of an El Nino impact. That's why we are seeing these prices higher. The one that's benign, as I said, is core CPI, expected to come in at 4%. Well, you may say that much of this above 4% is priced in, but if it comes a little above street expectations, then the first rumblings of an expected rate hike, if not in August, in the second half, will start taking root.
All right, Lata, thank you so much for taking us through those details. On that note, it is time for us to head into a short break, but more news and updates on the other side. Stay tuned.
ए दया कौन है रे ये?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना। सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
Welcome back. You're still with us on Business Lunch. Now, getting you latest out of West Asia, the U.S. military launches attacks in southern Iran again as the standoff over the Strait of Hormuz intensifies. This would make it the third set of strikes against Iran within 7 days. U.S. President Donald Trump, in an interview to NBC, said that the U.S. bombarded the hell out of Iran and claimed that Iran agreed to a deal and then launched a drone at a ship within an hour. Iranian media reported blasts near port cities shortly after the U.S. military announced the strikes. CNBC's Dan Murphy joins us now with all of the latest updates from West Asia. Dan?
I think on the question of whether or not there is a ceasefire in place, the president made it pretty clear at the end of last week that the ceasefire was over. So we'll take him at his word. If that means we're on a trajectory now or a pathway to renewed hostility, maybe a ramp up in kinetic activity inside the Strait of Hormuz or beyond, I think that remains to be seen at this point. The appetite for escalation on the Iranian side is really being tested right now. And on the other hand as well, the Americans also perhaps hesitant to push forward with a resumption of full-scale strikes inside Iran and inside the Strait of Hormuz because both sides do still want to try and get some kind of deal done. However, this most recent flare-up is certainly a setback. As to your question on what is exactly moving through the Strait of Hormuz right now, well, I spoke with the former U.S. ambassador to Oman, Mark Sievers, early this morning. His view was that this situation is going to get worse before it gets better. And that's because new analysis from S&P also says that very few ships are actually transiting through. And that's probably for a whole variety of reasons. Of course, chief among them is just the safety question, first of all. But there's also issues around mines. There's issues around insurance. There's issues around logistics and routes as well. this is an incredibly messy situation on the water and on the ground across the region, which now remains on high alert, according to one senior Gulf official who was speaking to MS Now in the last 24 hours as well. So which way this goes is still really a big question at this point. And of course, markets are going to be watching this tit for tat and any possible escalation really closely. We're already seeing this being reflected in the current price of crude.
Shifting focus now to the world of technology, Apple has sued OpenAI and two former employees alleging misappropriation of its trade secrets to benefit the ChatGPT owners' foray into consumer hardware. Rachna is now joining in with more details on this latest saga. Rachna.
That's right. Apple has sued OpenAI, accusing the ChatGPT maker of stealing its trade secrets to build its first AI hardware device. The suit, filed Friday in a California federal court and first reported by Bloomberg, names OpenAI, its hardware arm I/O Products, and two former Apple employees. Apple alleges a coordinated effort, in its words, at entry level to obtain confidential information about unreleased products. The two men named are Tang Tan, a former Apple vice president who now runs OpenAI's hardware division, and Chang Liu, a former Apple engineer. Now, the filing alleges Liu kept an Apple laptop and downloaded dozens of confidential files after joining OpenAI in January this year. Tan, it alleges that he asked candidates still working at Apple to bring actual parts to job interviews for show and tell sessions. Now, Apple says over 400 of its former employees now work at OpenAI and that it wrote to the company in February but never got a response. OpenAI denies it. A spokesperson said the company has no interest in other companies' trade secrets. Now, the context here is important because these two are not just company A and B. They were partners. In 2024, ChatGPT was integrated into the iPhone. Since then, ties have cooled down. But now, Apple's revamped Siri that was announced in this year's WWDC and is expected to come later this year runs on Google's Gemini. And as per Bloomberg, OpenAI was itself weighing legal action against Apple earlier this year. But Apple has now clearly struck first. The timing is also striking because just days ago, Palantir CEO Alex Karp told CNBC that Frontier AI Labs take their customers' intellectual property data. That was an argument, but this is now a federal complaint. So we will have to see where it goes. But from being OpenAI's biggest partner, the stakes are very real here because OpenAI's first hardware device is expected later this year. It is already fighting the New York Times over copyright, and a growing legal pile is not what you want heading into an expected IPO.
All right, Rachna, many thanks for taking us through those details. On that note, it is time for us to head into a short break. But more news and updates on the other side. Stay tuned.
Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विथ मिल्क और सर आपकी ब्लैक कॉफी। चौली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
Welcome back. Now, following the controversy surrounding WhatsApp's proposed username feature, sources say that the government is looking to ensure standard rules apply across the board for all messengers. Ashmit is now joining in with more details on this. Ashmit.
Well, we're picking up from leaders within the government. What they're telling us is that this is an issue. The issue of username deployment is an issue that the government is actively looking at. There were responses from WhatsApp, from even other messaging applications such as Telegram, such as Signal. Importantly, those responses have been filed, and the government is seeking time now for examining the issue. We spoke to leaders, sources within the government. What they're telling us is that there has been various explanations that have been offered by WhatsApp. They're trying to explain and justify as to the deployment of username. They've explained the safety protocols as well, and this is something that the government will take some time to examine before formalizing a position going forward. But a key takeaway that we are hearing from the government folk is that they are looking for consistency. They're looking for a standard framework, a standard set of rules that will govern whether or not a username deployment can be permitted in the first place. What sources told us is that we cannot have an approach where there is a set of rules that governs only exclusively one particular messaging platform. There has to be consistency. There has to be consistency not only in terms of the rules but also in terms of compliance, and that is something that the government will seek going forward.
All right, Ashmit, thank you so much for taking us through the details. A quick check on the markets. The Nifty, we have seen that recovery. Nifty holding at 24,200 as we speak, absolutely flat. The Sensex also there. The mid-cap index slightly underperforming the blue chips, but seeing a recovery there as well. And the Nifty Bank about 0.2% in the red. So that's how the markets are shaping up. The IT stocks are leading from the front, and we've got realty and metals that are the top losers in trade today. But moving on, there has been buzz of Happiest Minds being on the block in the past, but now we hear a deal may actually be in the offing. Vivek Iyer is here with all of those details. Vivek, what are you picking up from your sources?
Well, that's right. Well, a very interesting update or very interesting development is what we understand is happening as we speak as far as Happiest Minds is concerned. What we understand from our sources that the promoter Ashok Soota, who combined owns over 44% stake in the company, a 32% stake that he holds directly, and another 11% to a trust. We understand that this particular stake is on the block, and we understand that there are quite a few players that are interested in acquiring this controlling stake as far as Happiest Mind is concerned. What we understand from our sources is that ITC Infotech and other private equity players are leading the race. In fact, we understand that ITC Infotech is one of the leading players as far as this particular controlling stake acquisition is concerned. Now remember, in case this particular deal does go through, the acquiring entity will have to go ahead and make an open offer, given the fact that the stake that they will acquire will be above 25%. So along with the stake that they will purchase from Ashok Soota, in case the deal does fructify, they will have to make an open offer for another 26% stake as far as Happiest Mind is concerned. We understand that talks are happening, and we understand that any deal that could fructify will happen at a premium to the current market price. Well, we've reached out to both Happiest Minds as well as ITC Infotech. Happiest Mind, both of them haven't responded to our queries at the time of doing this particular development, but in case they do give us an update, we will update our viewers on the same. But the important development is that we understand Ashok Soota's stake in Happiest Mind is on the block, and we understand ITC Infotech, among other players, are leading the race or are in the race to go ahead and acquire this particular stake at a premium.
Look at the move in Happiest Minds in today's session as well. 7% higher now on the stock. You know, there was a point in time when the stock back in 2021 traded above 1,500 rupees. Now it's down to 400, but it's still 150% higher than its IPO price, which was 166. So Happiest Minds on the block is what Vivek is reporting, citing his sources. 7.5% higher now on the stock at the highest point of the day. Turning the focus now to the monsoons, the Indian Meteorological Department has said that the rainfall activity is likely to gain momentum across most parts of the country only after the 20th of this month. Right now, there are no low pressure areas forming, and that is keeping rainfall activity weak. The IMD Director General told CNBC TV 18 that even when the monsoon does revive after the 20th, it will not be strong enough to make up for the deficit that is already built up this season. And July as a whole is now expected to end with less than 94% of the long period average. Closer to home in Mumbai, some relief is on the way, but don't expect a repeat of the heavy spells that we saw earlier this month. The IMD said that the rainfall in the city will resume only after the 17th, and even then it will be moderate. The weather department is ruling out any very heavy rainfall episode for the region for the at least 8 to 10 days.
With that, it is a wrap on this edition of Business Lunch. Midcap Radar comes up next, and we'll take all the market action forward.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
ये दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। चॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमें
डेमोक्रेट।
Good afternoon. Welcome to Midcap Radar, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Vivek Iyer. Well, we did shrug off the war risks, and the markets recovered sharply from the lows of the day. At a point in time, we were up 50 points, but there's a sharp fall from those levels as well. So we are around 70 points off from the highs of the day. The mid-caps, they continue to sulk. But yes, again, we are still higher than the levels that we started off the trade with.
Good afternoon, Sonal. And we are outperforming Asian indices. That's the good part. We haven't fallen as much as them, especially in the last week or so. So we're starting off the week on a slightly positive note. In the broader end of markets, advanced decline ratio almost at par. But we have a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Market continues its recovery to trade near the flat line, with the Nifty trading around the 24,200 level. IT and consumer durables lead gains, while metals and realty drag. Broader market underperforms.
Steady 10% growth in top line lifts Q1 earnings for Just Dial. Higher employee costs and other expenses dent the margin show. Additionally, company has announced appointment of new CEO and CFO. Stock extends gains.
Triveni Engineering sets July 22nd as the record date for the demerger of their power transmission arm. Eligible shareholders will receive 1 share of Triveni Power Transmission for every 3 shares of Triveni Engineering held. Stock seeks steady gains.
A robust Q1 update sends shares of Fino payments soaring away. Strengthened loan referrals and customer acquisitions aids the show in the quarter gone by. New accounts opened rise 31%. Remember, stock has risen 14% in just 3 sessions, but is still down 42% so far this year.
Puravankara posts a strong quarterly update. Pre-sales grows 28%. Collections to kickstart FY27 on a strong footing with 40% growth. The management will be joining us moments from now to discuss the momentum in the business and the way forward. Stay tuned.
Okay, all right. Those are our top headlines that we are tracking at this moment. A lot of movers in the broader markets that we are looking at. As I said, the markets have come off from the highs of the day. We do have some of these realty names which are on our radar, but other than that, something like an Epigral, which is up around 10.5%. We do have Nugent Software, which is up around 10%. It's quite stock specific, you have to say. IT stocks continue to be on our radar. But we'll do one thing. We'll welcome Ruchit Jain from Motilal Oswal Financial Services for a technical check on the market. Ruchit, good afternoon. What are the markets factoring in when it comes from the technical lens? A recovery, then a fall from the highs. What is the next important level?
Yeah, hi, very good afternoon. Well, on the index front, we believe that we are still into that time-wise corrective phase or consolidation phase. Recently, we had seen that the markets reverted from the 24,500 zone, which was its 200-day EMA. But on the lower side, 23,800, 23,900 has also been acting as a good support. So in spite of all that noise that we have seen across these global news flows, our markets have not reacted that negatively, which is a good sign. Secondly, the broader markets have been doing well. A lot of sectoral indices we can see that are showing a good relative outperformance. If you look at last 1 week's data, even the mid-cap 100 index is around its new highs as well. So I think it's better to take a stock-specific or a stock sector-specific approach as of now. Until index crosses that 24,500 hurdle, we won't see any big moves on the either side on the Nifty. But yes, stocks would give better opportunities for the short term.
Okay, Ruchit, stock-specific approach is what you're advocating at this point of time. What are your individual trading calls for the day?
A couple of recommendations. IT has been doing well today. So one of the IT stock that we like here is Tata Technologies. If you look at the entire IT sector, then Nifty IT index has formed a significant low in last week itself. But Tata Technologies had formed its bottom in the month of March. So 3 months ahead, 3 or 4 months, in fact, ahead of the sectoral bottom. So this is, and the higher bottom has been formed. It is 200 EMA now. So clearly in the last phase of the down leg, which we're seeing in the IT sector, Tata Tech was a relative outperformer. And if the sector does well from here on, I think this stock has a good potential to run up. So Tata Tech can be bought with stop loss below 730 for potential targets of 820. And JSW Infra is another name which technically looks quite strong. Good price volume action. About 1.5 years of consolidation breakout has been seen. So keeping a stop loss below 330, JSW Infra also can be bought. I think potential up move can be seen towards 400.
Okay, thank you so much, Ruchit, for joining us. So that is all the update as far as the technicals of the markets are concerned. This is a special segment, Mid-Cap Movers now. We have Ria to take us through all the mid-caps that are moving around in trade.
Well, yes, starting off with the gainers first, we have Kalyan Jewellers up nearly 10% today, and this stock is up nearly 38% just in the last 1 month as well. There's also Nugent Software, CE Infosystems, as well as Pine Labs gaining in today's trading session. But all three of these stocks are down anywhere between 30 to 35% on a year-to-date basis. And also on the gainers list today is Zensar Technologies, but this stock also declining by nearly 33% just in the last 1 year. Also taking a look at some of the stocks that have hit their 52-week highs today, there's JSW Infra as well as Oracle FinServ up anywhere between 2.5 to 7.5% today. And there's also Sham Metallics, Ipca Laboratories as well as CCL products, all three of which are also at their all-time highs today. On the flip side, looking at the losers in today's trading session, there's J&K Bank. Although this stock is up nearly 82% just in the last 6 months. GE Vernova TND also on the losers list today, but this stock has doubled in the last 1 year. Nuvama Wealth also seeing a cut today, but up nearly 72% since its lows in the month of March. And also on the losers list today, there's NLC India as well as Thermax.
Well, thank you so much, Riya, for joining us, giving us a list of all the stocks in the broad end of the markets that are making all the sharp moves. Well, we'll now step into a short break. We'll bring you the management of Puravankara on their Q1 business update on the other side. Stay tuned.
Conflict, violence.
ए दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। चॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
SBI Funds Management Limited launches an initial
Welcome back. You're still tuned into Midcap Radar, where shares of Puravankara Limited, they've zoomed in trade on the back of a strong Q1 business update. The company reported 28% rise in pre-sales, while collections are up 40%. To discuss this and more, we are joined by Malana Sasulu, who is the CEO, South Puravankara. Good afternoon. Thank you so much for joining us. It's been a good quarter for the company, and you maintained your quarter or your FY27 guidance as well. Give us a sense of what will the project pipeline look like in FY27. What are the project additions that you have been targeting, and will it largely be in Bangalore, but you have been tapping Mumbai as a geography as well? What will the split look like? I think you're on mute.
Thank you, Sonal. Thank you for having me on the show. Sorry about this mute thing. So we've done well this year. So we have that we're given a guidance of around 11,200 crores. We're launching around 21,000 crore rupees total units into the market. So I think we are in for that guidance. And this quarter has been good, and we did 28% more than what we had done last year in the same quarter. That is 1,124 crore rupees is what we had done in the Q1 of FY26. As against that, we did 1,439 crores, 28% up. And by area also, we went up by 9%. That's predominantly because of the unit price or the per square feet price. We've taken from somewhere around 8,900 to 10,000 plus. So all in all, it's very good. The split between Mumbai and Bangalore has always been somewhere between 25-30% for Mumbai, and rest everything coming from the south. So that is where we are, and we're happy with the outcome so far.
No, so what is the outlook going forward is what I meant to ask. 11,200 crore rupees in terms of pre-sales. What will the project pipeline look like in that case? How much will you add in terms of projects this year? How much will it come from Bangalore? What kind of capex will you put in for this pipeline?
So it's around 25 projects to be launched. When I say 25 projects to be launched, I think 7 or 8 of them are phases launches. That is a large project where it's an ongoing project and the new phases will be launched. And 18 projects are fresh launches. It's around 14.77 million square feet, around 24,000 crores. 14 from Bangalore and 3 from Cochin and 2 from Chennai and 1 from Coimbatore. So that would make another 3 from Mumbai. So that is how the split has been. So if you're looking at around 14.77 million square feet, it's roughly it's 14.77 million square feet will be around 24,000 crore rupees the top line. So 30% to 40% of that will be the expenses that we will have to be putting into the construction.
Okay, Mr. Saslu, the street clearly likes what you're saying. The stock have almost 12%. Give us a sense of how the balance sheet is looking, current debt on books. What is the percentage of finance costs that you're paying currently, and outlook on debt reduction going forward?
So one of the things that we just now announced, that I think it's there in the press note, that we have entered into a definitive agreement with ICICI Pru for selling one of our commercial assets. That's around 7 lakh square feet, out of which 5.4 lakh square feet is going to be sold to ICICI Pru. That's an enterprise value of around 650 crores. So that will, the project has, the enterprise has a debt of around 350 crores. By way of this deal, that debt will come down by 350 crores. And that's a good news for us. In terms of our debt equity ratio, I think we're closer to 1.2. With that, I think we are on our way to looking at reducing the debt by selling this commercial asset. And also that I think we have strong collections, and our business development has been quite strong. As you can see, in the first quarter of this year, we have done around 5,200 crore rupees of GDV. That's the value of the total deals that we have closed, and all of them coming from Bangalore, in fact, 4 of them. So I think all in all, going is good.
So can you come back on this particular deal that you have with ICICI Prudential AMC? You indicated that the transaction value or the enterprise value is around 625 crore rupees. Some of it will be on SPV level, where 145 crore rupees will be received through the sale of share in SPV. What comes to Puravankara's balance sheet overall? How much will it reduce debt by? And are there more payments that are expected from this deal to Puravankara? If you can give us those specific numbers.
Yeah, around 495 crore rupees will come to Puravankara's balance sheet, and maybe here and there the numbers may not be accurate, but 495 crore if I remember right, and 350 crore rupees of debt is going to get reduced. So that's the outcome of this deal.
Okay, Mr. Saslu, one word as far as business itself is concerned. As far as the core markets are concerned, there are talks that there's a little bit of an excess supply, especially when it comes to the MMR region. What is the status down south? What is the current realization across your portfolio? And has there been a slowdown in select markets on account of the slowdown that we're witnessing in the IT sector?
So we have not witnessed any significant slowdown, and in fact, the Mumbai region has done extremely well this quarter. That they have crossed. We have crossed more than 400 crore rupees, 395 crore rupees sales in the MMR region, and in South as well. And we have not seen any slowdown in terms of sales. Having said that, is there a frenzy that what we used to see in 22, 23, 24? that may not be there. But whatever is being launched in the south, the offtake is very good. Not just us, and then most of the listed developers have done well whenever we launched. So we didn't have any launches in this quarter, and we're expecting 4 launches in this second quarter going forward.
Last question before we let you go. You have been talking about land buys as well. How big of a kitty have you set aside for that? Is this the way that Puravankara will be growing by more land buys? Because in Mumbai, you've looked at redevelopment projects as well. What's the kind of split that you're looking at here?
So in Mumbai, yes, now currently we're looking at the redevelopment schemes, and in Bangalore, and I think the portfolio would be somewhere around 60-40 so far. That is 60% of the lands are bought and 40% of the lands are into joint development, and it's an opportunity-driven market, right? When the land comes in, and some of the landlord wants it to be on joint development agreement, some of them want to sell it. So for us at this point of time, I think we have earmarked the capital that is required, and we have the platform with HDFC, which is going well, and also that our internal accruals are also quite strong. So wherever the opportunities where we think that the interest that we pay could be, it can be by doing a joint development agreement, it could be better than we go for the joint development agreement. And generally what happens is that in our market, landlords' expectations will be very high. And at that point of time that, by paying whatever the interest, 17% interest that what we have with HDFC, a platform like that is very helpful in buying the land and monetizing it.
Well, thank you so much for joining us, giving us a sense of the business. Although very tough for you to give numbers while this particular period is going on. Thank you once again for joining us. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Well, this is now time for our special segment on Mid-Cap Radar. Our special segment, Mid-Cap Spotlight, Ria focuses on Triveni Engineering.
Well, yes, Triveni Engineering has been in focus today as the company has announced July 22nd as its record date for the demerger of its power transmission business. Now, as a result of this demerger, shareholders will be receiving 1 share of the resulting company for every 3 shares held in the company. Now, let's also take a look at why the company is going ahead with this demerger. They have said that this move is going to improve competitiveness for them as well as lead to some increased operational efficiency for them. And they've also highlighted that this will lead to some independent value discovery and value unlocking for each of these separate businesses. Now, in FY26, let's look at what the power transmission business did. They had 340 crores in revenue, which was, and they also had a PBIT margin of nearly 35%. In fact, apart from that, the company also had an FY26 order book of nearly 467 crores versus around 475 crores in FY25, which was a bit lower. But the company did mention that the overall inquiries that they saw in the past financial year were double that of what they saw in FY25. In fact, the business has been facing certain challenges due to the ongoing war in West Asia, and they have seen some deferment in deliveries as well as a slowdown in order finalization as a result of that. But in the Q4 earnings call, the management had highlighted that the power transmission business has been maintaining its PBIT margins at nearly 35% for the last few years, and they do expect this margin trajectory to continue for them. And they have also said that they do anticipate the listing of Triveni Power Transmissions by the end of August. But we will be watching out for any further developments on this front. But today, the stock continues to remain in focus, trading higher by nearly 3 to 4%.
Okay, all right. Thank you so much for joining us with all these details, Ria. So that's our mid-cap spotlight. But let's move on. Realty continues to be on our radar. We do have Keystone Realtors, which has reported their Q1 update. And it is one of those companies which has actually reported a decline versus the peers, which has seen an increase. So for Keystone Realtors, which is Rustomjee, a Mumbai-based player, their collections are up 4% on a YY basis to come at 600 crore rupees, but their pre-sales are down 42% at 617 crore rupees. Company, however, says they do have a strong launch pipeline planned in the upcoming quarters, and they've added 2 projects in Q1 of FY27 with around 2 million square feet or 1.98 million square feet, and estimated gross development value of around 713 crore rupees. That's about Keystone. Just a while back, we got an update from Kalpataru as well. It is a strong quarterly update where pre-sales are up 6% on a YOY basis, their collections are up 17% on a YOY basis, and their collections are higher than pre-sales on a quarterly basis. So that means the balance sheet is doing really well, and that's the reason why the stock spiked but has come off from the highs of the day.
Well, a busy day, especially as far as realty companies are concerned. We had a management and also a couple of interesting updates coming in as well. Well, the trend of strong results continues as far as the FMCG space is concerned, especially with Bajaj Consumer giving a strong set of results. Manglam joins in with more details.
Well, it's a stellar set that has come in from Bajaj Consumer, but this time around the reaction on the stock is a lot different from what we've seen in the last 3 quarters. And here's why. If you look at the numbers, no problems out there. 25% jump in the company's revenue. Gross margins have expanded. EBITDA has actually doubled from same time last year. And we've seen margins jump all the way from 15% to 24.5%. Net profit too has almost doubled from 38 crores all the way up to 74 crores. The internal is looking strong as well. Their mainstay, Almond Drops, that's grown in 30%. And we've seen Almond Drop hair oil volumes growing in teens as well. Sachets and price points, low price points, have also done extremely well, much ahead of the brand average, which is actually doing well for the company. And general trade delivered high 20s growth, which is pretty much in line with what the organized trade did for them as well. Now, here's where the stock is not rallying as much as it did over the last 3 quarters. Because remember, Q1 FY26 is the last of the low base quarter ever since Naveen Pandey took over as the leader of the company. So the company is sitting on 4 straight quarters of outperformance now. So on this base, outperformance will be tougher. Secondly, the stock itself has rallied about 190% in the last 1 year. So a lot of the forward growth may perhaps be priced in, and it's now trading at 35 times FY27 price to earnings. So not particularly cheap compared to its averages as well. So good performance continues, but the going gets a little tough, and which is why the street is slightly circumspect in its reaction.
Okay, all right. After that big surge, maybe that's the reason. Thank you so much for joining us, Manglam, with all those details. With that, it's a wrap on this edition of Midcap Radar. Your stocks when we return.
presidential war power.
Hello and welcome to Your Stocks, coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. With me is my colleague Arundhati Ramanan as well. And in terms of markets today, we're seeing that recovery coming in from the day's lowest point. 24,190 around that mark is what the Nifty is trading at. Quite flattish right now. 12-point decline is what we're seeing. Slight bit of a negative bias. But IT, that's the sector that's buzzing in trade. And in that, LTM reported its Q1 numbers. Revenue came in largely in line. Margin was beat versus what we were expecting. I managed to speak to Venu Lambu, who's the managing director and CEO at LTM, and began by asking about the quarter numbers, the CC growth and the outlook for the company. Let's go across.
Look, we had a good quarter in line with what we had planned for this quarter. Barring a few exceptions, and that's reflected in my earnings commentary as well. Firstly, let me talk about the growth aspect of it, right? I mean, the leading verticals of our business actually grew. The financial services and tech vertical, which are two of the largest segments that we have, grew sequentially 3% plus. I had mentioned about in the Q4 earnings that we have bottomed out on the productivity headwinds aspect of it for both these segments, and we will start seeing the growth coming in, and that's translated it, and that was the result of the strategy that we executed. So that's the positive news of it. The second is, if you look at our consumer side of the business, we grew 18% year on year, and there was a marginal decline for the quarter, and predominantly caused by some of the delayed ramp up we had in one of the big projects in India. Primarily attributed to the hardware delivery and the memory shipment constraints that happened during the conflict times, and also this a very marginal impact from the Middle East. So if I keep these two, India and Middle East impact away, all our verticals actually grew much faster than the company average, and the two of my biggest segments grew 3% sequentially. So it's a great momentum for us as we look at it, right? So while overall it looks like 0.3%, it is 0.3%. But if I just zoom it in and look at two of the biggest segments that we have, they grew more than 3%.
Absolutely, those two segments specifically grew very well for the company, leading the overall growth. But going forward also, for financials as well as the tech side, do we expect this growth to continue? Has the momentum trend seemed the same that we saw in Q1? And also for consumers, you said obviously there were delays because of the West Asia, Middle East tensions that we saw coming in. Has that started easing out now?
Firstly, yes, we expect the growth to continue, both in our financial services and the tech vertical. We're seeing a great demand traction over there, so we are very optimistic about continuing the growth as we get into the Q2. With regard to the consumer, side of the segment, yes, the project that got delayed in first quarter is getting rolled out into the second quarter, so we will see that coming up. With regard to the constraints that we had in getting the access to the required compute for our Indian program, it's slightly getting better, but we're still not over there in terms of getting a much more an aggressive timeline for the delivery of the compute that is needed for the program. But keeping aside, we'll still see the part of the things that got delayed in India rolling into the Q2 as well.
Okay, so that will start coming into Q2. Some bit of an issue still going on, but most of it has started seeing an improvement. Let's talk about deal wins, right? They've remained at around $1.6 to $1.7 billion. Do you see this accelerating? What is the conversion rate right now? And what sort of deals are we seeing? More large deals, more mid-sized deals? What is the mix?
Firstly, I think I mentioned this in my earnings call. When you look at $1.7 billion of FY27, and when you compare it with 1.6 or 1.7, I think it's fair to assume that it's not a like-to-like comparison, because for certain category of services, the unit price or the price at which you deliver services is actually undergone change, because of the AI infusion. So you're doing more work, for the sort of a similar price range. So hence, I would sort of look at it as that, what is a $1.7 billion order book of this year, probably compared to the last year, there is a 15-20% markup, I would put it. But if I want to compare it from year-on-year basis. That's the point one. Second is in terms of the deals that we actually see, it sort of spans between, we have three lines of business, IRA and iTransform and Business AI. We announced a very large deal in Q1. We were the beneficiaries of the vendor consolidation in one of the largest customers in North America. And the second aspect is that, we are seeing good traction in all the four types of AI work that we do. We do work in enterprise AI, which is about infusing AI into all the enterprise IT services. Business AI is about reimagining the core processes and agentifying and creating the new process enablement model for the customers. The third is creative AI, which is about content and creative side. And the fourth was the industrial AI work that we do essentially around the connected manufacturing and supply chain and so on. So we see deals across all the four, but the big traction is actually on the business AI. And we also seems to be benefiting from the vendor consolidation exercise.
Venu, how does AI revenue then start shaping up, right? 12% of your revenues now comes from AI. By the end of the year, what is the expectation or the target that one could see?
For the first time, we announced the AI revenue, and we went through a lot of deliberation in actually sharpening, on what we call as an AI. Firstly, for us, the AI revenue includes three things, right? So we don't include enterprise AI in our AI revenue definition because we believe, in enterprise AI is used as an enabler to deliver the core services. So we keep that aside. AI revenue includes our business AI, creative AI, and the industrial AI. We baselined it for $150 million, which is a great, start for the AI revenue. And I expect the growth in AI revenue to be much faster than the company growth. And as part of the, our 5-year plan, we have told we would like to have 50% of our revenue mix at the end of 5 years to actually be an AI native revenue, but the remaining 50% will be an AI infused revenue.
For FY28, near term, what would it be? That's the FY30 target, but near term, FY27, FY28, what is your target there?
Look, I think it should get better, every quarter. We started with 12%, as you rightly called off. So I would expect, to expand from quarter to quarter on that. And it will be in line with the overall company growth, which we are optimistic about.
Okay, optimistic on the AI revenue growth. Right now, accounted to 12% of the business. Long term, obviously, more revenues will come in from the AI side of the business. But on that note, we're going to step into a very short break. After the break, we'll come back with more of your stock-related queries. Stay tuned.
All of his
Welcome back. You're still with us on Your Stocks. The market's absolutely flat. The Nifty near the 24,200 mark. Stellar recovery from the lows of the day that we saw. The mid-cap index also seeing a recovery about 0.1% lower, and the Nifty Bank absolutely flat as we speak. That's helping the Nifty climb higher. IT stocks are leading the pack. That index is doing really well, and we've got consumer durables as well that are doing well. On the downside, we have those realty names and we have those metal names that are not doing well in trade. But it is time for us to answer all of your stock queries, and joining us to do that today are Ashish Kyal, Chartered Market Technician and author at Wave Strategy Advisors, and Parthiv Shah, Director at Trackcom Stockbrokers, to answer all of your stock queries. Gentlemen, thank you so much for joining us on the show today. You know, the first query is coming in from Shashi Kumar, who is writing to us from Kerala. He holds 75 shares of Vari Energies at 3,151 rupees. He wants to know if he should continue to hold or sell. He is currently making a loss on this particular stock. So, Ashish, Parthiv, let me come to you first. What do you make of the stock? Should he continue to stay invested?
Yeah, I believe yes. I think if the investor has a long-term view, then probably this is a good stock to hold, because I think if you look at the plans that they've given until 2030, I think they aspire to reach a top line of almost 1 lakh crore. And this comes not only in the back of the solar module expansion we are doing along with the solar cells and complete backward integration that they're planning in the solar value chain. They are also looking at creating massive capacities in battery energy storage systems. And I think they already started and they've already done a lot of work in that. So I think this is a company which is looking very aggressive at this particular ecosystem. And I think even if they were to manage the similar margins that they're doing right now, we're talking about a company which will be probably in a potential to do almost 15 to 20,000 crore worth of EBITDA. So currently the company is valued at almost 1 lakh crore. So I think there is upside if provided they execute very well. And more importantly, the investor keeps a very long-term horizon for the next 3 to 5 years.
You know, Ashish, what is your view coming on the stock as well? What should the viewer be doing with the stock right now?
Hi, afternoon to you and all the viewers. If you look at Vari Energy, the stock has not done much since touching the high of 3,500 in around April, and it has come down. But however, it is at a very important support level, and there is a possibility that the stock can again go towards the level of 3,300 on the upside. So my suggestion would be hold on over here, but do not expect something to happen over near term. There can be consolidation or base formation, and then the stock can move back towards the level of 3,300. On the downside, important support is going to be at 2,700 levels.
Okay, we'll keep an eye on those levels over there for Vari Energies. But let's move on to the next query for today. We have Subba Rao, who's writing to us from Hyderabad, holding 800 shares of DV's Lab and 2,000 shares of Lloyd Metals. So two stocks, DV's and Lloyd Metals is what they're talking about. They've been holding it for more than 10 years now. So they're a long-term investor. Should they continue to hold or now sell the stock? Their time period to hold more is now only 2 more years. Parthiv, your view coming in on both these names. They've already held it for 10 years.
Well, firstly, I would like to heartily congratulate the viewer, because both these stocks, I think, if he's holding for the last 10 years, they have done, I think, fantastically well. And they've been like really the tag name multi-baggers for him. Yes, talking about DV's Lab, I think it's one of the finest companies in terms of the specialized API that we talk of. Historically, if you see, DV's Lab has always managed its margins at upwards of 35% EBITDA, despite being only into APIs, because they are into pure play specialized APIs, catering to the global pharma giants. And I think their top 5 customers cater to almost 60 to 70% of their revenues. Goes to show that, you know, the biggest companies in the world do rely on DV's Lab for the API supply. And this company has continuously increased its gross block and kind of catered to newer clients. And even the GLP-1, I think, in terms of the supply, they are one of the market leaders in terms of the intermediates and the APIs that goes into making the final dosages. So I think it's a very well-run company, and probably I believe that the investors had a very long investment record here. I still feel that, you know, this is a company which one should hold for longer, despite the fact that the trail valuations are a little expensive. But probably I think over the next 3 to 5 years, looking at the growth this company can portray, I think definitely I would suggest a hold in DV's Lab. Lloyd Metal, again, I think a very good story in terms of how well the management is executed. From merely a 3 million ton iron ore mining company, today it is talking about mining almost 26 million tons. And as a result of it, the stock has also massively re-rated. Now they're creating the entire steel sector value chain they're going in forward integration and creating almost 4.2 million tons of steel capacity. They're also diversified into non-iron ore business, which is more into copper, cobalt, other assets that they acquired internationally. So I think looking very interesting in the long run, and probably they might also venture into rare earths. So that's why I feel that even this company over the next 3 to 5 years can create more value for the share.
All right, sure. Ashish, what's your view on the stock?
See, if you look at both of these stocks, let me first talk about Divi's Lab. And as a quick disclaimer, we do have holdings on Divi's Lab. So overall, the stock looks to be positive. It has formed on a weekly chart, it has formed an inverted head and shoulder pattern, which is strongly bullish. And the breakout happens to be above 7,000 levels. But looking at the overall structure, I think one should continue to hold here from the long-term perspective. And we can expect the targets on the upside at around 7,900. On the downside, the support for the stock is going to be around 6,600 levels. As far as Lloyd's Metal is concerned, the stock has formed a triangle pattern and should give a positive breakout. It is an outperformer within the metal space if you look at it. And the stock can move towards the level of around 2,300 on the upside. And one can maintain a stop loss at around 1,700 levels.
All right, so that's your view on both of these stocks. The next query is coming in from Anubakar Rasu, who writes to us from Tamil Nadu. He holds 400 shares of ITC and he wants to know whether he can accumulate more shares of the stock. He's not given us a price at which he bought the shares. It's currently trading at 280 rupees. So if we can come to you first, Parthiv, can you tell us, should he continue to accumulate more shares of ITC right now, or do you think he should just exit the stock?
Unfortunately, ITC did lose its momentum, especially ever since there were some changes in terms of the government policy, in terms of how the various cigarettes are taxed. Because even till date, I think the cigarette is almost 45%. The cigarette business is almost 45% of their revenue and almost 70 to 75% of their EBITDA. That's, I think, a key business for them, which if it doesn't grow in terms of volumes, I think it has a negative impact on the company. Despite the fact that the FMCG business has been doing reasonably well for them, that's almost now 27-28% of the total top line. And they have diversified into other businesses. But our sense is that over here, I think the valuations are very attractive. It's quoting at almost 16 times trail multiple. Even if the growth were to reinstate to the tune of 12 to 15%, these valuations are justified. So despite, I think, the negative run in the stock, I believe he should hold on and maybe wait for adding onto the stock. Once I think the growth momentum reinstates, it will be visible in the quarterly numbers. That's when he probably can cost average and move ahead. But for now, just hold on to this stock.
Okay, you would suggest hold on to ITC. Ashish, what's your view coming in on this one? We do not know the buy price or the time period when he bought it. But ITC at the current levels, would you say it's an accumulate option or just sit and hold with what you are holding right now?
Winnie, I would not recommend to accumulate at current levels because we have not seen any kind of positive traction. ITC formed a low of around 52-week low at 275 levels just about in June. And it is still not showing any positive uptick as of now. Over the past 5-6 days also, if you check, the stock has been breaking below the prior day low. So having said that, I would suggest hold to the current positions. Do not square off right now at these levels. We are seeing Nifty FMCG index to be possibly reversing back on the upside. And so ITC should start catching up. And on the upside, the levels can be watched at 320. And important support on the downside can be maintained at 270 levels.
Okay. We'll keep an eye out on those levels over there for ITC. Right now, just hold on to it. That's over there. Next query for today. We have Suresh Reddy, who's writing to us from Bangalore. He's holding 38 shares of Natco Pharma. Price is 890 rupees per share. Wants to know whether to hold for the next 2 to 3 years. 890, so making a profit on this one right now. Parthiv, Natco Pharma isn't the best bet in the pharma pack to hold for the next couple of years?
I'm not sure whether it's the best bet, but at these levels and valuations, I certainly like this company. Of course, this is a company where even historically in the past, you see, I think the quarterly numbers are always, I think, very volatile because I think their product profile is such that sometimes, they come with blockbuster drugs like Revlimid, which kind of gives them fantastic cash flows and fantastic returns. And then whenever there's some sort of price erosion, until the next blockbuster drug comes out, I think this company languishes for some time. So looking at the recent trail valuations of around 12, 13 price to earning multiple, no doubt it looked like one of the cheapest stocks. But I believe that the management has done all the right things in terms of the acquisition they did in South Africa, which is ramping up, even the recent acquisition that they did, and also their pipeline in terms of research molecules is very strong. And I think the management is guiding for FY27 to come in revenue at around 3,500 crores with a PAT of around 750 crores. Even if 80-85% of this guidance is met, I feel that the stock is extremely cheap in terms of valuation. So I would suggest a hold here and see how it executes on a quarterly basis. But I think it's a very interesting company in terms of R&D. They spend almost 7 to 9% of their sales on R&D, which sometimes brings very blockbuster results for the company and the shareholders.
All right, so some interesting factors with the company there. Ashish, what's your view? He is making a profit on this and he wants to know if he can hold for another 2 to 3 years. Do you think he should continue to hold the stock, maybe add more, or do you think he should book some profits?
No, continue to hold here because in the start of June, we saw a very sharp decline in Netco Pharma from 1180 levels to the low of 840. It has shown some smart recovery on the upside. There is a possibility that we can start seeing it going back towards the level of 1140, which is going to be the hurdle. So hold on over here is the recommendation. The important price action support for the stock comes to around 910. Maintain that as a stop loss.
All right, so maintain that as the stop loss. Now, the next query is coming in from Sriram, who writes to us from Chennai. He holds 2,000 shares of NTPC Green at 107 rupees. He is making a loss on the stock. He wants to know if it is a good time for him to add more shares at this point. So, Parthiv, let me come to you first. What do you make of the stock? Is it a good time for him to add more shares at the current price of 94?
Our sense is that don't add more here. Hold on, because I think the price at which the investors bought is not much far away in terms of where the price is currently hovering at. I believe this company has good growth trajectory going ahead. If you look at the total, I think renewable energy capacity is hovering at around 26,000 megawatt. And I believe that, they have fantastic runway in terms of, expanding in terms of scale and capacity. And they do have a huge backing coming from the NTPC parent, which is more into the thermal space, more into the non-renewable, in the renewable space. So in the sense that NTPC Green, I think hovering at around 80,000 crore market cap, and in terms of EV/EBITDA multiple also on a forward basis is quoting at around 18 times. So I would suggest a hold it.
Okay, and your view coming in on this one, Ashish? NTPC Green, they bought it at 107. What should they be doing?
See, NTPC Green has corrected nearly 25% from the highs of 120 levels. And as of now, over the near term, it is forming a weekly lower high and lower low pattern. So there is some pressure for sure. But the stock has an important support of around 90 on the downside. So my recommendation will be hold on. Let us see if the stock can manage to break back about 20 days moving average, which is near 96. Once that happens, then there is a short-term reversal possible for a move towards 110 on the upside.
Okay, we'll keep an eye out on those levels over there. Let's move on to the next query for today. This is coming from Prasad, who's writing to us from Hyderabad. Holding 90,000 shares of sale, price is 179 rupees, making a bit of a loss on this one right now. Should he book his losses and maybe look at another name or remain invested in this one? Sale, Parthiv, what is your view for this one? Is it a good bet to continue to hold maybe as a long-term story, or right now book out and then maybe when you see a bit more of a fall, you start investing again?
I think the investors should hold this company, because if you look at the strength of the company, it has 5 integrated steel plants, and they're expected to do steel volumes of almost 22 million tons in FY27. That is what the management is guided for. And going ahead in terms of the expansion by 2031-32, I think the company is aspiring to be a 35 million ton steel running capacity. I think that is something substantial. And even at the run rate at which they're expecting to sell 22 million tons for next year, this is a company which has full backward integration in terms of iron ore mines that they own. They do import the coking coal from abroad, where the price volatility tends to impact their spreads. But I think since last many quarters, I think if we see SAIL has managed to manage the cost very well in terms of the cost efficiency. So our sense is the investor should hold on to this company. Going ahead with the safeguard duties that the government has put, that should bode well for companies like Steel Authority of India.
All right, Parthiv and Ashish, thank you so much for taking time out and being here with us on Your Stock and answering all of our viewer queries. But that's all we have on the have for on time on the show today. But do remember to email us your queries and we will address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.
Is beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Tokyo's Nikkei is down about 1%, adding to last week's losses.
We're closer to 79, actually above 79 this morning. That's the picture. More, of course, overwhelmingly lower this morning.
We've been very, very positive optimists. We think that the company is getting into a new phase of growth over the next 3, 4, 5 years.
But I do think that double-digit earnings growth in the quarter should be possible.
There's a lot of interest from international funds and all. Okay. But at present, we don't have such requirement.
So after 8 quarters that you're seeing such a strong growth coming in. So good growth, good revenue growth on a sequential basis as well.
Clearly there is a value. When that value gets unlocked remains to be seen, because there is lots happening on the AI side.
It's important because it is the highest number since January of 2025.
The markets recovered sharply from the lows of the day. At a point in time, we were up 50 points, but there's a sharp fall from those levels as well. So we are around 70 points off from the highs of the day. The mid caps, they continue to sell. But yes, again, we are still higher than the levels that we started off the trade with.
Well, that is the day so far. Markets, of course, have bounced off the early morning lows, 200 points off the lows almost, as far as the index is concerned. The Nifty IT index is the winner once again, and there are big moves afoot which are taking place. Well, this is Closing Bell, coming to you from the CNBC TV 18 Moti Oswal studios. I'm Prashant, with me, Nigel. Hi. Afternoon.
Well, hi, Prashant. You know, good to see the breadth of the market in particular, because the number of stocks that are advancing have now outweighed the number of stocks that are declining. The mid-cap index is still, I think it's around the flat line. But if you pull up the crisscross lines, well, we had only around 500 stocks that are advancing at the start of today. Now it's at around 1,600. So that's making your portfolio feel very, very good. That's point number one. Point number two, the point that Prashant made with regard to the tech index. You know, with the kind of rally that we're seeing in the last two trading sessions, it's taken out the 20 as well as the 50 DMA. And now all eyes on the 100 as well as the 200 DMA. It's around 500 points away from there. Last time around, we saw a bit of a bounce around 30,000 and then it pulled back. So let's see whether technically as well it could move up. But the underowned sector, Prashant, all of a sudden it's showing some signs of life. And the bulls on tech at least will be quite enthused.
Absolutely. And, you know, we were talking about this on Friday, Nigel, that sometimes you keep looking at it and saying, well, you know, is this real? And by the time you look back, you're up 10%, right? And I think the IT index is up 10% from the lows. We'll have to just look at it. But should be, I mean, with today's 3.5%, Friday's jump, I think closer to 10% now on an index as a whole. So, you know, that's what is happening. You may scratch your heads and ask what is happening, right? Well, what's the big reason? What has changed at the margin? Well, not very much has changed. It's just that, as Kotak perhaps put it best, it's not a fundamental change of view, but it's just sort of trying to get exposure to something which has underperformed a lot. It's in underweight across portfolios. So room for perhaps a little bit on the upside. Or maybe the view is that maybe not very much to lose from here on the downside. Upside is another matter. But that is the IT space at this stage. Well, let's just quickly run you through the the lineup here. So smart recovery, very smart recovery actually. And IT is one which we spoke about. Consumer durables is the other, which is doing well. And we'll talk about both in some greater detail in just a bit from now. HCL, by the way, just FYI, will report numbers later today. We'll hear from the management later tonight as well. We'll get you a sort of, preview going on those numbers in a bit. Bharat Dynamics is down today, so the government may allow private players in the missile manufacturing space. So that is something. Shyam Metallics, you heard from the management all day today. And the stocks, by the way, hit a new 52-week high. So we look at the targets and, of course, that exclusive interaction with the management in a bit from now. So that's the overall position. How should you position yourself in the last hour and beyond is the question. And Mitesh is here with the answer. Mitesh, good afternoon. Good to have you back. Thoughts on the screen, thoughts on what you're seeing on the screen, and your trades, and then we'll talk about the IT index and what you like there.
So, Prashant, honestly, I think on the index, nothing much. It kind of recovered from the 20-day exponential average, but I still don't believe that there is a sign of a significantly higher breakout happening or a movement happening. So I still believe that it's more of a sideways or part of sideways consolidation, sideways activity in the index. 24,400 is the first level, which is where we had the gap down when the possibly second leg of war was announced, or the ceasefire was deemed to be over. And that gap should be a significant supply pivot beyond that 24,600. So broadly, still 24,400, 23,800 for me, and not much directional bias happening on the index. What could be interesting is the bank Nifty if it starts getting past 58,400, 5,500 on a closing basis. Then that will add to the odds of Nifty breaking on the upside. But till then, I think the market is still sideways. Okay, all right. Got it. Let's give us your picks as well. As the market is a little bit sideways. What about individual stocks? There are plenty of opportunities, right, out there? Oh, that's right, Nigel. So Prashant was talking about IT. I have Coforge as a recommendation. It's just broken above the recent swing high. Now that's a buy with a stop below 1520. Look for targets of 1595. And Bajaj Auto is a buy with a stop below 10,190. So a target in the vicinity of around 10,800.
Coforge and Bajaj Auto. Got that. What about names like TCS and Infosys, the large cap IT space, Mitesh?
Last few days, Prashant, we've been vocal about the fact that IT is extremely oversold and is liable for a reversal. We also had buys on HCL Tech earlier. Both TCS and Infosys, I think, today are suggesting at least a short-term reversal on the charts. So TCS, I think, has gotten past its 10, 20, 30-day average. And the likely reversal target which the stock can possibly test on the upside is around 2280 to begin with. And in case of a slightly stronger reversal, even 2350, 2370 is possible. Similarly, Infi, if you look at the charts from extremely oversold levels, the stock is reversing. First target of 11, 12, 11, 15 is done. The next supply pivot comes in around 1165 and then around 1220. It can test both of these levels. So broadly, IT would be a trading play, reversing from oversold levels. Next few days, IT should, despite there will be some volatility, but broadly, IT should test higher levels from here.
Got it. Okay. Got it. Thanks a lot for that, Mitesh. Well, let's focus on some individual stocks then. The trend of strong results continues for Bajaj Consumer. Mangalam joins us to fill us in with those numbers that came out a couple of hours back. Mangalam?
Well, it's a good performance that has come in for Bajaj Consumer. Fourth straight quarter of stellar performance on the revenue, EBITDA and net profit front. But the stock is at the lower end of today's trading range. And here's the reason why. If you look at the reported numbers, no problems. 25% jump in the revenue. Gross margins expanded. EBITDA has doubled from what? 41 crores to 83 crores. We've seen the net profit near doubling from 38 crores to 71 crores as well. And the growth has been led by Almond Drops, which is the mainstay of the company, where it has seen 30% growth plus. ADHO underlying volume growth has been early teens as well. Everything that the company has been doing, low unit packs, the likes of sachets, etc., have grown well ahead of the brand average. And general trade too has delivered high 20s growth for the company. But now the reason why the stock is sold off from the top is because this marks the fourth straight quarter of strong performance. And remember, Q1 FY26 was the last one which had a low base. So from here on, whether these numbers sustain or not is the big question. Because, ever since Naveen Pandey took over as the leader starting in second quarter FY26, thereafter every subsequent quarter has seen strong growth. The stock has rallied about 190%. So whether this outperformance continues on a high base or not, or is the best in terms of quarterly performance behind the company, is something that the street is a little contentious about. When we started last year, the stock was trading, sub 15 times. Now it's trading at 35 times. So a lot of the good performance ahead also is priced in. So tracking this outperformance after the base gets a little bigger is something that the street is a little circumspect about, which is why after this stellar rally, we are seeing the stock underperform after a good set of numbers.
Got it. Okay. All right, Mangalam. Thanks a lot for that. Stock, I think, up 180%, as Mangalam said. So now, in fact, it appears the base is catching up. And after good numbers, it's coming for a bit of profit taking. Deepan Mehta, Director Elixir Equities, joins us on the show. Hi, Deepan. Good afternoon. Good to see you in. Deepan, what do you make of this one? Bajaj Consumer, the re-rating is done? Or with results like this, you expect things to improve?
Another good afternoon, and thank you for having me on your show. No, I think very well analyzed. And only thing I can add is that it's largely a single product company. And that's, of course, has its own risk issues, because if the product doesn't do well or the category doesn't do well, then certainly you could have lower performance. So I think it's pretty well priced at this point of time. In any case, our view on FMCG is negative. There's a structural slowdown in the entire industry, especially categories like hair oil, toothpaste, toothbrush, detergents, shampoos, so on and so forth. And I think investors need to move away from these counters where growth has been tepid for last several quarters and go to some of the new generation FMCG companies which are still showing a lot of growth because they are present in categories where there is still a lot of growth, like say, Mama Earth, which is Honasa Consumer, or Zydus Wellness, or even for that matter, Nykaa. I think that particular category, those categories are still showing very good growth. You could look at Varun Beverages also. It will benefit from a very, very hot summer. So I think we are looking at getting away from the traditional FMCG companies and looking at a few select new FMCG stocks where there is still underlying growth.
I mean, actually, Bajaj Consumer, if you look at the last 1 month, right, it's up 160%. Essentially, it completely got coming into the results, it did what it had to do, right? And that's the reason why the stock is slightly lower. I mean, apart from, of course, the Bajaj Consumer stock in the story, and you heard Dipen's view, that's the other thing. You got to be mindful of, you look at numbers, EBITDA is doubled, etc. But then you also look at what the price has done and what the market is factoring in, because actually most, if not all of that result is in the price. before you go out and say, well, great numbers and let me buy this, etc. So positioning very, very important in that sense. Deepan, just another name is Paytm. Stocks, basically gone from the middle of June, from about 1100. It's added about 200, 250 rupees. This MDR chatter keeps coming on once in a while. I'm not sure what to make of it, but any thoughts?
See, generally, I think it's a good long-term story. It's one of India's most successful fintech company. And now they are also gradually moving into a lot of other areas, trying to sell financial products and a whole host of other services and products as well. But of course, payment remains like around 55% of its revenue growth. But look, it's got, I think, as last remember, 1.5 crore type of, vendors or shopkeepers using their sound box or using their QR code, and almost 7 crore is the monthly average users. So with that kind of a volume coming through, somewhere, I think this company will be able to monetize it better. And it's a great operating leverage also. We saw that in the last financial year. And again, I think in this financial year also, you can expect the company to double its profits. And then again, year after that, grew by 30, 40%. So FY28, FY29, I think this company will be in solid profitability. So very positive on Paytm per se. But you could have intra-quarter volatility. And of course, this payment business is highly regulated. So any negative kind of news or regulation from RBI, then you need to kind of reassess your investment in the company.
I think the buzz, Deepan, is the introduction of MDR. UPI is free right now, right? And Paytm is the leader in UPI transactions. But the buzz is that they may introduce a fee, which is basically what merchants pay to banks and payment companies like Paytm to process transactions. And the argument for a long time has been that, well, there is a fair bit of infrastructure cost associated with. The government, by the way, provides a subsidy in the budget, from what I remember. But we don't know, right? I mean, it kind of, UPI has always, of course, been free. Will it now become, will there be a small price attached to it? There was some noise that maybe it'll only be for high value transactions. Most of the transactions are, of course, small ticket size transactions, make up the bulk of the UPI, payments and cash transfers and all of that. So we'll see. But I think market, of course, sniffing something for this latest 250 rupee move that we've seen come through. There is some news at the bottom of the screen. This is the Trade Secretary. And he's essentially saying that all agreements, US parallel investigation, which they feel is necessary on trade fairness, have had joint consultations. Basically, some news coming through. And of course, I mean, India's position has been, after the Supreme Court ruled that the emergency tariffs were invalid, the basis for those negotiations no longer exists. And I think that essentially is being repeated, and saying that the current trade negotiations are progressing well. But it's a new look, a set of negotiations which are taking place because the IEEPA tariffs were ruled void by the US Supreme Court. Well, let's just move on to the next stock, Just Dial, right? Locked in upper circuit. The company has named a new CEO and CFO. So there's a leadership shake-up. Stock, of course, has underperformed for a long time. Vinny is here with the details. Vinny, take it away.
Hi, afternoon. So yes, Just Dial, the stock is locked in upper circuit. Numbers, obviously, that also came in, plus the rejig. That's the important one. Just a quick take in terms of numbers. Revenue is largely in line with what the street was expecting. 10% YOY growth is what the company is seeing, which is the best that the company has managed to post in almost 2 years in terms of a growth. Collection has seen an improvement as well. Margins on the flip side have been a bit muted. We are seeing a contraction coming in terms of margins because of higher other expenses as well as employee costs, which the company has seen. Now let's move on and talk about the rejig and the leadership's change. Founder VSS Money, who ran Just Dial for roughly 33 years, founded in 1996, stepping down as the MD and CEO from 31st of July. Now, VSS Money, obviously in 2021, Reliance had taken the majority share and stake in Just Dial, and since then also, that's almost 5 years since that deal happened, that VSS Money was at the helm of Just Dial. 33 years is what he spent. Now, who's going to be taking away? We have Dinkar, who will be coming in this position as well. So he, in terms of a profile for Dinkar, he was previously heading Flipkart Wholesale, Flipkart B2B side of the business as well. And he's got a big background and a long-term story with Bain & Company as well, where he spent almost a decade with Bain & Co. Now, he's got overall 2 decades of experience specifically in digital commerce, retail and technology side. So that is something that could support even Just Dial's growth. Apart from that, you're seeing the finance side. That's the CFO of the company. We have a new CFO that's going to be coming in as well, Dinesh Taluja, who was up till now with Reliance Retail, will be taking charge as the CFO of the company. He's taken charge as the CFO of the company, and he's also got more than 20 years of experience across investment banking, management consulting, private equity and corporate leadership as well. So both the new leaders have experience in this. Plus, Just Dial has spoken about the B2B push as well. Do not forget the cash on the books for this June quarter stands at around 6,000 crores approximately, which is more than the market cap of the company currently at around 5,600 crores. Plus, analysts are also highlighting both Kotak as well as Citi that this is an important factor now from here on, how these new leaders actually take forward the story for Just Dial, whether there will be buybacks, dividends, or the focus that comes in on the B2B push will be key to watch out for. But currently, they believe the stock is at a good valuation as well.
Got it. Okay. All right. Thanks a lot for that, Vinny. Sitting on solid cash in books, more than the market capitalization as well. Deepan, what do you make of this one? 677, far cry away from its high, but the pieces are coming together, it seems. What's your take?
Yeah, Nigel, I think it's a no-brainer with the cash on the books being higher than the market value. So you can expect another decent sharp trading rally further up from these levels as well. Suddenly the cash has come into focus because there's a management change, and obviously they will have their strategy how to deploy the cash to grow the business. But end of the day, I think, while there could be a good trading rally in the 15-20% upside from here, what are the long-term prospects? Companies like Just Dial, and another company which comes to mind is IndiaMart, Intermesh. I mean, those are basically search engines, and now with AI and Google and Claude and Gemini, I don't know how will they be able to grow the business. So let's see what the new strategies are and how successfully they're able to implement. Because just based on the cash, I think that'll get discounted in a few trading sessions. Just based on the cash and the books, I don't think that guarantees growth. And at the end of the day, what gives returns is higher growth. So I would say, like, if you're invested, remain invested, ride the rally for the next few trading sessions till the cash gets adjusted and finds a proper value, and then wait for what the exact plans are, new strategies. Are they getting into new products, new services, and see whether they really have an edge over there.
Yeah. Fair enough. Got that. So that is Just Dial and some of the others out there. Basically companies in the demand aggregation space, if I can put it that way, as I think there's IndiaMart, there's Just Dial, and maybe a bunch of others as well in listed, unlisted space. TCS is jumping, right? Some 4-5% higher. Major deal with ABB to transform its global network operations. As part of the results, TCS revealed this big, a similar deal, global deal with SKF Global. And there was a sort of new customer, did not do work earlier, and now they're sort of, calling it an AI deal, but this is a completely new customer that is SKF. And I think with ABB as well, it's something similar. Vinny's here with more details though. Vinny, take it away.
Hi, so more than a couple of news flows actually coming in for TCS, right? First up, obviously the TCS ABB multi-million-dollar deal, which is mainly obviously for network operations more related to the AI side. They're expanding their collaboration to deliver AI-driven, secure and standardized digital infrastructure for ABB global network operations. So that's a big deal for the company. Apart from that, what came in this morning also was that Kotak added TCS to their large cap model portfolio. So they added TCS to reduce that large underweight rating that they have on the IT sector. They still believe that there is some upside left for TCS from here on, and we've seen that inexpensive valuations for these large cap companies. These are one of the main factors that Kotak has highlighted. Though they said that, this inclusion shouldn't be counted as their positive on the IT sector. They're just adding it to the large cap model portfolio. That's only for TCS. They remain underweight on the IT sector. But apart from that, there's one more news flow that came in. This is according to the source that we're picking up from Mint. Leadership region. There is a lot of shuffling that has happened at the top for the top executives at TCS is what the Mint article is highlighting. They are across several service lines, industry groups as well as country operations. Mainly is the focus and the change is to sharpen accountability, reviving the growth, that focus that comes in on the AI side as well. So they've split the company's business units into larger business groups and carved out a lot of verticals as well in the last 3 months. So that is also an interesting rejig that maybe one will watch out for. This is according to sources as of now that we're picking up from Mint.
Got it. Okay, all right. Thanks a lot for that, Vinny. Well, additionally, another IT majors in the spotlight on the back of earnings. HCL Tech is set to report its numbers later today. Rima joins us with the expectations. Rima?
Well, expect a soft quarter from HCL Tech this time. Dollar revenue growth seen lower by 1.5%. If you remember, Q4 was also a very weak quarter for the companies. Their top line declined by 3.3% sequentially because of budget cuts at telecom companies. There were 2 SAP project cancellation, and the management had indicated that some of that will spill over into Q1. And plus, there is that AI-related deflation, which is eating into the books of IT companies. So put all of that together, the street is working with about a 1.1% decline in revenues on a quarter-on-quarter basis. Margins, though, for the company could inch up because in the prior quarter, there was a restructuring hit of 122 basis points, which will not be there this time. And plus, we've got that currency tailwind. Profits should be up about 2.5%. I think the key is, will the company hold on to its revenue guidance of 1 to 4%? What analysts point out that after having a weak Q1, a soft start to the year, the ask rate in Q2, Q3 and Q4 will be very high, 2.5%, to achieve the middle of the guided range. So therefore, there is a possibility that the upper end, so 1 to 4% is the current guidance, the 4% could be brought down to 3.5% or maybe even 3%. Another number to track, very importantly, will be the advanced revenue number. What the company said in Q4, it stood at $155 million, and even the deal win trajectory, because just last week, the company won a very large $1.1 billion net new deal, which got the street very excited.
Okay, all right. Thanks a lot for that, Rima. Deepan, what would you do now in tech? You know, it's still not out of the woods, but there is some reason to see a good pop at these valuations, at this sort of under ownership as well. How would you approach the space? Would you stick to some of these services companies that appear relatively undervalued, or would you go for the faster growing services names, say a Cognizant or maybe a Persistent? Or do you shift focus to the product companies? You have spoken about Orient Pro in the past. Newgen is up close to around 10% in today's trading session. Something you like from here?
Well, Nigel, I think our strategy remains the same, and investors need to look at ways to exit out of large cap IT companies. And no doubt valuations are cheap, good dividend yield. And I heard about a lot of talk about increasing total contract value, TCV, which they keep highlighting. Well, the question which comes to mind is that this TCV has been growing consistently for the last several quarters. And we have seen that new contracts are coming to these large cap IT companies, including TCS. Yet, when we look at the numbers at the quarter end, they still remain flat. So is it that there's a delay in execution of these new TCVs, total contracts values, or new contracts? Or is it that existing contracts are not, kind of yielding as much? Or the pricing pressure, something is not right, and the figures kind of don't add up, And end of the day, I think these companies have become too huge, and the kind of opportunity in the AI is all about smaller projects. So I would go with small mid-cap software services companies. I've given the list earlier. Usual disclosures, we and our clients are invested. So Coforge, Persistent Systems, product companies like Orient Pro, Newgen Tech, Oracle. I think these are the companies that investors kind of need to focus on. And I think they'll be able to ride the AI. Some of these companies, product companies, benefit from AI because they'll be using it to reduce their costs. And other companies, I think, are far more agile, like the Persistence, the Coforge, maybe Happiest Mind. I think they are far more agile in terms of taking the AI opportunity. So strategy remains the same, to be extremely selective when it comes to software services companies.
Got it. All right, Deepan, thanks a lot for joining in and giving us your view. Be extremely selective on software companies. Just keep an eye out on a couple of them. Just looking at the chart, and you have Sonata Software. That stock has suddenly spiked to the high point of the day. And one of the stocks that are moving on very large volumes today is, in fact, Z Enterprises. I think we should pull up the intraday chart out there. Whether or not this new fund infusion goes through will have to be seen. But for the time being, volumes very, very large on that counter as well. We'll slip into a short break for now. On the other side, we have Trideep Bhattacharya, who's waiting for us from Edelweiss AMC. Stay tuned.
The Republican.
Welcome back. It's that part of the show when Hormuz joins in and he puts the spotlight on all the top movers at this hour. Hormuz, take it away.
If you put a spotlight on the top movers today on the index, all you can see is IT, be it large cap IT, be it mid cap IT. And the top 20 gainers, you would find at least 15 IT names. And TCS is leading the charge today. It almost feels like today is that belated earnings reaction that you are seeing that was supposed to be seen on Friday. And the biggest single day gain in over a month for the stock. The premiums on the 2200 call option too have gone up more than 3x, almost 3.5x now. More than 1 crore shares have been traded on TCS already. The 20-day average is around about 35 lakh shares, so 3x its 20-day average. Half of those, or nearly half, are marked for delivery so far. And the stock is now back near its 50-day moving average, which is at 2220. And why is that significant? Because ever since the start of the year, the stock has not managed to sustain above that 50-day moving average level and has constantly continued to trade below that. And today, it is the second most traded stock on the Nifty 500 as a result of this 5.5% up move. Mid-cap IT rally that was triggered on Friday is extending into today's session as well. You take a look at the moves here on Newgen, on Sonata, on Zensar. Zensar was up, of course, 13% on Friday, up another 6 today. Newgen is up another 15 today. Sonata Software is up 13%. So very, very strong gains. And take a look at the moves over the last 3 days now. They're almost 20 to 30% in all of these three names over the last 3 trading sessions. And in fact, today's volumes too, in fact, on the delivery front as well, almost 38% for Sonata Software, the stock for mark for delivery, 18% for Newgen, 12% for Zensar, and all of these stocks are significantly beaten down as well. So Sonata is down around 30% from its 52-week high, and both Newgen and Zensar are still down around 50%. Take a look at Pine Labs as well. That is one name that has done well. The third straight day of gains for the stock. In fact, it's been an underperformer of late, continues to trade below its issue price. 4.8 crore shares have been traded so far on Pine Labs. The 20-day average is just around over 2 crore shares, so more than double its 20-day average. 31% of the shares traded so far are marked for delivery and continues to remain below its issue price, which is at 221 rupees.
Okay, got that. Lots of interesting moves as highlighted by Hormuz. Every day. Thanks very much for that. Sridhar Bhattacharya is with us, CIO Equities, Edelweiss Asset Management Company. Sridhar, good to have you with us here. Thanks for joining in. It's a pretty vibrant screen, all told, right? The Hormuz, Strait of Hormuz, no Strait of Hormuz, oil up, oil down. I mean, the small and mid-cap part of the market continues to do well. And now, within large caps, IT is starting to participate. So let's just start there. Is it just like a function of getting some exposure to a beaten down kind of name and taking the call that maybe, there's little downside here and maybe upside if things start to go its way? Is that the broad view, or can you make the case fundamentally?
Good afternoon. Thanks for having me on your show. I would say that India was an anti-AI trade and anti-oil trade for the good last year or two. It's time for that to reverse. It's gone from being a bane to a boon, in my opinion, in near term. Oil below $100 and the AI trade reversing, along with decent or better than expected numbers from some of the names we have disclosed results so far, is what is the reaction that you are seeing. In the case of IT, it's been a case of extreme undervaluation, which we are seeing right now. I was looking at it, relative performance. The only time it has gone below this was in 2007, 2008. So I think it's a valuation catch-up which is happening. Earnings are still not there, in my opinion, across the industries, very selective. And I think the valuation catch-up has some more room to go relative to other sectors. So we have been we have been underweight IT, but only marginally so. So, but through stock selection, we have been able to benefit from whatever we are seeing today in general. But I do think that relative to other markets, India's probably time has come, given that the AI trade is kind of rolling over and also oil meaningfully below 100.
And those are the two factors that you had stated the last time we joined as well, that if these two happen, then probably, the FIs come back in, and that's precisely what's happened. Trideep, give us that one theme that you're looking at right now, which you believe is just at, somewhere in the middle to the start of its journey. and maybe it's potentially undervalued. Maybe, in fact, the ownership is less as well. Give us a few factors with that one theme. If you could name a couple of stocks with due disclosures, well, we would love it. Go ahead.
So I would say probably consumer discretionary on a very incremental basis looks positive on the back of the fact that some of these segments like hotels or even for that matter real estate, which has been kind of underperforming for a good 2 or 3 years. Particularly in the last year or so, are gradually looking slightly better, given that some of the macro conditions are gradually turning favor. Not yet, but gradually turning favor as we get into festive season and back half of the year. So incrementally speaking, those two within consumer discretionary as a sector, maybe some for autos as well, are areas that I would point to for incremental hunting grounds.
Got it. All right. What about the domestic-facing themes, Sudeep? We were talking about this the last time around. If India goes through a bit of a rough patch with elevated crude oil prices, which have cooled off in the near term, the spending part of the government could potentially be, cut, and we could see some rollbacks out there. In that case, some of the capex themes could get hit. How are you viewing the setup right now, and how would you be positioned?
I think capex now is a fairly broad-based theme. Okay, some of them have rallied, particularly on the HVDC side. Some on the construction side have corrected quite meaningfully. So those are the areas that we remain positive on. Data centers again have seen a good amount of rally. So basically, within capital goods as a sector, a couple of themes. One is data center, second is HVDC, and third is energy security. So of these three, the first two, the stocks related to them have rallied quite well, whereas companies which sort of provide nuts and bolts to energy as a sector, those areas have still some more room to go. So we are selective within capital goods, avoiding the stocks that have had significant run-up.
Any stocks which have not had significant run-ups?
You would be surprised. The largest construction company in India has been underperforming by a good while. Of course, particularly since the war, etc. I don't think overall all the stocks have rallied. That's why I said some subsegments like HVDC related names have done phenomenally well. Demand continues to be there, but valuations are probably there on the higher side. But on the construction side, you still see undervaluation within capital goods.
Yeah. One name which comes to mind is, not a recommendation at all, of course, but I just bring it up because we have the management with us. KEC International, is again on the EPC side for towers, just completely underperformed. And growth estimates have also come off, but valuations are much more palatable in that sense. Thank you very much, Trideep. Good speaking with you. Appreciate your time here on CNBC TV 18. Well, let's just shift focus to monsoons now. My colleague Santhya is in conversation with the Western Zone head of the IMD, Mr. Bikram Singh. Santhya, take it away.
So the subdued monsoon continues to be a cause for concern, deepening worries over Kharif sowing and water storage levels. Let's talk about Kharif sowing at an all-India level. We are looking at a shortfall as compared to last year of 20.77%. For Maharashtra, as of now, only 45% of the overall Kharif area has been sown so far. Let's talk about water reservoir levels. At an all-India level, it stands at hardly 32%. For Maharashtra, it's 43%, and for Mumbai, it's 49%. Now, the IMD says for most parts of the country, rainfall activity is going to pick up from 20th July onwards, but it's going to remain moderate in nature, which means that IMD is cautioning that it won't be able to make up for the season's rainfall deficit, which stands at 18%. How exactly Mumbai, Maharashtra and other parts of central India are placed? To talk more about that, we are being joined by Mr. Bikram Singh, head Western Zone IMD. So let me start with Maharashtra. At present, we stand at a deficit of 5%. So what exactly is going to happen in the next 1 week? By when rainfall activity will pick up in Maharashtra?
Yes, at present, we are seeing the dry spell over Maharashtra. But after 18th or so, the activity will pick up. I will say even from 16th, 17th, some isolated activity will be more. And scattered activity on 17th, 18th. But 19th onward, As of now, it shows that this monsoon trough, it will shift southward and east-west shear zone also will develop. So some activity will pick up from 19th or 20th onward. We are expecting that one more good spell will be there, but yes, they will be, as it is indicated in the models predictions. So they are showing up to moderate rains basically, and over the Konkan and Goa region also and Ghat regions also, they will also receive the rainfall activity from 18th onward, you will say.
So if you could show us the map, from what I can see, it's looking red in most parts of Maharashtra. So is the red means rainfall deficit. Even green and yellow also does not indicate a good, measurement of how exactly how much it has rained. So parts of Marathwada, Vidarbha, the notorious parts in terms of drought areas, how exactly are these areas looking, sir?
Yes, if you see over Marathwada, it is a deficiency is 36%, minus 36%. And in the coming days also, we are not expecting much rainfall activity over Marathwada region. So
All red over there.
Yes, it will continue to be deficit. And South Madhya Maharashtra also less rainfall activity. But yes, North Madhya Maharashtra, Vidarbha, it will improve. And over the coastal regions, Konkan and Goa, as well as the Ghat regions, that also will improve after 19th or 20th.
So Mumbai has already received its over 100% of July's average, but our lake catchment areas, that's where the problem is. So when the rain activity will pick up in the region from 17 July onwards, what is going to be, or what's the intensity likely to be in the lake catchment areas, because we are still at only 49% of our overall water storage level for the city?
No, see, it is for the whole season. Then that level of the various lakes will reach to the optimum level or maximum level. So monsoon activity, it will continue. Afterward, it will reach to the maximum level. But up to now, if you see the rainfall activity, that is over Mumbai region or adjacent district like Raigad or Pune district and even northern Thane or these districts, if you see the overall rainfall activity over those areas, it is excess or normal. So maximum districts, what I mentioned, they are above normal. So that means up to this time, due to rainfall activity, these lakes, they do not reach to the maximum level. It is throughout the monsoon whole season.
So some hope on that front, but Kharif sowing remains a concern because Maharashtra is going to remain in deficit, sir, in the month of July, based on what it's.
Yes. If you see, I told different areas. Overall rainfall activity, as you told yourself also mentioned, that coastal region, that is Konkan and Goa, that is normal as of now. And
okay, well, that's Monsoon Tracker, and post 20th, perhaps Maharashtra sees one more good spell, and they'll be important to track. Markets, of course, I think are up about 12 points, 24,220. Nigel is here with the latest trends in the F&O space. Nigel, take it away.
Well, that's right. In today's trading session, what's heartening to see is that both the Nifty and the Nifty Bank, we started on the back foot, and that was on expected lines. But if you look at the low of the day and you look at the 20 DMA, both of them took support around that vicinity and have popped back. Now, going ahead from here on, today's low is going to be the reference point. So on the Nifty Bank, it'll be around 57,500, while on the Nifty, it'll be closer on 24,000. Those are the important near-term support levels from the Nifty perspective. One factor that I normally track is the PCR. And that's gradually moving to the upper end of the band. It could be possibly that tomorrow we have the weekly expiry that it's playing out, but normally the PCR moving to around 1.6 odd. It calls for the markets to either consolidate or cool off a little bit. For the time being, we'll attribute it that we're getting into a weekly expiry, so that's why the PCR has moved up. And just take a look at the put action we have seen today. The put buyers will be very happy. Some of them who bought the 24,000 put, in Friday's trading session, they had bought it at roughly around, 35 rupees or thereabouts. At the high of today, it almost became closer to 100 rupees. Actually, we should get that chart up where we have the current market price, we have the previous day's price, as well as the high price. So basically, as of now, it is around 28 rupees. At the high of today, it was around 97 rupees. And at the previous day, it closed at around 35 rupees, as is the case with the 24,100 put as well. So those put buyers would have been very, very happy because the previous day it was around 55 rupees. The high of today was 155 rupees. But that's where writing came in. And, that's how the premium has crashed from around 155 rupees at the high to around 45 rupees. Short point is both at 24,000, 24,100. You are seeing signs of writing out there, which has caused the PCR to move to around 1.5. The stock that I'm looking at is Kalyan Jewellers. The reason I say that is because if I look at the open interest and the market-wide position limit, it could possibly be entering into the F&O band. Either today or tomorrow, it's very, very close. Touch and go as we speak, but the last updated number that I saw, this is the possible stock that gets into the F&O band. So we'll have to keep an eye out on that particular name as well. Slip into a short break, come back. Nimish is waiting for us. He'll tell us what's going on in Dealing Room Chatter. Stay tuned.
Jimmy?
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Welcome back. You're tuned into Closing Bell. As we speak, volatility is picked up yet again. We're as flat as can be after holding with a gain of around 35 points. Nimesh joins us, though, to tell us what is he picking up in terms of flows and giving us an insight into Dealing Room Chatter. Nimesh, good afternoon.
Hi, afternoon, Nigel. A decent recovery from the intraday lows, largely led by the IT names. The IT index is up almost 4%, and this is backed by not only short covering but a bit of institutional buying as well for the last couple of days in the IT stocks. Overall, the flows are mixed because I understand there is a small emphasis sell basket as well at a leading FIDEX, a small one and largely into the Nifty name. So maybe that explains a bit of softening in the last 30 minutes of trade. Having said that, there is good amount of interest from the institutions in the broader markets as well, and that explains a bit of recovery from the recent lows in the broader market stocks as well, even in today's market. Technically, 24,350, 24,400 is a level of resistance, so watch out for that on the upside. But looks like the momentum is clearly there with the IT names, and the feedback is some of the mid-cap IT are expected to surprise positively in terms of earnings as well. So, of course, yes, HCL is a number to watch out for, but I guess bigger surprises can come in the mid-cap IT names. So that explains a bit of move and a bit of buying as well into mid-cap IT stocks today.
Absolutely. Nimesh, stocks as always, what's on the list?
So the first stock is Kalyan Jewellers. It's been a big talking point across all dealing rooms in the last many days, up almost 45% in the last 4 days. A bit of short covering rally, but also it's backed by institutional buying as well. There is a strong indication that one of the leading long-only fund has been buyer in the multiple blocks in the last couple of days. Now, interestingly, my sense is there could be a large block deal wherein the domestic mutual fund could be a large seller. So watch out for potential block in Kalyan Jewellers in days to come. So that's the first name. The second name is Arun PropTech, a small company. You don't talk too much about it, even thinly traded as well. The stock has actually been buzzing off late, almost at 52-week highs. But the city is anticipating a corporate development very soon, a potential inorganic move. They're likely to buy out a company in the housing space. That's the buzz as far as Arun PropTech is concerned. The third name is OneSource Specialty. It has recovered from the intraday lows after a large block. But again, the sense is that one of the leading family offices was a seller in today's block, and the existing mutual funds have been buyers in OneSource Specialty. So that's a trade there. The last one is GMR Power. Again, it's seen a very long consolidation in this particular stock. It's been hovering around the 100, 110 for the last almost 1.5 years now. But again, here the indication that maybe there could be some corporate development. For GMR Power, monetization of asset has been the big theme, and looks like further monetization could be on the cards as far as GMR Power is concerned.
Interesting list, Nimish, as always. Now, on the other one is Biocon, which we've spoken about in the past as well. By the way, we had Vikas Khemani of Carnelian with us in the morning, and we were talking about Biocon with him. But anything you were hearing on this one?
Well, Prashant, it was part of my chatter list last week as well. Expect a large block deal. Looks like the block is around the corner. Maybe today, tomorrow, you will see a large block in Biocon. It's a non-promoter entity. It's a foreign entity which owns nearly 5.5% stake. They are the likely sellers in this particular block. So that's the reason why maybe the stock is under pressure today, because in anticipation of the large block. Still, there is no clarity on whether it will happen in the block window or there is a large discount. But that seems to be the at least near-term overhang. And that's the reason why even in today's market, the stock has been under pressure. But the sense is the large block can happen potentially in a day or two.
So fair enough. And we'd Nimish had highlighted this earlier as well. And now it looks like it's around the corner. GMR Power, Nimish.
Yeah.
You remember it's about 6-7 months back, they were doing the rounds, I think, trying to raise money, right? There was this fundraising afoot. I don't know if it finally happened or not. Now you're picking up monetization, right?
No. So that fundraising did happen in GMR Power, I think 8 months back. But for GMR Power, and they've been vocal about it as well, that consistently they're looking to monetize assets to bring down the debt. So that's been the story for both the GMR stocks, both whether it's GMR Airports or GMR Power. Deleveraging the balance sheet and selling on the non-core assets has been the big focus point for them. And with regards to GMR Power, they beyond power as well. They have a road asset. They have an SEZ. So there are some indications that maybe the road asset could be on the block and can happen very soon. So that's a trigger as far as GMR Power is concerned.
Hey, all right. Thanks a lot for that, Nimish. Let's go across to Mitesh. Mitesh, what are your fresh calls?
So, picking a stock from the stock from micro space like Mahindra, which can be a big benefit product. The stock 14, to look for a 15-30 value for that.
Which stock is that? Which stock is that?
That's Tech Mahindra.
Tech Mahindra. Tech Mahindra, there's a buy call.
The BTS.
BTST. Okay, all right. And the target you have here?
1530 and a stop at 1490.
Got it. 1490 and 1530. Okay, the next one?
This Blue Star company, that's a BTST with a stop below 1700, the target of 17.
Got it. Okay, all right. Thanks a lot for that, Mitesh. Let's go across to Ria. She's here to tell us why Bharat Dynamics is under pressure. Ria?
Well, yes, today Bharat Dynamics is down by nearly 3 to 4%, and this is after a report that has come out from Hindustan Times saying that the centre will now be allowing private firms to manufacture missiles, and as the Astra Mark II missile will likely be the first missile to see this change. Now, as per this report, the Defence Ministry is expected to invite bids from private firms to manufacture the DRDO developed Astra Mark II missile, and in fact, separately, Indonesia has also shown interest in acquiring the weapon, so there is also some increase increased export opportunity that is seen for these missiles. And India has been preparing to open missile manufacturing to private companies, and this will be one of the biggest reforms that will be seen for the defense production policy in India. Now, currently, missile manufacturing has largely remained under state-run defense organizations, unlike what we have seen for aircrafts, drones, artillery, as well as naval platforms that have been opened up for private manufacturing in recent times. And currently, Bharat Dynamics holds a near monopoly when it comes to missile manufacturing in India, but currently it is unable to meet the current growing demand that we're seeing, especially the increased export opportunity that we're seeing. And now, as the Defense Ministry is set to issue an RFP, which is a request for proposal for the Astra Mark II beyond visual range, which is the BVR air-to-air missile, the companies that will now be expected to participate will include ICOM, Adani Defense, Bharat Forge, Tata Group, as well as the Mahindra Group. In fact, apart from this, the Pralay tactical ballistic missile is also likely to be the next missile system that will be opened up to private companies for both development as well as manufacturing. So on the back of this, investors are anticipating that Bharat Dynamics can see some decrease in market share as well as reduced opportunities for tendering for these orders. So on the back of this, the stock is under pressure, trading down by nearly 3 to 4% today.
Got it. Thanks a lot for that, Ria. Well, let's talk about Shyam Metallics. Shyam Metallics has made a fresh 52-week high in today's trading session. In fact, it's made a live high in today's trading session. Let's run you through a few data points. The company, remember, listed in 2021 at a price of around 306. It's already tripled from the time of listing. And in today's trading session, it's made a fresh 52-week high. Now, the vision that they've laid out seems very, very aggressive. If you look at their, the financial numbers that should come up for you on the screen, the revenue number from around 18,500 crores, that they're talking about it moving to more than 42,000 crores. And the EBITDA number from around 2,300 crores, they're expecting it to go to nearly around 6,200 crores or thereabouts. And to be fair, their past record has been quite good because of the last 20 years, they have delivered a CAGR of 20% both on all three parameters. That's the revenue, EBITDA, as well as profitability. I went to their Kolkata office on Friday and, in fact, had a chat with the management. And here are the big takeaways that they're talking about. Currently, they're doing only around 150,000 tons of stainless steel. They are targeting the 10% of the domestic market share, which means that they're expecting to take that capacity from around 150,000 all the way to around 750,000 odd. And just mathematically, it should be around 10%, which the management says that's their target. The cost of power is much lower that, they use their power at in comparison to the grid power. It's nearly half of that, and that will give them a bit of an edge. Also, the other additional takeaways is that they said that they have a lot of interest coming in from overseas. As of now, though, dilution is not on the cards. 90% of the expansion will be organic in nature. And the big kicker is now they're looking at expanding the product range. But as those scale up, they could probably look at a demerger in the next 5 years, which is going to be important because that could be the big value unlocking exercise, probably steel, stainless steel, and maybe other products like aluminium as well as wagons. They also went on to say that now there's a change of government in East India, and they're optimistic that the state and center, after many, many years, are on the same page. Valuation-wise, if you look at it on the trailing basis, well, the stock trades at more than 10 times EV per EBITDA. Given that it's debt-free, the market capitalization is all that you take in the EV. But if you look at it on a forward basis, then it appears fairly attractive at around 4 times, provided they can go ahead and achieve that 6,200 crores of EBITDA number. Going to be interesting to see how they scale up from here, but past performance has been good. So it appears the street has some belief that they can go ahead and achieve what they've set out. Well, let's welcome Amrish Palika onto the show. Amrish, good afternoon. Good to see you in. Any view on Shyam Metallics? IPO at around 300 rupees. It danced away. I think it was subscribed more than 100 times. And then, I think I recall it came back to around that IPO price. From there, it's up 3 times. And now they have a very, very ambitious plan. What's your take on the stock?
See, the IPO was meant for that expansion. And from 2021 till now, in the last 5 years, we have seen the top line has tripled. And now, again, they have announced this massive capital expenditure. And the balance sheet is more or less debt-free, like you rightly said. And they would again become one of the leaders in the stainless steel market. So clearly, I think the street is expecting a similar sort of a performance what we have seen in the last 5 years, and because of which the interest is there in the stock. I think, if this works out well, which I'm quite sure it should, I'll not be surprised if we see this stock at levels of about 1,500, 1,600, possibly over the next year and a half.
Oh, all right. So you're optimistic even at current reckoning. Well, Amrish, we request you to stay with us. We want that one stock that you look at. For the time being, we'll slip in a short break. Come back. We'll continue our chat with Amrish. We'll also wind down the markets. Stay tuned.
expect from what
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company. SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 500.
In fact,
Okay, welcome back. 5 minutes to go for market closing. Ambrish is still with us, and Ambrish's pick today is from one of the larger NBFCs, Shriram Finance. Ambrish, tell us.
Yeah, Prashant, like you rightly said, it's India's largest retail asset financing NBFC with a diversified presence across commercial vehicles, passenger vehicles, MSME, two-wheelers, construction equipment and farm equipment, gold loans and personal loans. Vehicle finance remains a core strength of the for the company, driven by its market leadership in used vehicle financing. And now the company is expanding its presence in new vehicle financing, especially commercial and passenger vehicles, to improve customer retention and capture a larger financing opportunity. If you look at the Q4 FY26 performance, it was very strong. Net interest income was up 3.4% Q-on-Q, 15.6% Y-on-Y. And the net profit surged about 19.5% Q-on-Q and 40.9% Y-on-Y. The recent NBFC fund infusion strengthens its balance sheet, helping it cut down about 100 bips in cost of funds. And this provides enough headroom for the next phase of growth. Expected to deliver a CAGR of about 18% in AUM and 28% in PAT for the next 3 years. And I'm expecting an EPS of about 70 for FY28. And with this, my price target is 1240.
1240?
Yeah.
Okay. Massive infusion, right? I mean, they'll have to figure out what to do with all that. I mean, I think no need for capital for many years.
Absolutely.
In that sense. So many deals in that space, in the financial services space that we've seen come through lately. There's a couple of minutes to go for close. It's going to be an absolutely flat close, 24,200. Any thoughts, Ambrish, on Biocon as a stock? I mean, it's not done well for a while, but there are those who are backing it saying, well, maybe the time's come.
Yeah, I think this, like the weakness we have seen now is basically due to this expected block deal. I think 5.5 is a decently large block deal. And typically such block deals happen at a discount. So possibly post that block deal again, I think we should see Biocon bouncing back from those levels, because if you look at it for the last 1.5, 2 years, again, I'm talking about this from a technical perspective, although I normally don't have technical. I mean, the stock was finding it very difficult to cross those 400 levels. Now, since it's crossed that, stayed about those levels for a while. Again, I mean, some of the products to do well in the market. I think we can see much better demand for Biocon post this hangover which is there as far as the block deal.
Yeah, on a Monday, it could be a hangover overhang. Either one of them, Ambrish. Thanks a lot, Ambrish, for joining in and giving us your take on all those stocks. Appreciate it. Well, let's focus on, winding down the markets. Then it's been a pretty flattish day. Remember, we started off with a cutoff around 200 points. We were up close to around 50 points. And now we end as flat as can be. It seems that we didn't have a trading session. The Nifty could go home absolutely flat. The mid-cap index, as the case out there, it's not moved a point. But don't be fooled by that. The breadth of the market tells you the real story. Many stocks were doing a thing of their own. Just Style was up 20%. Fino Payments Bank was up close to around 20%. Both of them locked in upper circuit. New Gen popped up in trade. That was up more than 10%. And Sonata Software as well was up close to around 10%. Another couple of names that did very, very well. Kalyan Jewellers, what a beautiful stock it's been. One of the rank underperformers. And just take a look at it. From the recent lows, rallied close to around 40%. All of this in a matter of a few trading sessions. So big move is what we saw there. Other couple of names that did do well in today's trading session include the likes of Tourism Finance. You had Pine Labs that was up. Zensar as well was up 6.5%. On the flip side, Cupid yet again looking a little bit sticky post the weekend. That was down 2.5%. Swiggy was down 2.5%. And Tata Steel as well came in for some profit taking. Another name that did pretty well from the frontline index was these tech stocks. All of them flying away. TCS up 5.5%. HCL Tech was up 5%. Tech Mahindra was up 3.5%. And Infosys as well up close to around 3%. So Tech says that we're not down and out. Maybe we're trying to make a bit of a comeback. We'll know with HCL Tech's numbers later today. On the flip side, you had Grasim as well. That was down close to around 2.5%. Nestle India came in for profit taking. That was down close to around 2% in trade. And Eternal as well, down 1.5%. From the broader markets, a few stocks that moved well. From the chemicals back, you had Sudarshan Chemicals. Stock moved on rather large volumes, so keep an eye out on that name as well. Up and about in today's trading session. Net, you'll have to say that it was an encouraging trading session from an India perspective. Given that the Asian markets ended with sharp cuts and India ends more or less flattish, there are signs that the flows are coming back and the broader market action is heartening to see. That's the one that keeps your portfolio feeling quite good. Well, we'll wrap up on this edition of Closing Bell. You don't go anywhere. The team of Markets Forward comes up next.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
The market staged a smart late recovery to end near the flat line. Buying in IT stocks helped the Nifty hold above the 24,200 mark, while the broader market remained balanced, with the advance decline ratio finishing at nearly 1:1.
Shares of D-Mart owner Avenue Supermart slips after Q1 sales growth slows. Cautious management commentary weighs on sentiment, though several analysts remain positive on the stock.
Just Dial posts steady revenue growth in the first quarter, driving earnings higher. However, rising employee costs and other operating expenses weigh on margins. The company has also announced the appointment of a new CEO and CFO. The stock extends its gains. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Sonal Bhutra and with me is my colleague Ekta Batra. Ekta, good afternoon. What a recovery, right? And we were talking about this during the halftime report show as well. And ended just at the flat line. We were up 53 points at a point in time. So we've come up from those levels, but no one's complaining about the recovery for sure. It's IT all the way. We do have HCL Tech. We're awaiting those numbers, but most gains coming in from the IT recovery. Banks did well too, and mid-caps advanced decline ratio absolutely flat.
Hi Sonal, yes absolutely. It was a very good recovery that we saw for all of the indices. So at one point in time, the Nifty was testing 24,000. We managed to recover to levels of around 24,200 plus. We also saw that recovery take place with regards to the broader markets, where the mid-cap index did see that recovery come through along with the bank Nifty. So it started with the Nifty, but the other indices followed through as well. And IT all the way in terms of stocks that we saw in terms of recovery today. So that let's see what HCL Tech reports, but nonetheless, that seemed to be the key pivot in terms of sentiment for today's trading session. But let's tell you what we have in store for you today. We'll start with the top movers and shakers of the day with Hormuz, and Q1 earnings start trickling in. So we'll decode the numbers of key companies along with stock-specific action on the street. Last but not least, we delve into the key market events to watch out for in tomorrow's trading session. But on to our first segment of the day. Hormuz joins in from the big wall with the top movers and shakers of the day. Hormuz, over to you.
You mentioned IT all the way, and you take a look at the list of gainers. Well, you'll not find any more than the IT names, be it large cap IT or be it mid cap IT. Look at TCS with 5.5% higher, leading the charge among the large cap IT names. HCL Tech as well, 5% higher on that one ahead of its results. Tech Mahindra up 3.5%, Infosys adding another 3% as well. So strong gains on the large cap IT front. Mid cap IT was no different as well. The rally that was sparked off on Friday, that continued to move higher as well. Newgen Software ending 14%, Sonata Software with a double-digit gain. Zensar was up double digits on Friday, added another 6%, as did Tata Technologies, which is also reporting results later this week. Speaking of results, earnings reactions today belong to one stock, and that's Just Dial. 20% higher on the upper circuit after the stock, after reporting its results, showing growth, which was the strongest in almost 2 years. Avenue Supermarts, of course, the negative reaction was priced in when the business updates came, but a close below the mark of 4,000 in today's session. Bajaj Consumer numbers were decent, but the stock sold off slightly. Of course, that's also on the back of the fact that it's up around 150% on a year-to-date basis. The capital goods names, the profit booking continues in a lot of these names. Siemens Energy India is the stock that I was referring to, ending another 3% lower today. GE Vernova, Thermax also seeing cuts of over 3% each. The newsmakers today, another day of gains for Kalyan Jewelers, up on almost 50% now in the last 4 sessions. Shyam Metallics as well, been hearing from the management all day long here on CNBC TV 18. 63 Moons and Prime Focus as well on the back of their respective positive news flows, ending with gains of 5 to 8%. And lastly, stocks at 52-week highs. Paytm gets added to the list today, and 3.5% higher here. JSW Infra is at a 52-week high. Aegis Logistics is at a 52-week high, and Wellspun Living is the stock that I wanted to mention here instead of Thermax, and that too had a good day, ending at a 52-week high as well. Back to you guys.
Okay, thank you, Hormuz, for joining us with that list. So a very stock-specific market today. So let's get to one of that, which did see a big reaction to earnings. Just Dial hit upper circuit up. The company put up a good show in the first quarter. They also announced a major reshuffle at the top. Winnie is joining us with more details on this one. Winnie.
Hi, afternoon. So yes, Just Dial, the stock is locked in upper circuit. Numbers, obviously, that also came in, plus the reject, that's the important one. Just a quick take in terms of numbers. Revenue is largely in line with what the street was expecting. 10% YOY growth is what the company is seeing, which is the best that the company has managed to post in almost 2 years in terms of a growth. Collection has seen an improvement as well. Margins on the flip side have been a bit muted. We're seeing a contraction coming in terms of margins because of higher other expenses as well as employee costs, which the company has seen. Now let's move on and talk about the reject and the leadership's change. Founder VSS Money, who ran Just Dial for roughly 33 years, founded in 1996, stepping down as the MD and CEO from 31st of July. Now, VSS Money, obviously in 2021, Reliance had taken the majority share and stake in Just Dial, and since then also, that's almost 5 years since that deal happened, that VSS Money was at the helm of Just Dial. 33 years is what he spent. Now, who's going to be taking away? We have Dinkar, who will be coming in this position as well. So he, in terms of a profile for Dinkar, he was previously heading Flipkart Wholesale, Flipkart B2B side of the business as well, and he's got a big background and a long-term story with Bain and Company as well, where he spent almost a decade with Bain and Co. Now he's got overall 2 decades of experience specifically in digital commerce, retail and technology side. So that is something that could support even Just Dial's growth. Apart from that, you're seeing the finance side. That's the CFO of the company. We have a new CFO that's going to be coming in as well, Dinesh Taluja, who was up till now with Reliance Retail, will be taking charge as the CFO of the company. He's taken charge as the CFO of the company, and he's also got more than 20 years of experience across investment banking, management consulting, private equity and corporate leadership as well. So both the new leaders have experience in this. Plus, Just Dial has spoken about the B2B push as well. Do not forget the cash on the books for this June quarter stands at around 6,000 crores approximately, which is more than the market cap of the company currently at around 5,600 crores. Plus, analysts are also highlighting both Kotak as well as Citi that this is an important factor now from here on, how these new leaders actually take forward the story for Just Dial, whether there will be buybacks, dividends, or the focus that comes in on the B2B push will be key to watch out for. But currently, they believe the stock is at a good valuation as well.
Okay, all right. Lot of developments on Just Dial. Thanks, Vinny, for that. To take this discussion forward, we have with us Ambrish Baliga, who is an independent market expert, and Jay Thakkar from ICICI Securities joining in. Ambrish as well as Jay, thank you very much for taking the time out. Ambrish, I'm going to start with you. We just discussed Just Dial. You heard Vinny talk about the management change as well as the earnings. Do you like the stock?
Yeah, I mean, if you see purely from a valuation perspective, it was, quite cheap. I mean, if you see the last 3-4 years, I mean, it was extremely cheap. But the issue was it had gone more or less dormant. I mean, there was nothing really happening. But now, with the sort of rejig which is happening and VSS Money stepping down and new blood coming in, I think that we should see decent action going ahead. And especially when it's backed by a promoter investor with deep pockets, I think we should see a lot of fireworks happening in Just Dial over the next couple of years. So I think we should see much better levels than where it is today, despite the sort of a move which we're seeing.
Oh, okay. So better levels despite the move that we've seen today. Jay, do the charts support that as well? Fundamentally, yes, looking good. But what are the charts suggesting for Just Dial?
Good afternoon to you, Sonal and Ekta. Well, I would say that yes, we have seen that upper circuit in today's trading session, but then since it was 20% up, so from here on the support would be at somewhere around 630. I mean, till it sustain those levels, this management change, whatever has happened, will definitely continue to provide support at the lower levels. I mean, those levels, until unless are not broken, I think you may see the stock recovering further as well. I mean, it has seen a substantial loss. I mean, the kind of fall which we have already seen in this stock. So 630 till those levels are held. I think going forward, the medium term trend should be positive.
Okay, all right. So that's on Just Dial. Bajaj Consumer, that one has reported a strong set of numbers. Revenue is up nearly 25% this quarter. EBITDA has more than doubled in the first quarter. But what should we look for going forward? Manglam has the report card. Manglam, over to you.
But it's a good performance that has come in for Bajaj Consumer. Fourth straight quarter of stellar performance on the revenue, EBITDA and net profit front. But the stock is at the lower end of today's trading range, and here's the reason why. If you look at the reported numbers, no problems. 25% jump in the revenue, gross margins expanded, EBITDA has doubled from what, 41 crores to 83 crores. We've seen the net profit near doubling from 38 crores to 71 crores as well. And the growth has been led by Almond Drops, which is the mainstay of the company, where it has seen 30% growth plus. ADHO underlying volume growth has been early teens as well. Everything that the company's been doing, low unit packs, the likes of sachets, etc., have grown well ahead of the brand average, and general trade too has delivered high 20s growth for the company. But now the reason why the stock is sold off from the top is because this marks the fourth straight quarter of strong performance. And remember, Q1 FY26 was the last one which had a low base. So from here on, whether these numbers sustain or not is the big question, because ever since Naveen Pandey took over as the leader starting in second quarter FY26, thereafter every subsequent quarter has seen strong growth. The stock has rallied about 190%. So whether this outperformance continues on a high base or not, or is the best in terms of quarterly performance behind the company, is something that the street is a little contentious about. When we started last year, the stock was trading, sub 15 times. Now it's trading at 35 times. So a lot of the good performance ahead also is priced in. So tracking this outperformance after the base gets a little bigger is something that the street is a little circumspect about, which is why after this stellar rally, we are seeing the stock underperform after a good set of numbers.
Mangalam, thank you so much for explaining those moves in Bajaj Consumer. But let's move on from Fino Payments to Puravankara. There were a slew of business updates for the June quarter. Ananya is joining us with a wrap. Ananya.
Well, yes, a host of business updates are there. So let me first start with Fino Payments Bank. They reported strong momentum. If you see, with new accounts opening up 31% year on year, deposits growing 11%, and Fino Pay active users rising 38%. Now, the key highlight was loan referral disbursals, which jumped 3.5 times to 240 crore. Although transaction throughput fell 35% due to the shift from cash to UPI. Now, coming to 63 Moons Technologies, subsidiary 63 SATS Cybertech ended Q1 with an order book of 288 crore, already achieving 82% of its FY27 target. Now, its AI cyber security platform, if you see, crossed 53 crore in orders, while the super app surpassed 20 lakh downloads. Now, coming to Puravankara, they reported pre-sales growth of 28% and collections growing growth of 40%. Now, it also added a 5,200 crore GDV pipeline and retained its FY27 sales guidance of 11,200 crores. So, yeah, these are the stocks that are buzzing today in trade following the business update.
Okay, all right, Ananya, thanks very much for that. In fact, speaking to CNBC TV 18, the management of Puravankara guided for pre-sales of 11,200 crore rupees this fiscal. It plans to launch around 25 projects in phases covering 14.77 million square feet with a gross development value of 24,000 crores. The company also said it is targeting a 60-40 mix between land development and joint venture projects as well.
Okay, all right, let's get in our guests in the conversation as well. Amrish and Jay are back with us. Amrish, anything that stood out for you in results? One from Bajaj Consumer, be it Avenue Supermarts, and also in the quarterly updates, some of the realty companies, and most of them actually have reported good numbers, barring Keystone Realtors, which did see a decline this time. Realty Index has made a big comeback. Anything in particular that you like from there?
See, Bajaj Consumer, anyway, I think the earnings were extremely good, no doubt. But then we should remember that the stock also moved up in the last 6 months from the levels of 250 to the current levels. So because of which I think we are seeing that correction. Possibly the correction can deepen a bit more from here, but that I think would be a buying opportunity from a longer-term perspective. When it's talking about DMart, I think the issue also is the same store growth, which is quite specific. And at the same time, I think they have lost out on that e-commerce where they've not made any mark. So DMart, again, I would be a bit cautious at this point of time. And I don't see too much of a growth as far as the stock price is concerned from the current levels. If we're talking of realty, the sort of numbers which they're declaring are extremely good, no doubt. And it's just not enough to launch projects. I think 24,000 crores of projects is huge. But at the same time, the sales and execution has to keep pace. And that's what we are seeing. So Purvakar is one stock where I will be positive on as far as the real estate space is concerned.
Okay, all right. Jay, any of the stocks that you like from the real estate space? Anything technically sound?
Absolutely. I mean, see, overall, as you rightly mentioned, there has been a good comeback by the realty space. I mean, if you see the data of March, it was one of the hard-hit sector along with the Nifty IT, wherein it was down by more than 20%, almost as far as I recollect, it was down by 24 to 25%, and there were huge shorts built up as well. But then, since April, slowly and gradually, as we have seen the recovery in Nifty realty, there has been clear short covering, and rather now the data is suggesting there has been good long build-up as well. So the comeback has been good with volumes and with the good recovery in the open interest as well. The stocks which I like, Ekta, are Oberoi Realty from the medium-term perspective. Although in the short term we know the kind of it has some complications with respect to the High Court, but then overall structurally I think that Oberoi Realty is good. Second recommendation would be on, or second stock which I like is the Phoenix Mills from this current space, and third which I like is Shriram Properties. That's from the cash segment. And as a disclaimer, we have a fundamental buy recommendation on Shriram Properties as well. So overall, Phoenix and Shriram Properties. I mean, these are these three stocks which I think may going forward provide good returns.
Take that point. Gentlemen, hold on. There has been a buzz of Happiest Minds being on the block in the past, but now we're here. A deal may actually be in the offing. Vivek Iyer is joining us with all the details on this one. Vivek.
Well, that's right. Well, a very interesting update or very interesting development is what we understand is happening as we speak as far as Happiest Minds is concerned. What we understand from our sources that the promoter, Ashok Soota, who combined owns over 44% stake in the company, a 32% stake that he holds directly, and another 11% to a trust. We understand that this particular stake is on the block, and we understand that there are quite a few players that are interested in acquiring this controlling stake as far as Happiest Mind is concerned. What we understand from our sources is that ITC Infotech and other private equity players are leading the race. In fact, we understand that ITC Infotech is one of the leading players as far as this particular controlling stake acquisition is concerned. Now remember, in case this particular deal does go through, the acquiring entity will have to go ahead and make an open offer, given the fact that the stake that they will acquire will be above 25%. So along with the stake that they will purchase from Ashok Soota, in case the deal does fructify, they will have to make an open offer for another 26% stake as far as Happiest Mind is concerned. We understand that talks are happening, and we understand that any deal that could fructify will happen at a premium to the current market price. Well, we've reached out to both Happiest Minds as well as ITC Infotech. Happiest Mind, both of them haven't responded to our queries at the time of doing this particular development, but in case they do give us an update, we will update our viewers on the same. But the important development is that we understand Ashok Soota's stake in Happiest Mind is on the block, and we understand ITC Infotech, among other players, are leading the race or are in the race to go ahead and acquire this particular stake at a premium.
Okay, all right. Interesting story there, Vivek. Thanks very much for that. Ambrish, any thoughts on Happiest Minds?
Well, I think it should be a good acquisition for ITC Infotech because the group anyway is sitting on a huge amount of cash. And after the sort of a crack you've seen in the IT space, even if they give another, say, 10-15% premium to the current market level, I think the total outgo for ITC Infotech would be about 500 crores or so, which I think is a decent pick as far as ownership of Happiest Mind is concerned. So if it happens with the ITC Infotech, yes, I would be bullish on ITC as such.
Okay, Jay, anything on the stock? What are the charts suggesting?
But that's sort of come down to the IPO price, and if you see, since until 2021, it had a very good rally. Post IPO, and since then it has been correcting. In fact, it was really underperforming the overall IT sector since 2021, I would say, wherein it peaked out or topped out well ahead of the IT sector. In fact, IT sector topped out recently. 6 to 8 months ago, if you see, or maybe a year ago, since we have seen this AI trade happening or taking the lead. But Happiest Mind has come down to those levels of IPO, and now it's reversing from those levels from all-time lows, I can say. And if such thing is happening, I think should definitely be positive going forward for the stock, hopefully. And from here on, it might also catch up the bounce back or the underperformance which it has seen. So relatively, I would say it would be better from these levels, at least after having fallen down for almost like 5 years now.
Okay, all right. Jay, as well as Ambrish, we're going to leave it on that note. Thanks very much for joining in and taking us through all of your calls on stocks today. Well, on that note, we're going to take a short break, but we'll get you all of the top corporate voices along with key market events to watch out for on the other side. Stay tuned.
Not the president.
Welcome back. Well, you're still tuned into Markets Forward. Let's get in some corporate voices of the day. Shyam Metalics has set a target of gaining 10% share of the domestic stainless steel market. Speaking exclusively to CNBC TV 18, the company's management said railways and defense could contribute nearly 10% of its revenue mix over the next 4 to 5 years. It expects around 90% of its future expansion to be organic, while also evaluating a demerger of its various businesses over the next 5 years.
The management of Radico Khaitan told CNBC TV 18 that the vodka category is at an inflection point in India. Management noted while vodka accounts for over 28% of the global spirits market, its share in India stands at just 6%, leaving significant room for growth. The company remains confident of expanding margins by 125 basis points in FY27 despite raw material inflation.
L&T Finance is targeting over 20% annual loan growth and expects credit costs to come down by 2%. Speaking to CNBC TV 18, the company's management said AI-driven bot calls has already helped save over 70 crore rupees and is expected to lower operating costs by 30 to 40 basis points in the next 3 to 4 years.
And before we wrap on the show, we bring you some key market events to watch out for. Ananya is joining us now with key events to focus for tomorrow.
Yes, so globally, if you look at the spotlight will be on the US June core CPI inflation data, which will be closely watched for cues on the Federal Reserve's interest rate outlook. Now, markets will monitor speeches from several Federal Reserve's officials along with Fed Chair Kevin Warsh, testimony before the House Financial Services Committee. Now, in addition, investors will also track Q2 earnings from major US banks, including JP Morgan Chase, Bank of America, Goldman Sachs, Wells Fargo, and Citigroup. Now, in the UK, Bank of England Governor Andrew Bailey's speech and Finance Minister Rachel Reeves' Mansion House address will also be in focus. Now, back home, the key domestic triggers include the June WPI inflation data and the first ever trial release of the Index of Services Production, marking a major step in tracking India's services sector. Now, on the primary market front, the 11,700 crore SBI funds management IPO will be open for subscription. Now, on the corporate earnings front, the key results to watch will be L&T Technology Services, Tata Elxsi, Jindal Saw, and Anand Rathi Share and Stock Brokers. So these will be the news that investors will watch out for tomorrow.
Okay, all right, Ananya, thanks very much for that. On that note, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The US and Iran exchange fire once again as tensions escalate. Washington claims it hit dozens of targets to prevent Iran from attacking ships transiting the Strait of Hormuz. Iran claims it hit US facilities in Bahrain, Kuwait, Oman, Jordan. Tehran says all diplomatic efforts rendered futile after the latest strikes. Crude oil prices rise as US and Iran fight for the control of Hormuz. Shipping traffic remains slow at the strait, with 49 vessels crossing the waterway in the last 24 hours. Higher crude oil imports in June take India's trade deficit to an 8-month high of more than $30 billion, but exports in the first 3 months of this fiscal up 16%, despite the closure of Hormuz and tariff threats. The Sensex and Nifty recover from sharp losses in early trade, end marginally in the green. The rupee weakens by nearly 30 paise against the dollar, remains above the 95 mark. India's top private banks shed more than 7,700 jobs in FY26 as spending on automation and AI increases. HDFC Bank reports the first headcount drop in 9 years. Axis Bank sees a 3% decline in workforce. Kotak Mahindra Bank's headcount declines despite record hiring. The Met Department forecasts subdued rains across large parts of India over the next 7 days as monsoon advance stalls. Lack of rainfall casts a shadow on Kharif sowing. Total area under the Kharif crops down 21%. Pulses, oil seeds and cotton the worst impacted. Apple files a lawsuit against OpenAI accusing the company of stealing its trade secret. Claims 2 former Apple employees took confidential information before joining OpenAI to build competing hardware devices. ITC Infotech emerges as the leading contender to acquire Happiest Minds. Sources say promoter Ashok Soota is in advanced talks to sell stake. Select private equity players are also in the race. Days after stopping WhatsApp from rolling out its new username feature, the government plans to standardize rules across messaging platforms. Sources say the centre is studying responses from WhatsApp, Signal and Telegram. WhatsApp plans to hide phone numbers and show only usernames, sparked fears of a potential rise in impersonation scams. Well, let's go straight to the macro story of the day. The consumer price inflation has just been released for the month of June. Lata standing by to decode the inflation print for us. Lata.
At first glance, it's not a very comfortable number. Our poll had thrown up a number of 4.24%, which would still have been a kind of an 18-month high. For the first time in 18 months that the inflation is crossing 4%, but it's come way above the poll at 4.38%, which is almost a 4.4%. Not per se a difficult number. After all, 4% is the median mandate given to the MPC. But it's just the jump from 3.93 in the previous month, that is May, to 4.4% is, almost a half a percentage point jump, a little short, that's all. It was always anticipated that there will be a jump of about 30-40 basis points because of the rise in petrol prices, petrol and diesel. It was passed on in the month of June, and therefore you can find that transport inflation is the one that has risen the most to 4.3% versus the May reading of 1.75. But that was always expected. What was perhaps a little higher than expected is food inflation. Food inflation has come in, food and beverages as they call it, has come in at 5.05% versus 4.55 in May. Some rise in cereals prices was noted, oil seeds and edible oils prices. All this is in anticipation of the El Nino. The Rabi harvest itself has been very good. The stocks are excellent. But in anticipation, there are always traders bidding up the price. And that's exactly what we have seen in the higher food prices. So that really is the worry, that the inflation is a little higher than what the street was prepared for. And therefore, the expectation may get advanced. Almost everyone was expecting, or not almost everyone, a large number of people on the street were expecting a rate hike sometime in the second half. Now markets will start worrying whether the Reserve Bank will want to advance it. They may not, because this is a supply-related, this is a food-related, an El Nino-related inflation, and a war-related inflation. It's not demand-driven. So the Reserve Bank may still look through this inflation number, but nevertheless, it's a tad higher than the market's comfort zone.
All right, Lata, that's the inflation number, 4.38% for the month of June. But let's also talk about the trade data, Lata. Higher oil exports taking the deficit to an 8-month high. Export growth, though, showing resilience, and despite all the uncertainty around Hormuz as well as tariffs.
Yeah, I would agree with you. My sense is that there is more good news in these numbers than there is difficult news. First, of course, the difficult news, the trade deficit only for goods is an 8-month high of $30 billion. We normally average around 20 billion. So 30 billion is a shocker. And the reason is as expected. Imports are higher by about 30%. And that is because crude oil exports, the bill was up by 40%. You must expect that to be priced in the import bill because crude prices went up from $70 or thereabouts in February to over $100 for a goodish bit in the month of May. And at some point in time, the inventories ran down and we had to import expensive crude. But the important point is it's not just that. Electronics imports have also been high. Gold imports, I would worry about that. It could be gold ETF and things like that. So those are things that we should be worried a little more. Crude is a geopolitical matter and could come down. Also, services exports have not risen very much. The positive news is the goods exports. I mean, it's outstanding that at a time when we have tariff worries lingering, we have logistical problems, supply chain issues because of the shutting of the Strait of Hormuz and, a loss of export markets, destinations in the entire Middle East area, which we always like to think is an important destination for Indian exports. In spite of all these vicissitudes, you have a 15% jump in June alone. And actually, this is a trend keeping in pace with what we have seen in April, May and June. 3 months of 16% average import rise in goods exports. We always thought that our burgeoning trump card is services exports, but lo and behold, it is goods exports that have done well and have been doing well for the past 3 months. The positives are actually, you would think it's petroleum products because if crude price goes up, petroleum downstream products go up. And that's what we were exporting, petrol and diesel. Yes, that has helped. It's up 35%. But engineering goods exports are up 18% April to June. Electronics goods exports are up by 22.5% from April to June. And exports, new destinations have come up. Among the highest export growth destinations are China, Singapore, UK and Africa. Africa absolutely out of the blue emerging as an important export destination. I would consider June trade data as very positive.
All right, Lata, we'll take that. Thanks very much indeed for joining us and staying with trade. An interim trade agreement between India and the US remains in limbo with the July 24 deadline to levy additional tariffs fast approaching. Commerce Minister Piyush Goyal has refuted a Reuters report which claimed that India had rejected a quick trade agreement in the recent talks and is holding out, quote-unquote, for a better deal. Responding on social media, Minister Goyal said this news is completely false, baseless and misleading. He also added that both sides are committed to an agreement that is balanced and the teams on both sides remain fully engaged in achieving this objective. So that is the Commerce Minister's reaction to the Reuters report. The big global story, US and Iran have exchanged a fresh wave of strikes overnight as the standoff in the Strait of Hormuz refuses to die down. Let's bring you up to speed on the latest developments. The US claimed that its strikes were aimed at degrading Iran's ability to attack commercial ships in Hormuz. US forces also said that several Iranian air defense systems, coastal radar sites and small boats were targeted. They also reiterated that Iran does not control the crucial waterway. In response, Iranian airstrikes targeted US bases in Kuwait, Bahrain and Jordan. The Kuwait army said that it is confronting hostile aerial targets within its airspace. An oil drilling platform in Kuwaiti waters was also targeted. Bahrain also issued several alerts in the last few hours as Iranian drone and missile attacks continued. Jordan's military says it intercepted 4 missiles from Iran. Tehran maintains it was not the first to violate the ceasefire agreement. Foreign Ministry spokesperson has said that Iranian government will pursue justice for the assassination of its former supreme leader Ali Khamenei using all legal and international tools. So the impact of all of this in the oil market? Well, Brent crude prices surged closer to the $80 mark. According to data from ship tracker Marine Traffic, 48 vessels have transited through the Strait of Hormuz in the last 24 hours. Market firm Kepler expects the West Asia conflict to go on for longer. Speaking to CNBC TV 18, Kepler's head of Middle East said producers in the region are accelerating their pipeline to projects lowering dependence on the waterway. Take a look.
It is a recovery. However, it's still far from pre-war levels where we used to have something like 20 million barrels of flows. We cannot assume the fact that the Strait is going to return to what it was pre-war. And this is something that they want to, make it very, very clear. And what I can see from contingency planning here in the Gulf countries, they're also not counting on the Strait being what it was pre-war. And that's why, there's been an acceleration with a number of pipeline projects in the Gulf that are going to take maybe a few years, but that just goes to show you that that no one is counting on normal flows anytime soon.
Well, let's talk about the market action. The Wall Street staging a smart recovery, ending the session flat with the Nifty closing above 24,200. IT stocks led the recovery with 5 out of the top 6 Nifty gainers coming from the sector. The broader markets closed largely in line with the benchmarks, while realty and metal stocks were the biggest laggards. So Nifty Realty closing just about in negative territory, but a flat but positive close for our markets recovering from their intraday lows. In the money markets, the rupee weakened sharply against the dollar. The currency remains above the 95 mark, weakening by nearly 30 paise in trade today, and 10-year bonds also gaining in trade. The yields softened by more than 0.5%, so that's the money market snapshot for you. Now, TCS has undertaken its biggest major leadership reshuffle in 3 years and announced 5 new business units as it pivots towards an AI-led growth. The company has set up dedicated units for the US West Coast, ServiceNow, travel and transport, energy and utilities, and global autonomous businesses. It's also restructured its North American banking business and announced senior leadership changes across cybersecurity, life science, communications, media, and information services. Well, let's move now from tech to banking. India's top 3 private banks have shed more than 7,700 jobs in FY26 amidst a surge in spending on automation and artificial intelligence. Now, while India's largest private sector lender, HDFC Bank, reported its first headcount drop in 9 years, Axis Bank has seen a 3% decline in its workforce. Kotak Mahindra Bank's headcount declined despite record hiring. Ritu joins us now with more. Ritu, winds of AI blowing in the banking landscape as well.
Well, yes, HDFC Bank, Axis Bank, Kotak Mahindra Bank, they've all reported fewer employees at the end of FY26 than they had a year ago. And together, these 3 banks have reduced their workforce by more than 7,700 employees, resulting in a decline of nearly 2% across their combined workforce. Now, if this had happened a few years ago, you'd probably just assume that business had slowed down, but that is not at all what's happened. These banks are still growing, they're opening branches, expanding loan books, adding customers, and even continuing to hire, and yet the headcount has fallen. Let's start with HDFC Bank, which has reported its first ever decline in headcount in nearly a decade, and it saw its workforce fall by 3,343 employees in FY26. Now, if you look at the comments in the annual report, the bank says technology is helping it automate the routine work and allowing it to move employees from the back-end jobs into more customer-facing roles. Second, Kotak Mahindra Bank, they saw the workforce also decline by 1,269 employees to about 74,000 in FY26. And here's the most interesting part. In the same year, Kotak Bank hired more than 28,840 odd people, which is up 42% from the previous year, and yet the overall net number is lower. Now, Kotak says hiring is increasingly now getting focused on AI, cloud, and engineering talent, while process simplification and technology adoption is changing its workforce requirements. Finally, Axis Bank reporting a second consecutive year of lower headcount. The workforce has fallen by 3,116 employees, or 3% of its workforce in FY26, which is a much sharper fall than we saw in FY25. Yet, the bank added nearly 400 branches in the year. It hired more than 31,000 employees. So you get the gist. The reason is not identical across these banks, but the clear link is technology adoption, routine processes becoming more automated, and hiring becoming more specialized. So gone are the days where banks would expand their workforce as business expanded. Technology is now changing how work gets done, and that's beginning to show up in the hiring numbers.
All right, Ritu, many thanks for joining us. Shares of Kalyan Jewellers extended their remarkable rally for a 4th consecutive session, rising up 10%. The stock has rallied 47% during this period after the company's stronger than expected first quarter business update, bullish brokerage commentary, and optimism over the jewelry retailer's long-term growth prospects. That has all positively impacted the stock. Internet provider Just Dial shares posting its biggest single-day rise in 2 years today. This after a robust first quarter performance that saw healthy growth in revenue and EBITDA despite a rise in employee costs. The company also announced changes in its senior management. Just Dial's founder, MD and CEO BSS Money will step down and he will be replaced by Dinkar Ayalavarappu, and that's going to be a big change for the company. BSS Money responsible for setting up Just Dial over 2 decades ago. The Supreme Court has upheld market regulator SEBI's findings and penalties imposed on Kotak Asset Management. Its managing director Nilesh Shah and 5 other senior officials. SEBI had held the company and its officials violated mutual fund regulations by not taking investment decisions based solely on the interests of unit holders. The Supreme Court called this a warning message for asset managers and levied a cost of 30 lakh rupees on Kotak AMC and 20 lakhs on Kotak Trustee. Earlier, SEBI had imposed a penalty of 1.6 crore rupees on the company and its officials. The Delhi High Court has ordered SpiceJet to pay 50 crore rupees to former promoter Kalanithy Maran's Cal Airways within the next 45 days. The court had previously directed SpiceJet to pay 144 crore rupees to Maran's. SpiceJet proposed the payment of 50 crore rupees in 45 days and the remaining 94 crore rupees in another 45 days. But the High Court held that SpiceJet needs to show bona fides and it will hear the matter again after the initial payment of 50 crore rupees is made in the next 45 days. SpiceJet had ordered a property in Gurugram for the dues, which was rejected. We will head into a break, but up next, Apple files a lawsuit against OpenAI accusing the company of stealing its trade secrets. That and more when we return.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Welcome back. The Met Department has forecast subdued rains across large parts of India over the next 7 days. The nationwide rain deficit currently stands at 18%. The Met has, however, predicted heavy rainfall in eastern and northeast India over the next 3 days. Meanwhile, the lack of rain has cast a shadow on the Kharif crop, with total area sown down 21% compared to last year. Santya is here with more. Santya.
The prolonged monsoon break is now beginning to impact both agriculture and the country's water security. While the IMD expects the monsoon to regain momentum after 28th July, it has cautioned that the rainfall may not be sufficient to bridge the current 18% seasonal rainfall deficit. With no low-pressure systems active at present and July rainfall expected to remain below 94% of the long-period average, the weak monsoon is already reflecting in Kharif sowing and reservoir storage. According to the Department of Agriculture and Farmers Welfare, Kharif crop crops have been sown over 350.85 lakh hectares so far this season, compared with 442.81 lakh hectares during the same period last year, leaving a 20.77% shortfall in the overall sown area. The decline is visible across most major crops, with rice sowing down 13.08%, pulses lower by 21.79%, coarse cereals by 16.35%, oilseeds by 39.32%, and cotton by 22.95%. Maharashtra too is witnessing the impact, with sowing excluding sugarcane completed on just 65.12 lakh hectares, or 45% of the average area, compared with 107.15 lakh hectares or 74% of the average area during the same period last year. The subdued monsoon is also deepening water storage concerns. Across the country, live water storage as of 9 July stood at 32.38% of capacity. While this was marginally above the normal level of 30.09%, it remained significantly lower than last year's 50.98%.
All right, many thanks, Anthea, for joining us. The Maharashtra government has removed the names of over 92 lakh women from its Ladki Behan Yojana, its direct cash transfer scheme. Now, this represents a reduction of approximately 38% compared to the initial count of 2.4 crores. So essentially, 4 out of every 10 women who had been enrolled under the scheme have been dropped after a state-wise verification drive. A majority of those removed had failed to complete their mandatory electronic eKYC. Vietnam has launched an investigation into the speedboat tragedy that claimed the lives of 15 Indian tourists. The boat carrying 36 people reportedly capsized after being hit by a sudden wave. Among the deceased, 10 were from Tamil Nadu, 3 from Andhra and 2 from Kerala. Survivors alleged that crew negligence, delayed rescue efforts and slow emergency medical care worsened the tragedy. At least 27 people are dead after a fire tore through a crowded bar in Bangkok. The blaze broke out late last night. Officials said they were investigating whether emergency exits have been obstructed. The initial assessment was that an electrical short circuit in an air conditioner located in the ceiling had caused the fire. Officials say 22 of the 63 people who were hospitalized are in critical condition. Apple has sued OpenAI and former employees alleging misappropriation of its trade secrets to benefit the ChatGPT owners' foray into consumer hardware. The lawsuit marks a sharp escalation in tensions between the two tech giants, who were until recently partners in AI. Rachna joins us now with the details. Rachna, take us through what exactly has transpired between Apple and OpenAI.
That's right. Apple has sued OpenAI, accusing the ChatGPT maker of stealing its trade secrets to build its first AI hardware device. The suit, filed Friday in a California federal court and first reported by Bloomberg, names OpenAI, its hardware arm IO Products, and 2 former Apple employees. Apple alleges a coordinated effort, in its words, at entry level to obtain confidential information about unreleased products. The 2 men named are Tang Tan, a former Apple vice president who now runs OpenAI's hardware division, and Shang Liu, a former Apple engineer. Now, the filing alleges Liu kept an Apple laptop and downloaded dozens of confidential files after joining OpenAI in January this year. Tan, it alleges that he asked candidates still working at Apple to bring actual parts to job interviews for show and tell sessions. Now, Apple says over 400 of its former employees now work at OpenAI, and that it wrote to the company in February but never got a response. OpenAI denies it. A spokesperson said the company has no interest in other companies' trade secrets. Now, the context here is important because these two are not just company A and B. They were partners. In 2024, ChatGPT was integrated into the iPhone. Since then, ties have cooled down. But now Apple's revamped Siri, that was announced in this year's WWDC and is expected to come later this year, runs on Google's Gemini. And as per Bloomberg, OpenAI was itself weighing legal action against Apple earlier this year. But Apple has now clearly struck first. The timing is also striking because just days ago, Palantir CEO Alex Karp told CNBC that Frontier AI Labs take their customers' intellectual property data. That was an argument, but this is now a federal complaint. So we will have to see where it goes. But from being OpenAI's biggest partner, the stakes are very real here because OpenAI's first hardware device is expected later this year. It is already fighting the New York Times over copyright, and a growing legal pile is not what you want heading into an expected IPO.
All right, Rachna, many thanks for joining us. The Chicago Mercantile Exchange, which is the world's largest exchange for commodities, will now see gold futures trading 24/7. Manisha is here with more on the move and its significance. What does this mean for us, Manisha, in India?
Well, while we have been talking about longer days of trade and settlement, what we are talking about right now about is 24/7 round-the-clock trading also on weekends, and that's exactly what CME is planning to do. From 24th of July, they are looking to launch 1 ounce gold futures contract, which will be trading around the clock. From what we understand at this point in time, that there has been a successful self-certification with the CFTC on 2nd of July. CFTC is the regulator for commodity futures in the US markets there. And it also is understood that there would be an official migration of CME Globex market segment on 19th of July. And then on 24th of July, you will see around the clock gold futures trading there. Important to remember that this is only for one contract, which is a 1 ounce gold contract. The benchmark 100 ounce gold contract is still shut on weekends, and it continues to trade the way other commodities would be doing. But this is the first time that an exchange of such huge repute and volumes is going ahead for a contract trading like that. Interesting to note also is that CME earlier was planning around the contract, not just for gold, but for crude as well. Crude is something that the CFTC at this point in time has stayed. There have been some concerns from the oil companies, also oil traders as well, on perhaps thinning liquidity conditions over the weekend, off period, etc. So crude as of now has been stayed, but gold is something that perhaps the exchange would go ahead with. The reason you have an exchange coming out for a weekend trading also is because even as the exchanges were shutting on Friday evening, but a lot of blockchain and decentralized exchanges and a crypto in sense of tokenization in gold and crude, etc., have been trading quite strongly. So when you look at the first quarter of 2026, well, $90 billion in sense of gold already have been done in sense of volumes. Hyperliquid has done something like 100 billion in sense of volumes because they are open 24/7 and on weekends as well. So if there's a geopolitical uncertainty that happens over the weekend, you can trade in this immediately at that. Now, it does raise another question that if these contracts are trading during the weekend as well, what is the kind of Monday catch-up that countries like India and various other countries would be, or exchanges would be doing? That is something that we'll have to watch out for.
All right, Manisha, many thanks for joining us. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. We're back in a minute with more.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central,
providing sharp market intelligence for wealth creation with a commitment to doing it right.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
welcome to this special discussion on the state of the economy. The June inflation numbers are out, and what we find is that the consumer price index rose to an 18-month high of 4.38% in the month of June. The spike is driven by both food prices and fuel prices. Fuel we knew because the price was increased by the government by about 5 to 7 rupees. But food was always a guess. We saw cereal prices rising, we saw edible oil prices rising, and now it is in the inflation number. The important psychological mark is 4% because that's the MPC's given mandate. And now after an 18-month lapse, the inflation number, CPI inflation, has breached the 4% mark and gone on to 4.38. That's one negative. The other negative is that the best estimates or the highest estimates on the street were 4.3. So 4.38 is higher than the highest estimates, certainly higher than the CNBC TV 18 average in the poll, which was 4.24%. So it's about, 14, 15 basis points higher than what the street was expecting. Joining us to discuss the implications of these and other data that was announced, which is the all-important June trade data, I have with me a bunch of top-notch economists. Madhavi Arora, the chief economist at MK Global Financial Services, Sameer Narang, head of economics research group at ICICI Bank, Amit Tripathi, president and CIO fixed income investments at Nippon India Mutual Fund, and Srijit Balasubramaniam, senior economist at Bandhan AMC. Gentlemen and Madhavi, thank you very much indeed for your time. Let me start with the lady. Madhavi, how big a surprise is this higher number? Does it change your inflation trajectory for the rest of the year?
Hi, Latha. So, to a large extent, this inflation surprise is largely driven by food inflation. We were expecting the uptick to come from food, but clearly the delta of 20 bips versus our expectation of close to 4.2% is driven purely by food inflation. We were expecting fuel to go up on account of the pump price increase. But at this point in time, I think the rise in food inflation is purely reflecting one, the higher vegetable prices, and some modest pickup in cereal prices also, largely has been the case. My understanding is that the core inflation or the core inflation or core export inflation that generally people look at is also probably would have seen a mild increase of around 0.3, 0.4%. We still don't have a full breakup because the numbers are coming with a lag. But more broadly, I think apart from the food side, we weren't much of really surprised as such. But definitely it is 20 bits higher than our expectation at this point in time. But broadly, I'm not looking at this changing the inflation trajectory dramatically per se, because the recent data that we are seeing is also showing an uptick in mandi prices. But I think it's still manageable. It's not something which is very threatening for me to change my forecast.
Okay, Sameer, what's your sense? The RBI is sitting with, I think, 5.1 average for the current year, right? Because of this number, do you see that changing? There were some people who were expecting that it may not go to 5.1 when, in June we were lulled into the confidence that crude is at $70. At the moment now, it is difficult to accept that premise. So what is your inflation average for the year, and does your trajectory change because of this number coming higher than expected?
So interesting, Lata. Here, RBI's own average for Q1 is 4.2%. And the number would have come, I think, closer to 4% after this print.
3.93, I calculated that. And I was going to ask that as the next question, really, that it is still undershooting RBI. Go ahead, please.
Yes. So to that extent, the forward trajectory that we have prepared also shows an undershoot of around about 30-40 basis points. Q3, the undershoot, in our opinion, will be even higher. RBI is at 5.9%. We are 50-60 basis points lower than that as of now, given the current trajectory that we have. So overall, our view is the number settles around 4.8%. We were earlier at 5%. So we've brought that number lower by 20 basis points. A mix of factors. Largely, it's the international energy prices, fertilizer prices, commodity prices, all have come off. Though they have gone up, but they are still far lower than what they were at the peak. So our opinion is that the number comes closer to 4.8%. So within that, food is going to be significantly higher this year because of a low base and an El Nino. But RBI is emphasizing more on core X gold, which we believe this month would be around 2.5%. And that goes above 4%, in our opinion, only in Q4 of FY27.
Yeah, I believe it's 4.1 core, including gold. Obviously, you're saying excluding precious metals, it would be 2.5. Amit, I wanted to ask you, how should the market hasn't reacted at all. It is still working when the inflation number came and the 10-year stood pat at 6.73%. But will the market factor in anything different from the Reserve Bank in August because of the higher than expected inflation number?
So, Lata, as mentioned, I think the only monitorable in this data seems to be core. We have to see through in the next 1 to 2 months as to whether this momentum or this higher uptick that we are seeing in core continues. Unless that is the case, I don't think the market would be worried too much at this point in time. The market has larger macro worries, including the flow worries, to grapple with. And I don't think the RBI would be doing anything in August, given whatever we have been hearing from them of late.
Okay, fair point. That's clearly how the market has responded at this point in time. And as Samir also pointed out, even with this 18 bips or whatever, 10 to 20 bips higher than expected June inflation, it is still below the quarterly forecast of the Reserve Bank, which stood at 4.2%. Srijit, therefore to you, what are you expecting in terms of Reserve Bank action even in the second half? Is there a scope that they will have to raise rates?
Yes, as far as the inflation print is concerned, we don't think this changes anything. What our view has been that probably we don't see any rate hikes in August, but we could see at max around 50 basis points of rate hikes, but definitely not before October. Given where our second half inflation forecasts are, both headline and core X gold, as we discussed, we believe the second half inflation could therefore average closer to 5.5%, while core X gold could be closer to 4% or slightly above. That is what we roughly believe at this point in time. While the external account-related measures play out and the inflows happen, we therefore expect the RBI from a pure growth inflation second half perspective to go ahead with, again, it's not a very emphatic view at this point in time, but at max probably 50 basis points of rate hikes, likely starting up.
Okay, fair point. I just want a word with our viewers before I continue with the conversation. We are all talking this jargon of core X gold. The core inflation is a non-food, non-fuel inflation number, which the Reserve Bank is now giving more importance because they have started discussing or even disclosing their core inflation for the full year. So they're going to give it more importance, food and fuel being more supply driven, food dependent on monsoon, fuel dependent on geopolitics, and therefore core would be the inherent inflation of the economy. Core X gold becomes important because gold gets counted in core inflation in India, and there was this unusual jump in gold prices in the past since October of last year. Very important to remember, October of last year, 2025, is when gold prices spurted from less than $4,000 to above $4,000, and by this February reached $5,200, and that pushed up the core to 4% plus. The analyst expectation is that RBI has declared this, that they will look at core inflation minus gold and minus precious metals, and that would come to about 2.5% as of today, which does not merit the MPC to move at all. But we must remember that after October, the math changes because the year ago gold inflation goes very high, and gold will become a minus impact on core. So if you're going to look at core inflation minus gold, at the moment it looks very good at 2.5. But as you come to October, November, December, it will look higher because gold will actually push up the non-gold inflation number. RBI is looking at 5.9 and thereabouts, which perhaps is not shared widely. So very quickly, all of you, just give me your inflation number for the full year. Madhvi, where are you standing?
Tata, we are still sticking with the 5%, a tad lower than the Reserve Bank. So we'll see how things evolve. But as of now, as I said, I think we should be able to close the year close to 5.1.
And you have any rate hike expectation?
I was never in the rate hike camp. So I think there's so many evolving parts. The market has become a joke. Everybody's just changing their rates forecast every now and then. I think on a very serious basis, I think the Reserve Bank would take it on a case-on-case point, because there is so much fluidity in the market at this point in time that I think it would be really foolish for any central bank in the world to actually take a call on things. But I understand inflation is looking a tad higher in second half, but I think the problem for the Reserve Bank would be more about financial stability than focusing on pure rate hike, which I don't think is, I am looking at this point in time.
No, actually, you have plenty of company if you are saying there is no rate hike, and you have plenty of company if you say there are 2 rate hikes. I think the market is equally divided. But Samir, where are you?
So our inflation number for the year is 4.8%.
Yeah, but where is the RBI? Okay, I mean, your RBI expectations.
RBI rate hike, we expect a prolonged pause. And the core X goal that you were also talking about, which they are emphasizing, actually goes around 4% and slightly higher than that only in Q4. So that is the most opportune time by when you can expect some action from RBI. And Lata, we believe that also gives time for the underlying recovery. We are going to see nominal GDP growth crossing 10% this year after 8.9% last year. So, overall, it fits into the overall narrative of giving time for growth and recovery to pick up. So that is why a prolonged pause is what we feel is likely to happen. And once the core ex gold inflation nudges above 4%, that is when the room opens up. Whether it does it or not, or the MPC, it all depends on what the outlook and global narrative is then.
Absolutely. Global narrative. Thank you for giving me the next question. Amit, that precisely is the point. The Reserve Bank has made it clear, it has walked the talk when it said that they will be guided as to their rate policy only by inflation. And if exchange rate deserves help, it will be given in a different fashion, which it did by opening the floodgates for FCNR deposits. But by the time we come to October or December, it is quite possible that Kevin Warsh announces, the Fed announces a rate hike. What is your expectation, therefore, from the Reserve Bank?
Lata, I guess directly, indirectly, I just borrow a few points made earlier. I think directly, indirectly, the RBI will be targeting nominal growth this year.
Okay.
And if they are very comfortable of the nominal growth reaching close to 11%, exceeding 11%, I think that is when their inclination towards rate hikes would be much higher. As of now, we are penciling in around 50 basis points with the assumption that we are going to a nominal number of around 11%. By the time we are in Q3, Q4, I think the RBI will be more comfortable reaching there, and that is when we will likely see that 50 basis point of rate hike.
Okay. What is your breakup when you say nominal at 11%? What's real and what's the inflation? Amit?
I don't want to second guess that.
Okay.
I think nominal is much easier to measure than the breakup to do. So I would say the nominal number.
Okay. Srijit, what is your nominal GDP number and the breakup?
So you're probably looking at somewhere around 12% plus for nominal this year. It's purely because of inflation.
Yeah.
Given that the WPI also